And we're back. Wednesday, June 5th. What is it? Is it June 5th? 4th. All day, Paul. What's going on?
How are you, my friend?
Pretty good. You saved me about 30 minutes ago.
Yeah.
Because I don't have TJ's phone number. I don't have any of the guys here's phone number either. I don't think I have Tom Sosnoff's phone number, and I wouldn't have texted him anyways.
Wouldn't suggest that.
Hey, Tom, founder of the company, can you come down and get me in the rain? Because I left my key card upstairs. But thank you for saving me this morning. It's rainy. It's dreary. You're the best, man.
Thanks, man.
What's going on?
I mean, yesterday was kind of a tease, right? It was about 85, and then today we're 65 and rainy.
We're still in the, I guess it's still technically spring, right? Like
technically, yes.
Although June feels like summer, June, July, August always feels like those are going to be the summer months, but it's later than we expect. And yeah, we got 85 yesterday. It was balmy.
Yeah, it was steamy.
I took the dog for a walk, and it was I was sweating more than I had hoped.
Mm-hmm.
But now, yeah, I would have taken it over. Now it's like that awkward, like it's 75. It's hot, but it's raining. Very strange, but you know, we take the good with the bad. What's been going on in Forex land? A lot going on for us. This is your first time coming on the show post integration. Mm-hmm. What have you been seeing with the TastyFX TastyTrade stuff?
I mean, it's really like we found a really nice way to integrate basically our web platform into TastyTrade. It's really all the same components, and that's what I love about it because it's the same for me. It's not a whole lot of different. Obviously, for a lot of the TastyTrade clients, it's going to be something new, but it's pretty easy to use. I think I showed you the little, if you click on the ask or bid button yesterday, it jumps you right into the chart, which personally I love.
We are finding little, of course, when you do stuff like this,
yeah,
the first reaction almost always is like, especially when you're dealing with traders, is like, well, here's what you did wrong. Yeah. And it's like, and so we got like a good amount of feedback of like, well, that thing, and especially when you're dealing with the likes of industry giants like Tom and Scott and JJ and these people, it's like, it's not only like, oh, like that could be better or this. It's like, that's the dumbest thing I've ever seen, and no one will ever use that. And so we went through a lot of those trials to get where we are today, which is, I believe Tom on the show yesterday said that this is a real sleek platform. And that's as good as it's going to get from that guy. Not one to pat you on the back. But we are starting to find little things that the developers did super well, but maybe we just missed or failed to mention, which is now you can look at the watch list via the main watch list tab here, and you can click on these different markets and it changes, you know, the market that is presenting at top, and then you go to trade and you can, you know, you've got the chart and you've got all the trading functionality. Great. Also, you can be in the watch list, and I believe this is the main place that the platform takes you when you enter. You could pop out the side watch list here, and you can, and my screen is super zoomed in for the show, so it looks kind of funky, so don't worry about that so much, because you'll be able to see both the bid and the offer. And you can be here with any other tab and bounce around that way. Might be easier so that you don't have to keep going back and forth between the watch list, change it to a different market, and then click trade. And it's an extra click. It doesn't seem like a lot, but the stuff's fast and people want to be moving fast. And you pointed out yesterday that if you're here at the watch list, you're looking at, you know, net changes, swap bid and offers. Maybe you're saying to yourself, oh man, the dollar Swiss franc, it's not down a lot, but it's down a little bit. And, you know, the overnight funding for tonight is a little bit juiced because the weekend funding. So you're getting 3.5 points. Oh, I want to look at this right now. Bang, I can click on the bid or offer, and it brings me straight there.
Yeah.
So you lose a click, one click of efficiency there.
Yeah. And we love efficiency, don't we?
Well, there's also another thing that I think has started to interest people a little bit is just like TastyFX provides Forex, right? Like it's the single product, it's the main service that they provide, and with that, you're going to have a pretty clean and direct experience. Like there's only so many things to click on. I mean, there's 80 plus markets, but like when you're in the trade tab here, you're really talking about just different ways that you can trade this pair, as opposed to when you have a bunch of derivatives, options, futures, everything else. There's a lot of different, especially with options. It's like, is it one leg? Is it two legs? What are the, different parameters for you entering into this position? Here's all the Greeks, everything else. I think people have liked the clean look of not only this, but something that you were a big part of, which is, and of course, don't forget to read the disclaimer if you are going into the quick submit part of the trading ticket here. But a lot of people, I think, liking this quick ticket as well.
Yeah, this is one of my favorite things, especially when we get some fast-moving markets. I know we've got some central bank decisions. We got non-farm payrolls on Friday. Obviously, when you click that kind of disclaimer, the safety is off, and you're in
one-click mode.
You're in one-click mode, so beware of that. But when markets are moving quick, it's very fun to use. When I say fun to use, it's very efficient to use.
There you go.
You can get in and out of positions quickly, which is the whole point of the quick ticket.
Well, and especially the risk management part of this as well. You have the close all shorts or close all longs button, and in the positions tab as well, you have the one-click close, which I know is a little bit different. Having been around from pre-TastyWorks, TastyTrade platform and brokerage, it's always been click on the position that I want to close from my positions tab, click, close, and then it populates the ticket. Yep. And so these are all things that can produce efficiency and maybe even some enjoyment, but also should definitely be aware of if you're in the quick ticket or you're using the one-click close. These are all, one-click processes here. It's not necessarily a scenario of like, I'm going to click this and then I'm going to click this other thing. And it's because a lot of these Forex markets can move around very quickly. And you might say, well, Frank, I know I've been studying volatility for years. Great. Me too, friend. And of course, the Swiss franc versus the US dollar is going to be less volatile than Apple, Amazon, Tesla stock most years. But when you're talking about the leverage afforded, that's when you're talking about some real speed here. So a lot of one-click functionality, a lot of clean functionality for the platform.
Of course. Yeah, and the Swiss franc actually has been more volatile recently. It hasn't been the normal kind of boring pair that we're used to. It's now got some juice in it, I would say.
Yeah.
Some definite volatility. I mean, we've been down to almost 80, up to 84, jumping around every different day. It kind of changes.
It's always been an under the radar, and this is maybe I like it because it's like the inner hipster in me of like, everyone wants to talk euro, everyone wants to talk yen, even a little Aussie and CAD. People don't want to talk Swiss franc. But you're exactly right, and we've gotten in this mode before, as recently as I would say right here, fall, end of summer, fall of 2024, and also back here, end of 23 and start of 24. You'll remember that was the big U.S. dollar sell-off going into the end of the year, and then huge U.S. dollar rally in the start of 24, a little bit more than a year ago. But if I zoom in and then go over to when we traded around 84, and you saw some really big moves back and forth. I mean, look at like here, this day, unchanged on September 6th of last year. But you can see they traded down below 84 cents and then rallied it all the way back up. And from there, took this market back up to 85 cents within a week of that. A similar thing here on the 18th. where they try to take it down below 84 cents, unable to actually close as higher on that day. And we're seeing some similar price action here where you might say, well, Frank and Paul, the market hasn't gone anywhere. It hasn't gone from, 82 cents to 78 or 86 or anything like that. But here at this price extreme, which is right around 10-year lows in this market, you're seeing some big back and forth moves as we're kind of teetering on, like, is the carry trade unraveling for this dollar, or is this the low and this dollar is going to see another bounce like it has historically off of some of these lows? And we're still very much in that mix.
Yeah, definitely. I mean, I think every central bank, maybe not every, but most central banks are cutting interest rates right now, but the U.S. is not. I think we're not supposed to get our first cut until maybe July is from what I'm seeing on
What the heck? We'll take a look.
Let's take a look. I was looking at this morning, and I wish I just remembered off the top of my head, but yeah, I think
what the internet's for.
That is very true. I think we're July.
Yeah,
July or September, I think we're getting it.
Not expected here in June. Not expected here in July.
Yeah.
Although, I mean, this is a sneaky 23% here, so something to be aware of. September is where you get, but I mean, it's still only 70% chance of lower rates by September. And then by the end of the year here, if we go out, still about a 32% chance that there's only no or one cut. But you start to see the focus of the curve here by the end of the year around 2 cuts, which has been, excuse me, the distribution so far this year, Paul. But we haven't been getting those cuts. And we've seen this story before where it was, I think, 2 years ago, where it's like, we're going to get 6 cuts in January. And then it's like June, and it's like, we haven't gotten any yet. And so when is this going to happen? And so the time keeps passing by. And yeah, if we have an FOMC meeting here, what is it, next week or the week after, and they don't cut, which is, 99% chance here. And then we go through July and they don't cut. I mean, we only have 3 meetings left. Of course, they could always emergency cut, but it's looking very different if I bounce over to my TastyFX platform. Then Bank of Canada, they're not expected to cut in about 2 hours, but already at 275. We have an ECB, I believe they are expected to cut. They're down at 215. And it's funny, I was on the show yesterday, Paul, and this will lead us into our segment here, because it has all of this information and more, and how it affects the carry trade. But the Swiss are already down to 25 bips. I was on the show yesterday, and I was like, I think they're around like 1% or so. No, 25 bips for the Swiss.
Yeah, they've always had interesting monetary policy. I think we did a segment on the Swiss probably a couple of years ago. And they've had some interesting monetary policy over the last few years. And maybe one day we'll do a deep dive into that, but yeah.
Yeah, because it's not just like, oh, they're Japan, like they're, really weakening, trying to weaken their currency. We just showed you Swiss franc is actually near highs for the last 10 years against the U.S. dollar. We should do a deep dive on that because they do some other interesting stuff. When they were hiking, when everybody was hiking rates, they only got up to like 3%-ish because they were using some other central bank activity to kind of calm that inflation spike. But anyways, let's get to our main segment for today, Paul. How do you swap rates in your Forex carry trading strategy? I couldn't imagine a better person to have here explaining this stuff. He's explained it to me several times, and I know so many people, new entrants into the Forex community. One of the big things, Paul, is always why, if I'm long or short this Forex pair, why did I see a little credit or debit in my account last night? Or why is your platform telling me about the swap bid and swap offer? I only know about the prices bid and offer, and that just tells me where I can buy and sell. What does this thing mean? And I figure we start with the prime example of the TastyFX platform here. How do swap rates work? Let's have you take us through it.
Sure. So very loosely, it's basically interest rate differential between the two currencies and the currency pair that you're trading. Your swap bid is if you're going to be short overnight, and your swap ask is going to be if you're long overnight. When I say overnight, when overnight starts is that if you hold a position through 5 p.m. Eastern time, 4 p.m. Central. So that's the key. It does include our overnight admin fees in this. It's baked into the swap bid and swap ask that you see on the platform.
What is that admin fee? Because that's a sneaky thing that people might be like, oh, well, you know, I have been to a casino or two in my time, and that VIG can be pretty heavy, makes it really hard. But what is the admin fee at TastyFX?
Yeah, it's 0.5% per annum.
Okay.
So if you take 0.5%, I think we have it on our website somewhere where you can where it breaks out the math fully for you. But you basically take 0.5% of the 4 p.m. Central mid price of the currency pair. It works out to basically like a tenth of a pip, I think, if I do the math off the top of my head. But it's very small.
0.5% per year. And so, like, if I'm looking at I just want to hold this for one night, you're talking about 1/365 times that 0.5%. Or if there's an interest rate differential between the U.S. and Swiss National Bank of 4%, if you were going to hold it for a whole year, that difference would be like 3.5%. Okay, gotcha. And you can see here with some of them, like pound, I believe the U.S. has, we're at like 4.35%. We're in that 4.25% to 4.5%. And I believe the UK is solidly 4.25. And so that's one of those scenarios where it's actually long or short. It's a small overnight debit to your account. But obviously you look at the dollar yen or even euro dollar at this point, and the U.S. having higher rates is leading to positive carry in the U.S. direction for these pairs, right?
Yep, absolutely. And that's what you see across the board. And kind of how you can tell that. If you look at, Euro USD kind of on our PowerPoint slide here, the swap bid, meaning you're short Euro USD, you're long dollars, you're short euros. That is where you get the positive carry. Obviously, around the flip side of things, you're going to actually pay to hold that position overnight because the dollar has a higher interest rate than the euro.
Awesome. Let's take a look at an example a little bit closer, because this is one that's been interesting to a lot of people really for the last 3 years. At this point, it's more than 3 years, because Japan's interest rates have been near zero for, I believe, more than a decade at this point, although they are now up to positive 50 basis points. They were negative for a stretch there. The U.S. still having rates north of 4%, and Japan still having rates south of 1%. Still a positive carry in that U.S. dollar direction. When you're talking about, I took this yesterday, and you're talking about a little over a point of positive carry on an average day around right now. It's June 4th. This can be a little bit of an edge in the direction of where you might want to trade. It doesn't by no means guarantee profits, because as we have down here, there is significant price action risk. You can look at, this is the price action for the last few months, and just since April, you've got a high to low range of 1,000 points. And so from April until now, if you were clipping 1.5 every night for 60 days, 1.5 times 60, but you were on the wrong side of that 1,000-point move, it's not a successful strategy in that scenario there. So you definitely have to keep in mind that you are long this U.S. dollar. You have a position in the underlying market, similar to people who trade options and are like, oh, I can see that, like, selling a put in the S&P 500, I get a positive theta, you know, and so like every day that passes, I get this indicative, this theoretical value of maybe $1 or $2. But if the S&P is down 5%, that put is going to be trading against you if you're short it. Similar type scenario here, but maybe give us a little bit of context for what carry traders are looking for now that I've painted, obviously, the price action risk with a dollar yen, because that edge that I'm talking about, it's like the fact that a market is theoretically 50-50 on both sides. So what have you seen in your experience of people maybe holding positions like this for a short amount of time, medium, long amount of time? What are carry traders trying to do?
Yeah, so real theory-wise, it works the best when the market either doesn't move, it pretty much stays range bound, or it moves in your favor. So for dollar yen's sake, if we look before this year, maybe even before not last year, so would be a good example. So where dollar yen was basically just going up. It was going from left to right. I think we went from 22 to 24. We went from about, I think, 114 to 160 almost.
Crazy move.
Yeah. So that works. I mean, so the market's working in your favor, and you're getting paid to hold it overnight. So that's like your dream scenario as a carry trader. Now, the thing to keep in mind with carry trades is that when they unwind, and we've seen the yen carry trade unwind or try to unwind a couple times, things can get pretty ugly.
Yeah.
So you have to be mindful of that. Obviously, you still have to manage your risk. It's still a position. You still have a directional trade on in the market. 100%. So it's not like you're just there to collect the overnight. But I've seen people do it in euro for a long time. I've seen people do it in dollar yen for a long time. But you have to have the dynamics for it to work. It's not a foolproof strategy. There's no such thing as a free lunch for sure.
Yeah, like I say, if you had gotten long at 150 and you're taking a point every night, but then the market's against you, it's now trading 145, it's 500 points against you. And so to your point, there's a lot of people who maybe will look at it more long term and say, I think this dollar yen market is going to trade between 140 and 145, and so I'm long at, let's just split the difference, 142 half, and I'll take 250 points of risk to the downside because I'm going to hold this position for longer than a year and get my 250 points. Or, to your point, of course, we have no clue where the market is going, and it can always, if it's going in one direction, it can always get more painful. Contrarian traders might look at a market like this dollar Swiss franc and say, okay, I'm getting around a point every night in this overnight funding. U.S. rates are 4%, Swiss rates are near 0%, and the U.S. dollar, this kind of rarely happens, but it is a little bit of is it an unwind trade? It's a little bit of, obviously, the U.S. risk around trade wars type of scenario as well, where you have the U.S. dollar at historic lows and the carry trade positive in that U.S. dollar direction, which contrarians might look at as being very interesting, of like, oh, I'm now long this market at the lows, I'm getting the positive carry. And to the flip side, trend followers might have looked at, that U.S. dollar yen rally a couple of years ago where it goes from 120 to 140 and be like, oh, I'm going to buy this on the rise to, 145, 150. And also I have that carry in my, working in my direction. Or to your point, again, I just think that this is a low volatile pair. I don't think it's going anywhere, and I'm just going to get that carry in my direction. Again, using the options analogy, Paul, Apple just fell 10%, and I'm a contrarian. I want to be long Apple, but what I'll do is I'll sell a put to get that theta in my direction. Or Tesla just ripped 20%. I want to be short Tesla. I'll sell a call to get that theta in my direction. Same thing with those trend followers. Oh, this market just ripped 20%. I'll sell a put now, positive theta, positive delta, and vice versa. Or again, I'll sell both sides of it. I don't think Apple or Tesla or any of these markets are going anywhere. Does that make sense?
Yeah, absolutely. And you can also get exotic with them. You could look at some different pairs. You want to look at some, have some real flavor. I think I'm looking at a couple of these right now. Aussie yen looks interesting. It's whatever you're kind of interested in.
Doesn't have to be dollar.
Swiss franc. Yeah, it doesn't have to be dollar. It can be some of these other pairs that have some more interesting, different interest rate differential dynamics. So, but this Swiss franc one's interesting. I mean, we're we're really testing lows that we haven't seen in a long time, and you're getting paid to hold that to be long.
Very interesting. Here is the interest rate landscape, and this is where we'll go out because this is really where the swap rates come from, right? And you can almost always look at those swap rates and look at the interest rates and understand, not necessarily, I don't even understand really the calculation. You understand the calculation. I don't understand the calculation fully. But this is where you get like, oh, that's why the dollar yen carry trade is so positive in the dollar direction, or even to your point, the pound yen or Aussie Swiss franc, whatever, because it's really just these interest rate differentials.
Yeah, absolutely. And I wouldn't tell people to go home and just do the math on the interest rates we have on the slides, and then
doesn't matter.
It doesn't matter. The Tom Next rates are actually it's a tradable rate that you can trade with basically a liquidity provider, but there is a underlying Tom Next market that goes on that decides what it costs to borrow a currency overnight, and that's effectively what you see in the Tom Next rates on the platform.
There's math behind it. You can take a look at it. It's the same as options. Like, of course, if you want to read 3 books about the option Greeks, have at it. If you want to read about Tom Next rate, it seems wild, but I'm positive there are at least 3 books on Amazon on Tom Next rates that you could find. I wouldn't necessarily recommend it, but there you have it. That's the swap rates and carry trading strategy. Thanks so much, Paul, for joining us on the show here. Love to have you on Wednesdays for more of the heady Forex action. But with that, we'll send it to Tom, Tony, and Bonetta coming up next.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got TastyTrade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then TastyTrade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on TastyTrade. Genius loves company.
Market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust
knuckleheads, and happy Wednesday to you both.
Hello.
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 How is everybody
Hello.
today?
We've already had too much interaction this morning.
You adore me.
I think we've already.
You guys were doing a little dance together or something.
Yeah, we've already had
doing?
We've had way too much bonding already this morning.
Well, we kind of match, and that's iconic. And so we made a TikTok, and I haven't posted
You're
it yet.
wearing like
but
something. No, we don't match.
Yes, we do. It's green. I have olive green in my leopard print. You have an olive green hoodie on. It's complement. We match.
And you know what that means? That means I love you.
No, like people look at this screenshot right here. We match. We go together.
You do.
Yeah.
You do.
You're welcome.
You do.
I elevate your style game.
My style game is on point.
Can I tell you, watching yesterday's show was like the most brutal experience I've had in a while. For some reason, you, Bat, Scott, I don't know what was going on. I don't know what was in the boomer insure in the office yesterday.
I don't remember.
But you guys you need someone like under the age of 35 just always in the room with you because you guys.
What were we talking about?
So 2 things. One, Bat didn't know what the crying game was.
Yeah, that was bad.
And he was like trying to ask Grok in the middle of the show, and you were trying to like have a gotcha.
I thought everybody.
I thought everyone knew too. So Bat, the way Bat that you would know the crying game is that it was the satirical.
It was that one night when you thought.
No.
Okay.
No, listen.
The way you would know it is.
No. The way that you would know it. No, listen.
I went down there and I got a handful.
Yeah.
The way that you would know it is that it's the satirical reference in Ace Ventura. And it's why like Ace Ventura is like a little problematic like in a 2025 context. But the whole like they start playing the song and like Einhorn is Finkel, Finkel is Einhorn, like and then Ace is chewing all the bubble gum and then Dan Marino was like, I want some gum and he's like, mind your own business, Dan. Like anyway, but the whole satire of that was based on the crying game. So But you do have a point. You should, but
we didn't know that. But now we do. But people sent me the.
I like
the
my
last
example
scene,
better. Because one night it was late, he was drunk, he took a shot, it didn't quite work out.
We're not going to do that. We're not going to do that. And then the other thing is that your inability to accept that 2 women could be named Ina. I know it broke your brain that there could maybe be more than one woman named Ina.
It wasn't about 2 women being named Ina. It was about 2 women that both specialize in making breakfast, both named Ina, both that have cooked.
Ina doesn't specialize in breakfast. Ina had a catering company in the Hampton. Like she does everything. You cannot pin Ina into just one pigeonhole.
Okay, well,
Ina is an entertainment icon.
I've always thought it was the same Ina.
Okay, well.
I'm sorry, but
they don't even look alike.
I don't know what they look like. All I know is the woman yelled at me once.
I'm just saying it was brutal, and I wish I could have helped you, but there's a delay. So when I'm watching the show, like it's on my laptop, I'm in the office, but there's a delay, and so it was.
You couldn't right here. You knew there was 2 different Inas.
Yeah, I knew Ina Pinkney off the top. Like I knew it because I know everything. So.
She'd been around Chicago for like forever.
Right. Yeah, and the lore of Ina, like if you ever read her books or watched her shows, like she's always, like Scott said, she's always been East Coast. Anyway.
Okay, I'm sorry. Ina's. I thought it was the same Ina.
It was just.
Me too.
It was brutal. But I love that Ina, Chicago Ina, got mad at you for using your phone.
It's a stupid rule. No,
it's her rule.
It's a stupid rule.
You are a proprietor. You can set your own rules. That was her rule. You don't like
That's
it?
what I hate about the Green Mill.
Okay.
Same thing. No talking, no phones. Who has a bar with?
Because you're there to hear musicians.
Who has a bar with no talking?
The Green Mill?
I mean, have you ever heard of something so ridiculous? So it's just so incredibly over the top. It's okay. We have a bar, but no cell phones and no talking.
Well, like
some entertainers or comedians or some shows, they'll give you the thing. It's called I think it's called like a wonder pouch. You have to put your phone in there. It's basically like a Faraday cage for your, like, you can't use your phone.
Those days are over. That was like a long time ago. Now you go.
It was
to a
not
concert.
a long time ago.
Now you go to a concert. Every single person's got a phone. Listen, I don't care what. It's the most ridiculous thing. We're talking about bar. It's a literal bar.
Why are you so angry? You
Because
don't
I don't
even
like,
go to bars.
I don't like the
He
idea.
does seem angry, doesn't he?
You go into a bar, you can't talk. Like, I've been to that place, and they're like, "Excuse me, sir, you can't talk." I'm like, "What?"
You are so crotchety.
I'm not crotchety. Who the hell goes into a bar and you can't talk?
I think John is queuing up a video for us if we want to.
What?
If we want to play it here. I've lost all control of everything.
You want to know something? Little known fact?
I can't stop this. Yeah, what's up?
What's this video? Oh, this is your Ace Ventura.
That's it. That's it. Einhorn is Finkel. Finkel is Einhorn. Einhorn is a man.
Oh my God.
God! Einhorn is a man.
I wish he'd shown the crying game scene better.
We cannot show that at 7 a.m.
Don't worry, I had plenty of customers send it to me.
Oh, you got it sent to you yesterday?
All right, John. But anyway, that's
So here's a little
brings it
known.
all together.
Here's a
Thank
little
you,
known
John.
fact.
Yes.
That the original, when we first built Thinkorswim, the original website, we filmed it in the Green Mill.
Wow. That's cool.
I rented the Green Mill and we filmed it on their stage.
That's cool.
Because it's dark and funky.
Yeah. It's like that speakeasy Chicago prohibition kind of vibe. Yeah.
Have you ever been in there? Have you been
I have been to the Green Mill. Of course. What Chicagoan has not been to the Green Mill?
I mean, it's a pretty famous jazz bar. It's one of the most famous in the country.
Yeah. Went on the most mediocre date there. Music was good. Drink was good. Dude, not so much.
Well, you didn't have to talk to him. That's the good news.
Yeah. Facts.
Yeah.
Anyway. Tom Thibodeau, released by the Knicks after leading them the first time to the conference championship in like 25 years or whatever. Are we getting Tibbs back?
Well, we don't want Tibbs back as a coach, but I would take Tibbs back to run the front office.
Okay.
I mean, that's the rumor in Chicago. There's a lot of people here that want him to come back to take the job to run the front office in Chicago.
Interesting.
Yeah, he's well liked here, but I would rather have Billy Donovan as a coach.
Okay.
I mean, isn't he well liked everywhere? I mean, he's only taking clubs from the cellar to stardom.
Yeah, I mean, I think he's well respected. But
was it the right move by the Knicks to let him go?
Yes,
It was?
yeah.
Okay, but he got so far though.
He did, but you know, they need you gotta shake something, and you can't get rid of a player making $100 million a year.
Yeah.
So it's a lot easier to fire the coach. I mean, in sports now, really all you can do is fire coaches.
I guess so.
You can't fire players. And
James in production says it's the wrong move.
Well, James in production is wrong.
And then as your camera goes out of focus right now.
This is absolutely the right move, and I think all the New York sportscasters and fans and the general media, I think they're all supportive of this. I think it's look, they made this decision a long time ago. This was not a decision they made yesterday.
Okay.
This is a decision that they made. It sounds like they made the decision like prior.
So he literally needed to win the NBA Finals to save his job. That's a crappy situation.
That's right. I think they made this decision a long time ago. This is not a decision they made. This is a decision they were going to do unless they won the NBA Finals.
Wow.
So, I mean, Tibbs is did the same thing in Chicago. He wore him down. He wore down Joakim Noah. He wore down Derrick Rose, and same thing. We were good, but not good enough.
Yeah.
Wow.
I guess so.
Listen, he's a good coach for a turnaround, but that's it.
All right. for you, NHL hockey starts tonight. Playoffs.
We're excited.
Yeah, but Bat only watches hockey.
Can't wait.
I don't have a bet.
I went to bed early so I could stay up late tonight.
Oh, you didn't bet with me, did you?
We did not. We bet on basketball.
Not the hockey.
Okay, are you going to make an official hockey wager? Is this the wager of record?
No, we're both on the same side.
For the Panthers?
Yeah.
Oh, okay.
I bet with Scott.
Oh, you bet with Scott. Okay.
Scott doesn't have an opinion on hockey.
I don't have an opinion on hockey.
I like the Panthers in this series.
Okay. To repeat.
Because they have lethal physicality.
Because you know what? This is going to be a great series because these are the two best teams.
Yeah.
And the Panthers are just nasty. And Edmonton is very skilled.
Did you see the trailer that the league put out last night? It's great. It's just like 2.5 minutes long, so it was too long for me to show. But like, I cried. I mean, I cry at lots of things.
Oh, it's going to be good.
But it was a really good, like, it was kind of like a little mini documentary about like the how excited the Panthers are, and they showed the parade and like winning, and then it showed just like the heartbreak of Connor McDavid and Draisaitl. I don't know whatever. And then I'm like, oh, that's so sad for them.
Leon Draisaitl is really good.
But then I got sad because then they lost. But then they had to like shake hands, and then but then it was showing them like training and then going back this season, and I guess like it's like a rocky road, and I guess their goaltending is not very good. I know, it was just sad. I don't know.
Dan Marino. There's a lot of great players that have never won. But it's gonna be a great series, and I think just Panthers have better goaltending.
All right, how about for you, Bat? What do you say?
I mean, I agree with Sadnov with the whole goaltender thing. I'm a little bit torn. Yeah, I know. I'm a little, but he has a penis. He was thinking it. Okay. I'm a little torn. I mean, I'd like to see Connor McDavid, win the cup, but I think the Panthers are the stronger team, better team.
It's gonna be fun, and then tomorrow the NBA finals start, and I think that's gonna be great too.
Yeah, I'm excited for my home state. Like, no one ever talks about the state of Indiana in like a positive way.
They do because of
Caitlin Clark. Yeah, well, that's a very recent.
She literally put Indiana on the map.
On the map, yeah. But she's out. She's out because she's injured.
She's out now.
Yeah, I literally just said that.
I mean, Indiana's had its moments between Larry Bird. Larry Bird.
Those are few and far between. Yeah, and like Bob Knight.
Bobby Knight.
Yeah, of course.
Reggie Miller.
Sure. Again, that's like spread out. Like
there's been a few.
Okay, but like it's the crossroads of America.
Larry Bird left the NBA when? Sadnov, 92?
90. Well, I know, but when you talk about Indiana, Larry Bird in the late 70s at Indiana State, and then
the people you're talking to right now weren't even born yet.
Wasn't even born.
No, I know, but you got to remember he played at Indiana State. Indiana.
No,
State.
I don't remember that, but I have been to French Lick. It's a beautiful little town. Nice golf courses there. My dad and I played the Pete Dye course there.
But you got to remember
Reggie Miller left 10 years ago.
There wasn't. Indiana State is not even on the map.
No, it's literally everything's on a map. It's on a map.
Well, until Larry Bird came along,
Yeah.
But yeah, it's
Bobby Knight left it in when? When did he leave?
2002.
Okay, there you go.
Yeah. So
it's been a long time for Indiana.
It's been a long time.
Yeah, I'm not saying
2001. Yeah, 2000.
I'm not saying it hasn't been a long time.
Yeah.
Anyway, I like Indiana's team. They're fun to watch.
Well, we will see what happens. Did you see Geno's Cheesesteaks in Philadelphia rebranded itself as Saquon's for the week to celebrate Saquon being on the cover of Madden. So whether you love Geno's or hate Geno's, I don't have a dog in the cheesesteak fight, but I just thought it was a fun marketing thing.
I've been there once.
To Geno's?
I've been to both Geno's and Pat's once.
Yeah.
Once each. We stopped. We did a cheesesteak.
Cheesesteak crawl?
I wouldn't call it a crawl. I would say a cheesesteak.
We did a cheesesteak cut in line is what we did.
A cheesesteak amuse-bouche.
We tried, I think during the weekend, we tried 3 cheesesteaks, but we did the Pat's Geno's. Like put them side by side.
Right.
And then did half the Pat's, half the Geno's.
Uh-huh.
And although they're very similar, neither one Like,
yeah, but people that like, it's kind of like with Chicago pizza. Like people in Philly, like there's other spots to go to that are like more like authentic or something.
Oh no, there's a million places.
Yeah,
I'm saying, we did it. This was like, 20 years ago, maybe.
Sure.
And it was fun because we stopped because we were taking a limo back to the airport. This is before Uber.
Yeah.
So we're taking a limo back to the airport.
And you reeked of cheesesteak. You stunk of cheesesteak and onions.
We messed up the back of that limo, man. It was gross. We were passing around half-eaten cheesesteaks.
You get it whiz? With onions and the cheese whiz?
You know, I'm not a big cheese whiz fan.
I love cheese whiz.
I think if I remember correctly, you could have it with cheese whiz or provolone.
No, one does cheese whiz and the other one does like provolone or something like that.
Yeah. Yeah, I prefer the provolone. The problem I have with cheesesteaks is that they would be good with jardiniere, but
then that's a Chicago. Then it's basically an Italian beat. Like it's like.
But the hot peppers they use, I just don't like them at all.
Okay.
And I also like extra onions, and it's hard to get them to do that.
You are such a little diva.
He is a little bit of a diva. Yeah, he does have.
You were such a little diva.
The John's pork. John's pork. Is it called John's pork or is it John's Finer pork? Whatever it's called. The pork place, John's pork.
I've never been to Philly. Never had the honor. It's on my list to go to Philly.
We did the same thing at John's pork. We had the cheesesteak and the pork with broccoli rabe.
Yeah, with broccoli rabe. Yeah.
And that place was better.
Interesting.
Yeah.
Okay.
John's roast pork.
John roast pork. Yeah, roast pork. Yeah. We did the broccoli rabe and the cheesesteak there and did the 50-50 split. And I'll tell you, it's good. But like if you did the same test at Rico Benny's, it would blow it away. Blow it away.
Oh my God, you're such a homer.
I know. But Rico Benny's is a different level. It's like up here.
Yeah.
Okay.
All right. I got that.
It's literally a different level.
I mean,
it's like my mom's meatballs. My mom's meatballs were up here, but they really weren't. I mean, it's just what you used to.
No. Sorry.
Why you gotta speak ill of the dead like
Rico
that, Pat?
Rico Benny's was up here.
I'm calling it the way I see it.
Damn. R.I.P. Grandma Beanie.
I like them.
R.I.P. Grandma Beanie. I am so sorry. Anyway, Bat, what did you get up to?
Mary's meatballs were better. It's just the way it was.
Bat, what did you get up to last night?
Yeah, like I said, I went to last night was a pre-dinner, pre-everything to the big workout, which is tomorrow when I have to stay up for the hockey game. So I took it easy last night so I could be up all night for hockey.
What time is the game tonight? Is it a late one?
Oh, if you don't know, I'm not telling you.
Oh, you boomers are going to need a disco nap.
The game starts at 7, Saz.
Oh, that's...
I mean, you got home at 6:30 2 nights ago, and you said that was basically bedtime.
Yeah, 7's fine. I was hoping it wasn't at 8:30 or 9 start because in Edmonton, you know, that's Pico's time.
Sure, yeah.
Yeah.
I don't know. Wayne Gretzky.
No, all the games I think are at 7, Tom. Just for the future. I don't know if there's a Saturday game. Maybe that's different, but the weekday games are 7.
Wayne Gretzky was on a podcast. He was on the New Heights podcast with the Kelsey brothers, and he was saying back in his day, the NHL, the teams, they had to fly commercial planes, like teams in. And so he's like, when he had to fly like out of Edmonton to like Florida, like it took like forever. And he's like, and you could smoke on the plane. And he was just, it was like it was like a 9-hour flight or something like crazy.
Flights, do you?
No.
Yeah, you could smoke in the back half of the plane.
What? But you're in a sealed tube.
I know. And they had ashtrays. And it was awful. And if you got stuck in smoking, you couldn't basically breathe because there was just a layer of smoke and the smoke didn't go anywhere.
Yeah.
Oh my God, it was so bad.
I don't know. It was a good interview. Wayne is funny.
Oh, he's really funny.
He's got some great stories. Really I was tickled and delighted. You know, one of his favorite nicknames is the White Tornado. It's because he said someone in French, he had like white gloves on, and so they called him whatever it is in French, and they called him the White Tornado.
He's actually a very good athlete. I saw a video of him once doing the what's that course that they do? You know, the that game with one of those courses where they have to go through all these.
Oh, like a Tough Mudder?
No, the one where they do it and on TV. They have the
like a Ninja Warrior.
Ninja Warrior.
Okay,
course.
yes.
So I saw him doing an original Ninja Warrior course, which was much not what it is today.
Sure.
But he could get through parts of it. He was good.
That's why he's the great one. That's why it's impressive.
And he was skinny and little.
Yeah, I didn't know his number had been retired league wide. That's great. Okay, I don't follow hockey that closely.
I mean, what are you going to do?
Well, I just thought like a team, like the Bulls retired, like Michael Jordan's number isn't retired league wide.
No, but there are other numbers that are retired league wide. So that's a really good trivia question.
Yeah, I just.
I think Gretzky's is, and is Jackie Robinson's?
Oh, 44? 45? Was he? What was he?
42.
42. Okay.
I don't remember.
I should know that. Okay.
42 or 44, but I think Gretzky's and Jackie Robinson's might be the only two.
Okay.
League wide.
42. Yes, retired.
42. Yeah.
Yes.
Jackie Robinson, Wayne Gretzky, and Bill Russell.
Oh, Bill Russell. Was he number 9?
6.
Okay. See, that's fun trivia. Here we go.
I believe that's what I got. Yeah.
Fun trivia. That is good trivia.
The NFL has not retired any jerseys numbers league wide.
Yeah.
Interesting.
So you got there you go. Baseball.
Yeah, they couldn't do 23 because way too many people had 23.
No, I know. But that's why I was just like, I didn't have any context because I was like, oh, well, but I guess, Bill Russell.
Yeah.
Hey, we got a great show for you today. You're going to want to hang our jersey in the rafters. No? Okay. We got a great show for you on this wonderful Wednesday at the top of the 8 o'clock hour. Tasty Bites. These are trade ideas for smaller sized accounts. 3 key elements for small account trading. Are we bringing back our Tasty Bite series?
Yeah. A little bit.
Sadnov, if you're gonna retire my number someday, I'm a 3, Sadnov. So just retire the number 3 for me.
Why are you number 3?
Yeah. What does that mean?
That's my number. I'm a number 3.
We'll retire the acronym BAT. Okay.
Aw.
That's fair enough.
We'll hang your jacket from the rafters there.
When we were kids, we had our own Hall of Fame.
Of course you did. At the Larchmont Country Club?
No. At this kid's house in his basement, we would retire we did our own Hall of Fame.
Amazing.
And so we would retire gross articles of clothes.
Oh, gross. Nope.
A disgusting T-shirt, pair of socks, whatever it was.
No.
And everything was on the wall at the...
Great. A stiff towel.
At the
awesome.
memorial. A stiff towel, everything. Yes.
I hate it here. Hey, we got What's Your Assumption? Because it's Wednesday. It's a wonderful Wednesday. It's Assume the Position Wednesday. What's your assumption? Viewers write in with an underlying. They have a directional bias. Tom and Bat try to do as many viewer-submitted trades as possible. 9 o'clock, we got Jacob in the house. Skinny on options, math, efficient markets, and the Markov property or prophecy. It says property. The Markov property.
That's fine.
Okay. What is that? I don't understand what efficient markets and Markov properties have to do with each other.
Then you better watch the show.
I better watch the show then. All right. And then live from the trade desk, big boy Scotty asks, first of all, can I just say, I'm so excited that Scott gets to go to South Korea. I have so many Korean beauty products I need him to bring back for me. And he should get have you seen this on TikTok? He should get his Korean color analysis. Have you seen this?
No.
So they put all the colors on you, so you find if you're like a warm spring or like a cool autumn, but the Koreans have it dialed in, honey. So, and you can go to a place and they'll make a custom foundation for you. It's very exciting. I need to send Scott an email. But anyway, Scott's going to be on counting down the top trending.
Really, that would not be my number 1.
To get your color analysis, you wear the wrong color sometimes.
Your eyeshadow's not right sometimes, Sal.
Sometimes.
I agree with her.
I'm just saying, like, if you have based on the undertones in your skin, like there's colors that you can wear that can make, your features really pop. Anyway.
I don't think there's a lot you can do to save me at this point.
That's probably true. Nikki Bat, speaking of Tasty Bites, Nikki Bat's going to be in doing Johnny trades at around 9:45. He's going to bring his trade ideas to Tom and Bat. That's always great. And then, of course, 10 o'clock, Liz and Jenny live from the floor of the SIBO. The lovely ladies holding it down on the trading floor. But in the meantime, in the between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
Today's headlines.
This just in. Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's June the 4th. It's part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure. Ready for the news.
I was remiss because we're already over time, but I forgot. Also, 1 o'clock today, Truth or Skepticism, you with Dylan.
Yes.
Yes.
Oh, are you like contractually obligated to mention that? Is that what that was all about?
It's on the schedule. So, I mean, he's my boss. I don't know why I wouldn't mention his show.
Option trades today is every Tuesday and Thursday. You don't mention it every Tuesday and Thursday.
I try to, and I try to help you with trade it. Listen, men, I can't give you all of my attention and affection. You guys are so needy.
I didn't say a word.
What are you talking about with Dylan today?
Scandalous affairs.
Ooh, scandalo.
Now, Sosnoff, I mean, I know Dylan's gonna have a little bit of background on the subject, but.
Scandalo. That's at 1 o'clock here live, tastylive.com. Also on the Tasty Live YouTube channel. Mr. Bat, any earnings for tonight?
DocuSign, AVGO, Lulu, name a few.
All right. Hey, Deutsche Bank is...
You have positions in all three, by the way.
Yeah, DocuSign. Do I have one in Maybe.
Well, you figure it out. We got all day. Hey, I gotta hustle here.
Do you think I said it? Do you think I said it without looking, or did you think?
I'm trying to remember. I don't remember doing anything in DocuSign. Maybe I got filled. Yeah, I did.
That's fine. Hey, just real fast, because I'm already behind schedule. Deutsche Bank has lifted their S&P 500 year-end target amid a Wall Street upgrade wave. They raised their target to 65.50 from 61.50, citing lower tariff-related earnings drag. I don't know if you have checked in, because we're kind of at the midpoint of the year, on what your call was for like Q2. I
think I'm like 5,700 or something.
I just wasn't sure. That's all.
Yeah.
Bat, do you know what your number was maybe for Q2 starting?
I do not remember.
Okay.
I know I'm closer than Tom.
Okay.
I doubt it.
At this, I mean, it's very easy to beat Tom on these things, and I am obviously closer to Tom.
In a report on Tuesday, a group of 38 mostly wealthy nations sharply downgraded their 2025 economic growth forecast for America to 1.6% from 2.2% projected in March. The Paris-based organization cited higher tariffs, including retaliatory tariffs imposed on American exports. The OECD expects the global economy to also slow markedly to 2.9%. 50% higher tariffs on steel and aluminum kicked in today. Did you know for every one steel worker, there are like 800 more workers that rely on steel for their businesses in like a different capacity?
No, but you should send that report to Deutsche Bank. They must have missed it.
They must have missed it.
Hey, let's send this to Deutsche Bank too. DocuSign, AVGO, and Lulu have earnings tomorrow after the close, not today. So I apologize.
You literally have one job.
Nothing. Listen, what do you want? I'm on track. I'm not over.
Does anybody have earnings today?
No, not that I know of.
Oh, we see. Hey, what are you doing in treasuries? Let's talk about that, because we can talk about that.
We're long. And we need a rally. We got a rally this morning a little bit. But yesterday we had a rally in the morning. It didn't hold. So let's see if today's holds.
Okay.
We're there, 112.22, by the way.
They just rallied 18 ticks. They were down. When you started talking today, they were unchanged.
Uh-huh.
Now they're up 18 or 19. So let's see
you want me to keep talking?
Keep talking.
And the market was up also, and even the S&Ps are down 3.
Keep talking.
Well, in an interesting development yesterday, Elon Musk offered his harshest rebuke yet of President Trump's big, beautiful spending bill, and he called it a disgusting abomination. Shame on those who voted for it. You know you did wrong, he said in one of more than 10 posts on the subject Tuesday afternoon, posted to his X platform. Bat, your two daddies are fighting.
I know. This is good when people at least don't have to go in line with everybody. They can be free thinkers. I mean, that's what we built this country on. It's a good tweet.
That's how you're spinning it? Okay. What are your thoughts?
No, I mean, it's an opinion. I mean, people are allowed to have opinions. I don't agree with everything Sosnoff does. He doesn't agree with everything I do. I don't agree with everything you do.
Was there a number this morning?
Probably, but you're not. You told me not to talk about the numbers.
No, just curious. I just want to see what. I'm going to save my thoughts on this for truth or skepticism, because we have a fun topic to talk about.
Musk and other tech leaders have spoken out against the bill in recent days, but the new wave of commentary from the world's richest man was a clear escalation, and it did earn quick endorsements from a number of fiscal conservatives on Capitol Hill. So,
yeah, I mean, my reasons are much different, but it's not relevant right now.
Okay. Doing that. What is Tesla doing? Because you can't talk about Tesla. So
Tesla, I haven't looked this morning. Let me tell you right now.
That's how we got in trouble yesterday talking about this.
Tesla is unchanged.
Okay. Hey, alarm over China's stranglehold on critical rare earth minerals grew yesterday as global automakers joined their U.S. counterparts to complain that restrictions by China on exports of rare earth alloys, mixtures, and magnets could cause production delays and outages that would not have a quick solution. Because these are rare earth minerals. It's not something that you can just make in a factory or that you can just grow on a farm. China has a lot of these, and they use them for lots of things, tiny components and, automobiles and motorcycles and a bunch of other things. And I don't know how to trade this. I don't know what to do around it.
I don't know that you can trade this.
Yeah, so it's...
or if you can, I don't know how to trade it either.
It is what it is. Hey!
ADP employment came out, if that's what you're worried about, that moved even the S&P's 9 handles.
I was more concerned with the bonds. The S&Ps I don't really care about.
Gold.
That's what moved the bonds.
Gold futures backtracked a little bit yesterday. I just wanted to talk about gold.
A little bit. They're about unchanged, down a couple of dollars this morning. They've been pretty quiet the last 2 days.
Have you been trading it actively?
Yes.
And what does that look like?
It looks like I play a lot of defense in gold.
3,500 to 3,200. It's sitting at 3,375. Let's just call it mid-range for the month of May into June for a month.
You play a lot of defense when you trade gold right now.
Okay. Bat, do you have a gold position?
I do not. I'm SMRT.
Okay.
Yeah.
Hey, Wells Fargo was released from a punitive 7-year-long $1.95 trillion cap on its assets Tuesday after the U.S. Federal Reserve lifted the regulatory measure, allowing the bank to pursue unimpeded growth. Why were they in Fed Reserve jail, you ask? Well, because they were making up accounts and they're just giving them to people randomly. I don't know if you remember that. So now they've been let out of Fed jail, and they're saying it will be a significant bump for the stock in the near term and paves the way for long-term growth. Should Wells Fargo, have they done their time?
No.
That's it?
They have not done their time. As a matter of fact, when this all came out, I think the stock was somewhere closer to 30 or 40. It's 75 right now. It's been going sideways for the last calendar year. No,
they haven't paid.
8 months.
They haven't paid any.
I mean, it was 7 years.
It doesn't matter. The stock has doubled. They haven't paid any price at all.
Okay. Well, but no one in the financial space pays a price for their malfeasance.
That's another problem.
Okay. Except for Martha Stewart, but she did her time.
One problem at a time.
Hey, getting to earnings from last night, CrowdStrike shares dropped on weak revenue guidance. They called for 1.14 billion to 1.15 billion in revenue in the July quarter. Sorry, billion, yes. Trailing the average analyst estimate of 1.16 billion. The company allocated $1 billion for share buybacks. Revenue this quarter came in, revenue for Q1 came in at $1.1 billion.
Yeah, stock's down about $35.
That's a lot.
Yeah, it was down about $30 to $35, $38 most of the night. It's in that range.
What was the expected move?
34.
So it's right there.
Yeah, it was right there.
Okay.
It is right there, but you got to remember it's a was $488 stock. I mean, it's a 10% move would be considered quite large for earnings, and this is under that. So I mean, it's right at the expected move, as Tom said.
Okay.
Yeah, the expected move is 34.
What do you?
$30, $40 sounds like a lot, but you got to take into context the stock is almost $500.
What do you need to do in your CrowdStrike position then today?
We're short front month puts and calls, which should be okay. Should be fine. And then we're short back month strangles in July, which I'm guessing they're going to be okay, but I don't know.
Who's to say?
Yeah, front month will probably be better than back month if I had to guess.
Yeah, I agree. Agreed.
Okay. Hey, NVIDIA has now passed Microsoft as the most valuable company. NVIDIA shares rose 2.9% yesterday, and those gains put NVIDIA above Microsoft for the #1 spot in U.S. stock market capitalization. Congratulations, NVIDIA.
Yay.
Yay! What are you doing to NVIDIA and Microsoft?
NVIDIA's up $1, and Microsoft looks to be unchanged, maybe down 50 cents at the second.
Yeah, we don't have much in either one.
Okay.
They're both at the high end of their range.
I was a little more bullish in NVIDIA the last couple of days than I was in Microsoft.
Yeah.
So we definitely did not get hurt. I think Microsoft is getting close to being a short here. NVIDIA, I have no position.
Broadcom stock is on pace for a record high ahead of earnings later this week. Broadcom was on pace to set another all-time high yesterday, and the chip maker could see their shares climb even further. They're going to report their earnings after the market closes tomorrow. What are you doing in Broadcom at these new highs?
We're a tiny bit short.
Okay.
Yeah, up $1 at those numbers you were just talking about.
Do you have a Broadcom position, Bat?
No, I don't. I'd be ranked at 32 in there for earnings coming out. Seems to be a little bit low. The expected move over the next 2 days, about $17 or so. It seems like it's a little low to me.
But it's low across the board for.
It is. But usually you get a bump for earnings. I mean, that's a 5% move. That's relatively low for me.
Bat mentioned this news just briefly yesterday because it did come out yesterday morning, but it came out after I was off the show, so I'll mention it today because it is moving still this morning. And that's Meta has signed a nuclear power deal with Illinois Constellation Energy. Basically, Meta's buying its own nuclear reactor. What could go wrong? They signed a 20-year agreement to buy nuclear power from Constellation Energy, continuing the wave of tech giants teaming up with the industry in order to meet their growing power demands. CEG, not sure what it's doing this morning, but I think it's down around $10.
I think I got Meta here. Meta looks like it's up around $1, and
CEG.
Give it to me again.
C as in Carl, E as in Eagle, G as in Giraffe. I don't know the NATO alphabet.
CEG. Oh, good job out of you.
Yes.
Yeah, down $10 or so. You're exactly right. $303. It was up yesterday.
Yes.
And then sold off. It's promptly sold off. So yes.
Do you have a Meta position?
I do not have a Meta or a CEG position.
Okay. I didn't know.
You trade Constellation Brands? I mean, I know you don't do on the show.
Haven't traded it in 20 years.
Yeah, I'm looking at the markets here. They're wide, 50 cents to $1 wide.
I haven't traded it in
Or what's the other nuclear? Is it OKLO? Is that a nuclear?
I don't know.
Yeah, OKLO maybe.
I think some of the youngins trade that. That's
I think Victor. I think Victor trades it and
possible.
Nikki maybe. I don't know.
Yeah, $40-$50 stock. Yeah. Mm-hmm.
Hey, speaking of Microsoft is cutting hundreds of jobs after firing 6,000 people in May. One of the largest tech companies is initiating the layoffs because it's underscoring the tech industry's efforts to trim costs even more as they plow billions of dollars into artificial intelligence. Make that make sense. The cuts impacted a range of positions, including software engineers, marketers, project managers, lawyers, and research scientists.
So funny because I don't know how you plow money into AI without having engineers to do it.
AI just
does it
looks
itself?
over itself. I have no idea. I honestly don't know.
I know, but the whole thing doesn't.
You build a robot, so it's not how else.
None of it makes sense to me. You can't plow money into something without hiring people.
Sure. Well, I don't know what to tell you, but Microsoft can do what it wants.
Okay.
Hey, a film will portray the chaotic time at OpenAI when co-founder and CEO Sam Altman was fired and rehired within a span of just 5 days. According to the Hollywood Reporter, the movie is titled Artificial, and I am sat for the tea, honey. The details are not quite finalized. I wonder who's going to play Sam Altman.
You get a lot of people.
Maybe the guy that played Mark Zuckerberg could probably play Sam Altman. Like, they kind of have like the same vibe. Jesse Eisenberg, I think, is the actor's name.
Looks like him.
Yeah. I think he could get the nod. I think he could definitely do it. But I just put this in there for me because I thought it was a funny story. Hey, Hims was up yesterday. I'm not sure what it's doing this morning, but the reason it was up yesterday is they're acquiring a European telehealth platform in their bid for global expansion. Ooh. What are you doing in Hims?
Nothing.
Okay.
Now Hims was up, Vanetta. It got it traded all the way up to $67. It was up double digits for a little while. I think it actually closed down on the day or up slightly on the day.
Wow.
It looks like it's unchanged up a little bit to 55 right now.
What a wild ride. Netflix stock got upgraded yesterday. Netflix can go even higher, says an analyst. It got another price target upgrade from an analyst who laid out the case for the streamer's continued growth. Jefferies analyst increased his price target on Netflix to $1,400 from $1,200, which implies a 15% increase from the stock's Monday closing price.
They must need to sell stock. That's the only reason why they
I
do
love
this,
when these analysts at all-time highs, then they go, it can go even a little higher.
Yeah, that's right. Just not there yet.
I mean, on June 11th,
unchanged.
but that documentary is coming out about the Ocean Gate, about the sub that blew up, the Titan sub or whatever. That's going to be good. I'm going to watch that.
I guess.
I'm just curious, how do they know? I mean, there were no survivors.
No, but they can put together the story about how things went wrong, or because we have
sure.
like the Challenger blew up, and we have stories about that, and
they can figure out. They know exactly what happened.
Yeah. I'm just interested to the whole situation. How
it imploded. It's sucked in itself.
Yeah, how it got that far. But hey, Peloton! It's been a hot minute since I've had a story about Peloton. Peloton is launching their own resale market for used bikes and treadmills. The secondary marketplace, which they are branding Repowered, they want to get a slice of the burgeoning resale market that is connected to fitness equipment. It said sellers will get 70% of the sale price, and then the rest is shared between Peloton and the platform provider. But if I do it on Facebook Marketplace, then I get all of the money. I don't know how that works. But Peloton, back in the news.
I don't
think this is a great story because it's like people that don't want their stuff anymore.
I have no idea. I haven't looked at Peloton.
People who are upgrading. Vanessa.
Yeah, okay.
That's how you spin that.
I have no idea where this stock's trading. I'm going to guess $5.
$6.66, Sosnoff.
Oh, that's the devil's number.
I wasn't going to say it.
Hey, today's an exciting day. Tomorrow, is an exciting day for video game nerds everywhere as Nintendo will officially launch the Switch 2. Oof. Nintendo confirmed yesterday, though, that no Switch 2 review units were sent out prior to launch because I guess they're going to push out a mass update. So everyone's going to get their Nintendo Switches tomorrow. They're going to hope to get them, and then they're going to have to do an update. So they didn't want to send the units early because I was like, I don't know. But as a little stock to tie it into stock, Best Buy and GameStop could be affected by this because they're sellers of this Nintendo, and it's in high demand. So if you wanted stock context, there it is.
There you go. Thank
you. There you go. BBY and GME.
Sosnoff, are you interested in trading GME anymore? Looking to get back into that? Almost $30?
Nope.
I didn't think so. I'd rank of 15.
I had a small position on in there. It just took it off.
Okay. Hey, Adobe is launching a beta version of its Photoshop app for Android. Android users can now download Photoshop for mobile. The app offers a similar suite of editing tools as the desktop version, now made available for Android. Not sure what Adobe is doing, ADBE.
That's pretty funny. It took them this long.
Okay, well,
15 years to build one for Android.
Okay.
Maybe 20. That's pretty sad.
All right.
$412 basically unchanged, but this is a stock that used to be, close to the $600 a year ago. 412 right now, off of its lows of 330 and change. IV rank of 81 is pretty good, but it has earnings coming June 12th.
Well, I found you something with high IV. You're welcome.
You did.
Hey, I did this story yesterday about Pope Yes. Do you see all those TikToks about people calling Popeyes Pope Yes? I'm like, no, it's Popeyes.
No.
Anyway, so I did the story yesterday that Popeyes is introducing new chicken wraps, and then McDonald's is like, yes, finally, we're bringing back our snack wrap. People have all they wanted was the snack wrap. And so McDonald's says they are bringing snack wraps back to U.S. restaurants, returning July 10th. Let freedom ring.
Doesn't even look good.
The Popeyes ones looked better, but I have like a nostalgic recollection of snack wraps, and I remember them being good. But you're right, they look mid.
They look mid.
Speaking of the Pope, did you see they sold out?
Guaranteed rate fields.
Yeah.
Yes, on the 14th, because there's nothing else going on that day. I think that's awesome. Good job, Pope Leo. MCD, what's McDonald's doing?
I have no idea.
What do you think about McDonald's? You've been there, done that, anywhere 312 and change on the bid. It might be up around 50 cents, maybe a little bit more. Been going sideways.
It feels like it's always trading between 300 and 320. I don't have an opinion.
That's because it has since February.
I don't have an opinion.
As the NBA Finals kick off this week, if you're a fan of burritos and basketball, Chipotle has a promotion for you. Again, I love Chipotle. I literally eat at Chipotle at least once a week.
I don't get it.
I have so many. Here's the thing, though.
I don't get it.
This marketing campaign is the most convoluted, and I think it's what happens when you probably take AI and just like a bunch of marketing people. So the marketing campaign is called Chipotle Instant Free Plays. Whenever there's a coach's challenge during the live broadcast of certain games in the NBA Finals, Chipotle Tweets will share a post on X for review. Fans then have to uncover a keyword hidden in the post, and then the first 5,000 fans who text the keyword to 888-8222 will win a free entree. Chipotle, I hate everything about this. So there has to be a coach's challenge. You have to go to their Twitter site. You have to review the post. Then you have to text it, giving them your private information. And then only the first 5,000. And I'm like, Chipotle, you are doing the most, girl.
You have to text it, giving them your privite information.
Yeah, but that means you have to watch the game till the end, because most coaches save their challenge till the end of the fourth quarter.
Yeah, I guess. I don't know. It's a convoluted promotion. That's all. Because like the Bulls game, it's like, hey, we make X number of free throws.
5,000 free burritos.
Yeah, they're only giving out 5,000 free burritos.
How many Chipotle stores are there?
I don't know, sweetie.
It's got to be over 1,000, right?
Oh my God, there's thousands of them.
Yeah.
Thousands of them. So say that each store is giving out 2 burritos. Wow, way to go off the deep.
I don't know. I'm not sure what CMG is doing. Although I will say the last time I was in CMG, I get like chicken, and so I was getting chicken and
the extra chicken.
Well, no, and I asked the guy, I was like, "Can I get double chicken?" And he went like this. He was like, "Shh," and he gave me double chicken, but he didn't charge me for it.
Oh, he's hitting on you.
Oh my.
Your girl got extra protein.
You want some more?
Hey, and finally today, in a funny story, the Chicago Fire just absolutely cucked Jerry Reinsdorf and the White Sox out of their potential stadium site. It's just a funny headline. So the Chicago Fire, just out of nowhere, saying they're going to build a new, privately funded, that's the key word here, soccer-specific stadium that's going to open in the 78, which is in the South Loop here of Chicago, and it's set to open in 2028. But the White Sox wanted that parcel of land. So again, this kind of came out of nowhere in the Chicago.
It looks really cool too.
It looks cool. They're going to privately finance it. I don't know what the Sox don't have a leg to stand on then.
No, and it looks really cool. I think it's a 22,000 person stadium.
Yeah.
It looks great.
Yeah, it says our world-class city deserves a world-class club.
Hockey doesn't get any love here. They're going to redo the Fifth Third Arena too, so I don't know if they're going to make that into a big complex on Madison. Did you see that?
The fifth. What is that?
Fifth third is where the Hawks do their practice, and also Vinny will play a lot of his games there when he comes into the city.
No, I did not see that. That's good.
Yeah, they're redoing that. They're redoing that too. They're regentrifying that whole area there. It's got a big boom.
Also yesterday, just in all of the boomer hiccups, you guys were trying to name bagel places, and then you were yelling about the names. You're like, why is it called Tribeca if it's here in Chicago? I'm crotchety.
Those were breakfast sandwich places.
Okay, breakfast sandwich places or bagel. Okay, fine, whatever.
Yeah.
But I do like Egg with Benefits. I thought that was really funny. I was like, that's really good. That's a funny name, Egg with Benefits.
Extra protein, Egg with Benefits.
Egg with Benefits? No. Hey, but anyway, for my viral video today, this is from an account, Fairmount Bagel, and they are calling this guy the Bagel MVP. Could you do this? Watch this.
It has to do with the bagel. I could do it.
Okay, I don't think you could do this.
Oh, that's good.
That's impressive.
Yeah, that's good. That's good.
Like, imagine it's your first day and you just dropped 200 bagels on the floor.
Yeah, well, this guy's done this about 75,000 times.
1,000,000 times. It's still impressive.
Yeah, that's good.
Nice.
Someone in the comments called him Kareem Abdul-Jabagel. I love the internet.
That's good.
That's good.
Anyway, hey, that's my time for today. Bat, what's coming up next?
We'll take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send.
Good luck.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
We are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, Sadnov, a little bit of Confirm and Send. Let's take a look. Sadnov, just like every other day this week, even the S&P is basically unchanged. NASDAQ, basically unchanged. Russell, basically unchanged. Dow, basically unchanged. Volatility, basically unchanged. Bonds caught a bid though, 112.29, traded over 113 just a moment ago, just about 3 to 5 ticks off of their highs. Bitcoin down 1,200 to 105.5 or so. Oil down 30 cents, sliding small after the last couple of days of rallies. Gold up $4.90, going sideways, basically unchanged. Nat gas basically unchanged, although it's down 2.5 cents. Sounding off the euro, if we take a look at that real quickly, it's up today, which means the dollar is a little bit weaker, ever so slightly there. CRWD was for earnings. Let's take a look at that. It was down around 30. It is down around 37 or so right now, trading 451. That's all I got. So kind of an unchanged market, waiting for you to go to be off on Friday for movement.
So the only other earnings play was Dollar Tree, and like I said yesterday, when DG is up, the other stock that complements is usually down because they never make it easy, and it's exactly the case here. So.
Right, but it was up $4, $4 or $5 yesterday. I didn't follow it, but it was up $4 or $5 yesterday.
These are emails that came into us overnight. We're running late. We'll catch up. Emails that came into us overnight. Confirm and send. Wednesday, June 4th, I sold a covered call, and the stock is well beyond my short strike. The position is using about 20% of my buying power. At this point, I'm just waiting for June expiration to have the stock called away. Since the call is breached and the stock will be called away, would you consider the 20% buying power being used in that trade as being available now so that I can allocate it to a new trade?
I mean, you can consider it however you want to consider it, but it is not available. I mean, in your numbers, you may have the available buying power in your account because you stuck to your rules and you're trading small and you're trading often and you're not using more than a percentage that fits your portfolio, but it's not available to you. Now here, that begs to ask another question inside this. So it's all risk and no reward right now. And if you're going to have the stock called away, in a week or two or something like that, and there's pennies left to make, you probably could use that buying power somewhere else to make significantly more money with another position than sitting with all risk and no reward in the covered call that's a full profit.
Yeah, I mean, you basically asked and answered the question yourself on this one. If you have a long stock short call and it's well beyond your short strike, you have very little left to make. Why even holding the position? Just close the position out. Right. I mean, you're trying to make a few extra pennies. You don't pay commissions to close a trade anyway at Tasty. Sure. Stock is free, options are free. So just close the trade out. There's no reason to have just like Tony said, all risk, no reward. Free up the cash, close the position out, free up the cash, and do whatever you want to do next. There is no reason to hold that trade. Yes, you can consider it as the buying power is available now, but it makes no sense. Just close the trade out and move on. Make it really available. Let's go next slide.
Yeah.
I've been trading in a 25 to 30K account for a few years now. I'm very comfortable trading one contract in strangles and short puts. I've recently increased my account size to 100K. I'm now having issues finding enough underlyings to keep my buying power usage in the 30 to 40% range, trading one lots. How many contracts per trade should I be trading in this size account? What percentage of net lick should I be using per trade?
Okay. Increase my account set to 100K. For me, looking at you don't quadruple the numbers. Just because you now went from a $25,000, $30,000 account to a $100,000 account, you keep that same buying power usage the same. So for me, I don't think I change anything here, except I'm going to try to look for more number of occurrences. Now, if I can't find more number of occurrences because volatility is low and I'm not, I want to stay with liquid products, going from 1 to 2 is a big jump, but I don't think you can do anything else.
Yeah.
Unless you're going to change the strategy and one use an iron condor where you had to strangle and another. I don't know.
So basically, I agree with Tony. Just because your account's 4 times the size that it was doesn't mean you go from 1 to 4 contracts. What it does mean, though, is that you are going to have to, you can obviously keep doing 1 contract and spread the wealth around a little bit. That's an option. Or you can go to 2 contracts. And the reason I say that is because if you think that the average price stock is, let's just say it's $100, and you put up $2,000 for a 1 lot to make a strangle trade or something like that, or a short put, then you want to keep your percentage of net lick in the range of 3 to 7% per trade. So let's say 4 or 5 is average, then a 2 lot would be perfect. So I'm very comfortable here with a 2 lot on the $100,000 account and a bunch of different trades using, 40, 30, 40, 50% of your account, using 2 contracts, using, 3, 4, 5% per trade. Very comfortable with that. Let's go next slide.
You can also change the strategy on one too.
Yeah, sure.
Uses a lot less buying power. Yeah. Mm-hmm.
This person asks, are crypto products marginable?
Futures would have margin.
So
to them.
the answer to this question is crypto futures /BTC what is it?
I'll give you
spacing out /BTC /ETH
/MBT
ETH
/MET.
MET. Yeah, those are all marginable. Their margin on those is higher than most other futures, but they're still marginable. It's about 40 or 50%. And then, of course, the crypto ETFs are marginable. So IBIT, IBIT, BITO, those are the 2 that I use. What else is there? I can't think off the top of my head what else there is. And of course,
ETFs.
Of course, stocks like MSTR and Coinbase, all those are marginable. So all the ETFs, all the individual stocks, and all the futures are marginable.
You mentioned IBIT, but there's ARKB. There's a bunch of them, Sal. BTCW.
So all the crypto ETFs are marginable. All of the crypto futures are marginable. Cash crypto, like just buying Bitcoin, ETH, or any one of the altcoins, those are not marginable. And it has nothing to do with Tasty. They're not marginable. Let's go to the next slide. How can, and you might be somewhere else in the world where you can borrow money to buy digital assets, but you can't in the US.
Yeah, that's all we could talk about.
How can I group individual options so that they display by category on the position page?
How can I group individual options so that they'll display by category? On the position tab, you can sort by strategy. Is that what they're talking about?
Yeah, on the position tab, when you go to your position tab, there's on the very top line it says group by. Now I group by symbol, but some people
me too.
Some people prefer to group by what we call order chains, and order chains will break it down by strategy.
If you don't know how to find that, you could send me an email, bat@tastylive.com, and I'll give you a link to.
Yeah, just on the position tab, it says group by. The default is symbol. We all use symbol, but if you want to group by order chains, you certainly could, and that'll help you.
Yep.
Let's go to the next slide. In reviewing the market measure from Tuesday, it seems like the research suggests we should put on strangles at 45 days, use the 20 delta put and call, and not touch the trade at all until 21 days. Is that a fair summation?
We should put on strangles 40 days using 20 delta put and call and not touch. I mean, from that study, it kind of alluded to that. Now, I find it hard to do when in the real world, but that is the numbers play out. Yes, if the market continues to do what it's been doing, it's a lot of ifs in there.
So that is what the study showed, but the reason the study showed that is because we don't have a way to arbitrarily adjust trades in a study so that it's consistent. So we basically have to pick a point. Like we can't say what happens if something, moves to a certain price or delta or something like that in between those periods. Like we can't test every single tick on every single trade and be able to put the data together for that. So I'm going to argue that that's what the study showed, but that's a worst case, not a best case.
That's correct.
I'm going to argue that you might get better results in the end by not touching anything until 21 days, but that's very difficult to put your hands in your pockets and do nothing. I would suggest that you continue to adjust and be aggressive and do what you normally do. And, if you can't do anything, fine, then just wait till 21 days. But that did not change the way we aggressively approach our positions.
Yep.
Let's go to the next slide. And the last one. One of the reasons you don't buy options, because it's too hard to determine when to close those positions. And by the way, I love this question because nobody ever asked this question, and it's so damn good because it's so damn hard.
Yeah, well, they're realizing the issue there. Like, it's almost like, when do you close your hedge if you believe in hedging? So, when do you do that? When do you do this? It's just that your delta of your overall position. But that's another question for another day. That's one of the reasons. We like to give up the home run to have a higher probability of success and hit the double. There are a lot of reasons. But, yeah, when to close it is a hard thing to do, too. Yep, 100%.
It's really hard to know.
One of the reasons you have to give it one of the reasons.
I would say it's among the most difficult things to do in trading, because when you're never going to sell at the top. So you're always going to hold something too long or not hold something long enough. And you're going to beat yourself up over it. That's why when you sell options and you're mechanical about closing it, let's say 25 or 50% or whatever it is, you have a max profit potential, so you never go back and second guess yourself. It's one of the reasons we developed the Tasty Mechanics the way we did, because you never second guess yourself. Because if you take a profit at 50% and you could have made another 10%, all right, you can live with yourself. But here's the problem. You buy something, put it $1, it goes to $2, great trade, you sell it, then it goes to 20. And you're like, what the hell? I left $100 million on the table.
Sure.
Like, it's really hard. It's really, really hard. Every trader battles with this. Yes, that is one of the reasons.
Awesome. Hey, let's take a quick 90-second break. Give me the S&Ps a quarter bid side if they're $1 north of being unchanged.
There you go.
We'll take a quick 90-second break and come back. We got a Tasty Bites for you next, Sosnoff. Back in 90 seconds.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's going to do his hair.
Who's a better driver?
For sure.
Yeah.
Like, I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
With a big earnings week coming up next week and a time of really heightened volatility, what advice would you give to traders in terms of managing and attacking earnings in a time like this one?
I think this one in particular, just given the market volatility, I would be a little bit more conservative with the trades. Maybe instead of going a 10 or 20 point wide iron condor, go to a 5, because the market has been moving huge in both directions. There's tons of opportunities. There's no shortage of trades out there. I think earnings trades should be kind of pushed to the back burner in terms of your risk parameters.
What type of specific criteria do you look for in an earnings trade, and does that change in a time like right now?
Well, the main criteria is, of course, volatility, but you've got high volatility everywhere, so you'll have no shortage of high volatility to trade. I would say maybe going a little bit further out in time this time around, going into the May or the June monthly cycle as opposed to the weekly expirations, just to make it a little bit less volatile from a P&L standpoint for your positions.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. TastyTrade. Download today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with this Tasty Bites.
Yeah, little Tasty Bites. We haven't done a Tasty Bites in a while. That's like for like smaller accounts between, we always used to say between 2,000 and 25,000.
Under that 25,000 kind of
pattern day trading rule. Yeah, our boys are in Washington, D.C. this week, in New York and Washington, working on the pattern day trading thing. JJ's out there, and they think they're going to, fingers crossed, they think they're going to finally win.
Well, that's news to me. 'Cause, I mean, I know JJ's out in New York. I didn't know that's what he was doing. That's pretty cool. I mean, I know they've been working on this a long time. It would be certainly a feather in this industry's cap.
Well, that's what they've been working on to get rid of the pattern day trading rule. They feel confident that they're going to get it done this week. I'm hoping that they're going to get the rule passed. But then here, listen to this. So assuming they all regulators agree to get rid of the pattern day trading rule, then they have to go in front of the SEC or somebody else to approve the rule change. Then they have to give like a 1 to 2 year period to allow banks and big brokerages to change the way they've coded their back end. So even if they approve it this week, they said it might go into effect in 2027.
Oh my God! It's such
such horseshit. Yeah, legit really horseshit. Yes.
Yeah, it really is.
It's an embarrassment. And I mean, I give Scott and JJ credit because they've been busting their butts on to get this rule changed, and no other firm seems to give a flying crap. But but we've been working on it now for 7 years, so we're going to get this done if it kills us. But the amount of time they're like, Deutsche Bank can't change on a dime. UBS needs time.
Right.
I mean, they don't even have any retail customers.
I was gonna say, who trades retail with them?
I know, nobody. They don't even have software.
Right.
So ridiculous. Right. It really is ridiculous. Like it pisses me off. But what I'm hoping for is that maybe at some point, our argument to them is well, pass the rule And if those guys can't change, let them keep their rule in place. Who cares?
Right. They don't have to make it. It could be a company-wide thing. You can go company by company, sure.
And you don't have to enforce it. You just don't have to enforce it then.
Right.
Yeah. I mean, the customers obviously want it. It's insane. So we'll get it done. It's painful.
Well, good job out of them.
It's painful. Anyway, here's our first piece of research. We're just venting about this pattern day trading rule that's been a thorn in our side for 25 years. 3 key elements for small account trading. 3 key elements for trading a small account. Let's go next slide. And so, yeah, this is pretty straightforward, but I think you'll like it. With smaller accounts, you have limited capital. So there are 3 challenges. Asset selection, finding the appropriate underlying to diversify risk while reducing capital requirements. At the same time, you also can't break from the mechanics. You still need the high IVR, so it just makes finding the right trades even more challenging. Position scaling, how to scale up effectively when opportunities come, and then risk management, how to avoid large losses through proper position management. Those are just challenges. Let's go next slide. So for the SPY and the Qs, they've become considerably more expensive over the years. While these indices offer relatively low volatility, their buying power requirements make them challenging for small accounts. And you're right, the Qs at 526 and the SPY at 594. I mean, the buying power to do a 1-lot strangle is $9,000 in the SPY and $7,000 in the Qs.
Sure.
These numbers, I mean, 2008, the SPY was, I know you're going to think this is insane, but the SPY was like, the SPY got down to under $70. It was cheap.
SPY in 2008,
2009, in beginning of 2009, it traded down to 66.
You are correct, my friend.
And the Qs in 2008, I want to say the Qs traded down to 60 or 70. I'm not 100% sure of the low. The Russell traded down to 33 or 34. I mean, the IWM. These are crazy numbers, but
yeah, the Q. I mean, listen, even as 2013, Sosnoff, I mean, it was down to 70. So
right.
I mean, you don't even have to go back as 2008, but if you go back to 2009 or so, the Qs were 26.
Wow, I didn't even remember them there. Crazy.
They're 527 right now on the bid.
Wow. Wowzer. Let's go to the next slide.
Yep.
So buying power is expensive. One way to reduce the buying power is to use cheaper alternatives like sector ETFs. Similar products, but not quite as much liquidity, like XLF, XLK, XLY, XLV, XLI. They're cheaper, but it's not the same. They're not the same thing.
That's correct.
The strangle success rate looks really good because when you do your backtesting studies, you get fills at decent prices because it's the only way to test everything is off mid-price. But in reality, the amount that you have to give up to trade those stocks is a lot more. So you do pick up a bigger credit. It is a much lower buying power, but they're not the greatest stocks in the world to trade. Let's go to the next slide. Like, I'd rather find other 100-hour stocks that are actually more liquid. Scaling up is trickier for small accounts because the increased buying power for each position could be disproportionately large for small accounts. There are 2 common scaling approaches. First, you can increase the number of contracts, or you can increase the individual position's risk by using wider strikes or strangles instead of iron condors. Our default here is number 2, increase the individual position risk rather than increase the number of contracts. Increasing the number of contracts always gets dark, takes you to a dark and uncomfortable place. Increasing individual,
it does. You don't want to be there. It's very, very squeamish.
No, increasing individual position risk, much better. Use wider wings, higher delta strikes, use strangles instead of iron condors. That's the way to go. Next slide, please. While adding contracts may seem like a natural choice, it increases risk faster than traders realize. In this example, using a wider iron condor provides better probability of profit and lower tail risk compared to simply doubling contract quantities. We've done many studies on this, and keep having the bigger position rather than more contracts, as you can see here, is a far better outcome. More premium, much better pop, and a smaller tail loss. Next slide, please. So for larger scaling needs, strategies like a naked triangle could provide similar benefits, improve win rates, and relatively lower tail risk. And you can see right here in NVIDIA, we're kind of showing you exactly the bigger position versus the more contracts, and it's just significantly higher pop and a lower tail risk.
Yep.
Let's go to the next slide. And this is the last piece. Actively managing the positions consistently outperforms holding them to expiration. The last slide in confirmation said, what about holding them to 21 days? Because that seemed to outperform. And that is the alternative. Holding to expiration is not an alternative for us. So our analysis strongly favors exiting when profit reaches a certain percentage or closing 3 weeks before expiration. Yes, and yes. We like, as you can see here, 50% profit, which is sometimes hard to get to, but 21 DTE is our sweet spot. Expiration, not even in the team picture. Next slide, John, please. The main benefits of actively managing positions include increased number of occurrences, reduced gamma risk, higher success rates, and lower P&L volatility. Perfectly said, nobody else in the world covers these same four things. For smaller accounts, managing a 21 DT is particularly effective, since it's one of the few methods to increase potential daily P&L without too much sacrifice. I like it.
Totally agree. They're just talking about being mechanical here. Yep.
Last slide, John. Takeaways. Traders can use sector or country ETFs to diversify their portfolios and reduce capital requirements when the major indices become too expensive. You can also use liquid stocks that in the same price range, like NVIDIA at $140. Things that are super liquid, Tesla, still reasonably priced. Maybe it's a little bit high, but NVIDIA's another, but there's lots of stocks in that, $100 range or $200 range, like, Apple and Amazon and Google and all those stocks. They're much more liquid, some of those ETFs. Traders should carefully consider their scaling approach. While doubling or tripling contracts increases premium collection and appears straightforward, it also creates a greater risk of substantial losses and increased portfolio volatility. And lastly, active position management provides significant benefits. Just manage early. Manage early. Don't overthink.
If you have any doubt, do it early. That's really what you're saying there, right?
Tony and I do not. We don't wait things out. We never second guess it. We always default to managing early and then moving on.
100%. Good job, Sadnov. We're going to take a quick 90-second break and come back. We got more Tasty Live after this, Sadnov. What do we got coming up next? Well, the opening bell, Sadnov. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend.
I'm ready.
And you know what that means? We got the opening bell going to slap you in the face. I don't know if you're in about 2.5 minutes. Even the S&P's, I don't know. Is this the up opening that you talked about so that we could sell off a little bit here? I don't think so. So I don't know if even the S&P is up 4 1/4. You can see last night's range of $20 is quite tight. NASDAQ up $10. Russell basically up 60 cents. I mean, the market's unchanged here with the Dow up 5. Key on volatility, it looks unchanged here, down 4 cents at the lower end of its range at 19.16. Bonds have been the most action so far, trade up to 113.02, 112.27 right now. Oil up a nickel, gold up $3. Really, when you look across the board here on these percentage basis, there's really not too much that pops out at you. Yes, Bitcoin is down around 1 1/4%, and you've got nat gas down around 1 1/4%, and corn actually up 1 1/4%. But these are all fringe players in the market as far as I'm concerned. CRWD is the big one, down around $35 or $38. We'll see where it opens. And Dollar Tree, DLTR, I didn't look at that a moment ago. I will do it right now. $90 and change, which brings it down $5, Sosnoff. So, yeah, underperforming. Very good job out of you.
Yeah, that was the trade that I thought after DG was up so much, I'm like, no way, And so that's always the Lyft Uber thing. That's always the Lowe's Home Depot. If Lowe's is up big, Home Depot's down. If Home Depot's up, everybody bets Lowe's being up is usually down. It's always like,
right.
Yeah, that's why all I did in there was sell June calls. It should be a nice winner.
Of course it will, me lord.
Of course.
What can't you do?
You got to put your money where your mouth is. I haven't done anything today.
Yes, you do.
All I've done today is sell some NASDAQ futures, and I covered them already.
Hey, today's Wednesday, not Thursday. Maybe we can do a 0 day today. I mean, we don't have too much going on. We're looking for things to do.
Possible.
Hello?
I don't hate the idea.
Okay.
I do not hate the idea.
All right, I'll take it. I'll take it. It's a win in my book. So I don't know if I get a Tom does not hate my idea, then I feel like I've won. I feel like I've done my job. I can go now.
I don't know why today. Bang, 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 bang.
Bing, 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 bing.
Well, this is like, I don't know what this is.
Turn those machines back on is what.
What was that?
That's a little Crowd and Dollar Tree. I think you bought your calls back in Dollar Tree at 4 cents. I think you bought your calls back in Crowd at 2 cents.
Wow.
For earnings. Pennies on the dollar, Sal. No, pennies on the dollar.
Wow. Yowza.
Good job out of you.
Very happy, but my puts don't look as good. Well, they're fine. Puts are at where did we sell them at?
CRWD.
Sold them at 65 cents. They're currently.
What puts are they?
The 410 puts expiring on Friday.
Yeah, they're 20 cents, 45 cents. So I don't know, maybe 35 cents probably you can get filled. You really wanted to?
Maybe. I mean, when the stock's down $36, you can't,
Well, they're 32.45, so there's definitely a market there.
Yeah. And then I got to see what the.
Even the S&P is up 10.
They are.
Let's see what's moving this market, Sadnov. If you want to the downside, you got CRWD, which you just talked about, down $34 now. Yeah, you just got filled at 32 cents on your puts on this uptick in the stock. MSTR down 3.5. Tesla
made
down
50% on those, which is not bad for down 30. That's why you got to do the front month. You remember that? We had that discussion all the time.
We did.
I mean, the weeklies.
Front month will support a move to the one direction right at the expected move a lot more than say your July will. But let's see what July looks like here when you get to it.
Yeah. So CrowdStrike, I'm not out yet though. We're still doing a little battle with it. We still have some July position, some July positions. Let's see. Did those little suckers come in? Yeah, a little bit. About a buck and a half or something. Not bad for July.
Yeah, you actually made more money in July than you did in the front month of June, just because of the nature of the beast, meaning you had higher premium.
Well, I didn't make anything yet because I didn't take them off.
Yeah, the stock actually went down $7 also. It's down 38. You caught the down 31, 32 when you covered your June. So, you could have done that all 4 legs at one time there, Sadnov. On the platform, it supports 4 legs. I know it's difficult for you to do as an individual, but it can be done for those.
You can always have some fun. I'm just going to roll down some calls. I like to torture myself. I'm a pure torture guy.
This is true. You do like to do that.
Yeah. I like to put myself in harm's way.
I know.
So I got to roll down.
Listen, why do things easy when you can do things, a little more difficult?
What, say it again?
Why do things easy? Anybody could do things easy, right? I mean, you like to make it a challenge.
I like a bigger challenge is exactly right.
You roll down some calls here in Crowd, correct?
Yes.
Stock's down 40 right now, Sadnov.
Yep. I got it. And let's see what else do we got going on here this morning. Ooh, AVGO. That's the thorn in my side. That stock, I just don't think it's going to be able to keep this kind of insane run up, but
up another $4 here, AVGO, trading 261 and change. That is the high, Sosnoff, for the day.
Yeah, this stock has been just an absolute powerhouse. It's been.
Let's see some buckers to the market. Costco down $2.60, PLTR down $2, Tesla down $1.50. They're small, few, and far in between. Hood, after a big day of the upside, down 47 cents. To the upside, Sadnoff, you were just mentioning some of those. You got Meta up $9. You got Netflix up $6. UNH up $4. AVGO up $4. And Snow up 2.5. Your beloved Baba up $2. Uber, since you mentioned it, up $1.50. Even the S&P is up 12.
Yeah, there's some stocks that are starting to get into levels that are interesting for me. I do not have a Meta position on, but it's getting up to the point where, and again, the Ivy rank in there does not make
digits.
Single digits. Yeah. So if you're going to do anything in Meta, you've got to do it as a
diagonal, calendar, debit spread. You're not really looking.
Well, the problem with diagonalizing in there is that August vol is way more expensive than July.
Good catch. You're 100% correct. August, 72 days away, 39 vol, and July 32. You may have heard me talk on the show. I prefer these numbers to be inside of 2 of each other, so 32 versus 34. Or 39 versus 37, but this 6-point vol differential makes it no go for me and almost impossible to make any money on a diagonal side calendarized.
I agree with you. I think it's almost freaking impossible in a stock like Meta where it's currently trading. I think if you want to, and let me tell you something else about Meta. These markets don't look as bad, but they don't trade that good.
Yeah, it almost seems like a trade by appointment, right?
I'm looking at the 70-80 put spread.
Mm-hmm.
Well, I got filled.
Oh, that was easy.
That was a little easy.
Well, the stock's up $10 now, too. You got filled right at mid-price, $4.55.
Yeah. Taking a look at other stocks just to see if there's, I'm just going to start to nibble on the short side of Meta. Now it's up 11. I mean, another stock that's had a nice little rally the last couple of days is Lilly. I'm not sure if you have a position on there. I do.
I don't, but Lilly's always in the list of the most, like the biggest mover, up or down. Now, Lilly's on its butt, although it has rallied off of the 710 handle here up to about 760 and change.
It's hard. It's a challenge to get filled in there too. Let's take a look quickly through everything else to see if there's anything that's crazy. And the reality is not really. We're about to do what's your assumption, and
even the S&P's up 15, NASDAQ up almost 80, Russell up almost 7, Dow up 55. They're all up around the same volatility, in by 3. Your bonds have taken a little bit of a move lower. They're 112.24. They're still up 21 ticks. Bitcoin catch a small bid up 400 off of its lows I just quoted. Gold isn't moving up $1.50, and oil's not moving down 10 cents.
Oh, boy. All right, let's do it. Let's move on.
Let's take a quick 90-second break and come back. That's right, sad enough. We got more Tasty Live. Immediately found these messages with what's your assumption? You, our viewers, came to bat for us. I can't wait. Back in 90 seconds, Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on TastyLive.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on TastyTrade. Genius loves company.
Tomas! We're back, my friend. Even the S&P is up 16, NASDAQ up 75, all quiet on the Western Front, Sosnoff. But that means nothing, because we've got, what's your assumption? Time for you to put on some trades, Sosnoff, from our viewers.
Bam, 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 bam. It is kind of quiet. Not sure what to do. I just made a trade that I don't make very often. That I actually never make.
What is that? Q calls?
I sold some 0 days in the Qs. Calls.
I see that. Just calls, just one side.
Yeah.
Sold them at 80 cents and 71, it looks like. So let's call it a, 75-ish, 76-ish cents thing.
Yeah.
Crowd you're trying to get filled on.
Oh, did I get filled in crowd?
No, you got a partial. I said you're trying to get filled.
Oh, yeah. I want to get out of crowd, but I got a partial. I don't
Why would somebody get a partial like that, Sosnoff?
You get a partial because you're interacting with another customer, not with a market maker.
Yep.
Anyway, let's do this. So these are trade assumptions that came to us from customers, and we have we're a little bit on the sidelines right now. We need to put some positions on. So let's see what we got.
Let's do it.
Bjorn Herman from Deutschland. Wow, we're getting everybody in on the show. SPX, 0 days, inside day, boring weeks to come in May. And let's sell a straddle. And what does TP mean?
Toilet paper.
And TP at 30% or or before the noon balloon. What do you think? What do you think they're
trade price? Sell a straddle and trade price at 30%. I think that's what they mean.
Okay.
I don't know.
I don't know either. But let's see what we got here. SPX is kind of right in
and by the way, my Taiwanese sources say that TP trades 0 days in NDX all the time. It's about time you got into the queues, you little trader, you.
Hey there, the trader guy. I'm almost.
It's gonna be that kind of day, huh?
I'm almost gonna do a straddle.
Wow.
I did the next closest thing. I sold the 59.85 put and the 59.90 call because they're like right in the middle, the same price.
Yeah.
And so it's just like a straddle because they're right in between. And I collected 22.65.
22.65 it is. You are correct. Good job out of you.
I have no idea. No idea if it's going to be a good job or not.
Well, I mean, you can only control entry, and you did what you wanted to do. So, and you got filled at mid-price.
Yeah. Okay. Let's go to the next. Let's go to the next slide.
Next slide we go.
Remy from Reno, bullish on IWM before September. IWM to 255. Well, Remy. That's a tough one for me because not really that interested in just buying IWM. Let's think about this for a second. Remy's bullish on IWM. What do you think here, Mr. Bat?
He's bullish on IWM. I mean, that kind of fits your assumption here too. I mean, IWM is up.
I'm more bullish. I'm more bullish on IWM than I am on the other indices. But
sure. Ivy rank of 19 here. I mean, this is one where you could do something diagonalized between August and July. So not give yourself a little bit of time. Ivy between the two is basically 0, 25.5 and 25.5. So if you want to do something diagonalized, you could. I mean, it would be a small way of playing it to the upside. You'd be supporting the cast here. Oh, you're just buying back your little calls you sold for.
I'm just playing around. I'm just playing around today.
I know. It must be nice to play around with other. They're so good.
IWM. It's 210 right here. I'm not nearly as bullish as got the Ivy rank 19. I'm not going to sell puts. I'm not going to sell strangles. I'm not going to do iron condors.
TP is take profits. I am being told by my Taiwanese sources. So I'm up on that last.
That makes more sense than trade price.
Yes, or toilet paper.
Implied volatility at both months in July and August are exactly the same. So here I don't mind doing a little upside. Buy some August calls, sell some July calls. Buy the August 212s, sell the July 211s. I'll do an upside diagonal. Mid price is 161. I could probably fill this at 162 or not. Let's work it for a second and see what happens.
Yeah, I was going to say you can leave it in. It's not something that has a lot of delta to it. If we get a downtick in the market, you'll get filled.
No, we'll leave it in. We'll leave it in for a second. Let's go to the next slide. Chris from Houston, Target. IV rank of 27, not great, but better than most in low IV market. How about a Jade Lizard for July? Haven't looked at Target in a while. We have no position on in there. This stock is...
Yeah, me either.
This stock is kind of a pig. I agree with you. July, you want to do a Jade Lizard? Sure. Let's sell the 90 put, and let's sell the 100, 105 call. Collect about $3.50. Volume's not great in Target.
No, it's not. Relatively low monthly implied volatility too.
Yeah. I thought we'd get filled around 350-ish, maybe 348. Actually, these markets are a little bit uglier than I thought. I mean, I don't trade Target that much. I trade it around earnings.
Yep.
But I kind of feel like I should be filled here. Let's see.
I would demand one, Sosnoff.
What?
I would demand a fill.
Demand a fill. I am demanding a fill at 345. There's my fill.
That's all you got to do. You just got to ask for it, Sosnoff.
Just got to ask for it.
Manifest it. Yeah, you got to manifest it. You got to make it happen.
You got it. 345. Take a fill, Phil. Let's go to the next slide. Ajit from Chicago looking at Oracle. Let's take a look, Ajit, at Oracle. We have no Oracle position. Oh, yes, we do. Hold on one second. I thought we had no Oracle position on. We currently are short the 145, 190 strangle. We did it. We're actually down a couple pennies on it. IV ranking here is 51. They must have earnings coming up. June 11th.
Yep, you are correct.
Right around the corner. All right. So
it is right around the corner. Today's the 4th already.
Yes, I have no issue with this. Short straddle. No, I don't like straddles. I'm going to do, or if you're scared, put on some wings. No, I'm not scared, but I would just rather do a strangle. So I currently have on the 145, 190. We're going to do the 145, 195. Mid price is 385, 380. What? 389. That's weird. Got a really good fill. I'm not sure why.
Yeah, 389. Yeah. Well, so that's because you were interacting with a customer order that was sitting there between the markets.
No, maybe that's where they should be trading. 389.
Or maybe that's where it should be trading, and that's the bid.
That's the bid. I just did more. Okay, Ajit, we're in.
Well, you could have tried 390 or 391 just for giggles. I mean,
we're in, dude. We're in. Let's go to the next slide.
Just the tip.
I went up a penny and filled the IWM bullish calendar.
Got it.
CrowdStrike still working that to cover that position. AVGO, Charles from Hickory Corners, Wisconsin. What do you got, Charles, here? AVGO.
Never been, have you?
What?
You've been to Hickory Corners?
Never.
Me either.
There is no stock that's more overbought than AVGO. I couldn't agree with Charles more. I'm already shorted, Charles, and so far, as they say, no bueno. What do I have short the 190 puts? Man, the stock is just redunculous. What do you want to do, Charles? What do you want to do here? He wants to get short, right?
This is correct.
Honestly, I think he's right. How would you get short in here, Tony? I have the 265, 270 put spread in June. Do you roll to July? Keep it in June?
I think you got to roll to July, don't you?
You know what? July
June
does not.
16.
July. Oh, July only has 10-point wide strikes. Why is that?
After expiration, you'll get more strikes, Sadnov, but that's not going to come for 16 more days.
So if we buy back in June and then in July, we buy. Oh no, I see. You have to go to the weeklies.
That is correct, my friend.
Oh yeah. Yep.
Yeah.
Okay, Charles, let's do this. I'm earnings of this week. I'll stick in June with you.
Okie-dokie.
I'll stick in June. Let's go. IB rank is 52. I think you sell call spread. What do you think?
All right, that's fine. I mean, I think you have to do something with the
expected move is $15. The stock's been in the frickin' stratosphere. Stock's been in the stratosphere.
Give yourself time to be right. IB rank is 33. It's pretty good, but it has earnings coming in June also, like tomorrow.
It's 170. Takes you up to 185. I think you sell. Oh boy. I gotta take more risk here. Sorry, I'm just looking at a bunch of different things. Two-day options. Man, stock's trading 262. There's some juicy stuff in the 2 days.
Yeah, well, it has earnings.
I know.
Yeah.
I know. $17 expected move. I gotta sell some 300 calls naked.
Wow, you really are supporting the customer here. That's what you do, Saznoff. That's what you do.
I mean, I'm not sure what the best play in this stock is, but this stock is redunculous. I'm selling some 300 calls naked. I'll find some other stuff to do, but I like the upside naked calls the best in here.
Well, there's definitely call skew, so you're getting that benefit too. You're able to go further out of the money than you would expect under normal circumstances if there was no call skew.
Yeah.
So it supports the assumption you could stay tighter and collect more, or go further out and collect less.
Yeah, that's it. That's going to be our assumption.
Okie dokie.
All right, let's go to the next slide. I'm going to get shorted tomorrow more, Charles. Adam from Johnson City, Microsoft. He's bearish in their broken wing butterfly. I agree with him. I'm bearish in there and I don't have a position. What does he want to do? He wants to do broken wing butterfly. July, right? Maybe.
Yeah.
Let's see, Microsoft. All right. Slightly bearish with no risk to the upside. Maybe sell 2 of the 450 puts, buying the 440 and 455 puts. Buy the 455 puts, sell the 4. What does he want to sell? Sell the 450 puts?
Yes.
And buy one of the 440 puts. So effectively, you're long a put spread in here, right?
That's correct.
I like this play, Adam. Even with the IB rank super low, you're doing it for 52-cent credit.
That is correct.
Yeah, I like that play.
You got an embedded short $5 wide put spread.
Yep. We're going to keep it. Let's go to the next slide. I like it. Might do more of that. Simon from California. Looking at July put ratio spread in CL.
What do you think about this? Neutral.
We are currently in the July 60.5, 64.5 short strangle. What does he want to do?
You consider this a neutral trade, Saznoff?
Wants to buy the 62 puts, sell the 59.5 puts.
1x2. Classic ratio spread on the put side. I consider this more, I mean, I know we talk about it being omnidirectional because 59.5, you make the most money at expiration, but this has long delta to it.
Yeah, and I need a little tiny bit of long delta. So I'm okay with this position. So he's buying the 62 puts.
That's correct.
And he's selling 2 of the 59.5 puts.
That's correct. All things being equal, you would like oil to be down when you're doing this because it is a long delta trade. It's up slightly. 62-cent credit. That's $620, Saznoff, not $62, just so you know.
Yeah, and it actually helps my position, helps me neutralize. I'm cool with that.
Well, you must have had a little short.
All right, Simon. I had a little short delta. Okay, good. Let's go next slide.
Next slide we go.
Bat? It's from you?
Bat?
A new bat. D-Dog. Bullish. I think he heard could go into the S&P.
Yeah. Maybe.
Stocks.
I don't think this is the chalk for that candidate, but D-Dog 119, almost 120, up $1.20 today. Been going sideways the last couple weeks.
Hasn't had a single downtick.
No.
Batman can't do it. Can't get long this stock here. 6. IB rank is 6. Can't do it. Can't do it. They'll take away my perma bear card. Can't do it. Let's go to the next slide. Jim from
FTX.
Newport.
Sorry.
Yeah, doing a little FTX, Federal Express. I put a trade on for Wednesday AM 6/4/25 strangle. What is he saying here? FedEx.
Earnings of 624. I put trade in for Wednesday AM. I think he's using the 6/4 options. I think that's what he's talking about, Saznoff. I don't, there are no 6/4. Maybe he did it on 6/4. He did a strangle on the 20th, I believe. I think he did the 16-day options, the regular June monthlies.
Man, these markets are $1 wide in here.
Yeah, or more. And not a lot of volume trading either.
June options are over $1 wide.
Yeah.
July. I don't think this is tradable, Jim. I know you did something. I don't think it's tradable. Let's go to the next slide. I don't like this play.
You don't like the bid-ask differential between the options, correct?
I don't.
Okay, that's fair.
Let's go to the next slide. Joliet Jake, looking at STZ. Constellation Brands, high IV rank. No earnings until July. IVR on a beaten down stock. I'd never trade this stock, Jake. It is beaten down. You're neutral. It does have high IVR. Doesn't have a lot of volume, but it looks a little more tradable than the last stock.
Mm-hmm.
I mean, when I say a little more tradable, I mean literally a little more tradable, not very tradable.
Yeah.
160, 200. I mean, maybe you can get filled. I'm going to test waters.
Testing the waters.
I'm doing a little price discovery here. I don't know where this thing trades, Jake. The mid price just moved by 50 cents.
Jake from Allstate.
State Farm. If Allstate has a Jake, then that's going to be ugly.
That's egregious.
Yeah, Jake, this is I'm doing a lot of price discovery here, and I'm not getting any luck. This is a tough fill. I'm going to leave it in for a second, but NASDAQ down on the day, but nothing yet, Jake.
NASDAQ is down on the day, and Russell down on the day.
We're working it, Jake.
Just up a moment ago.
Literally nothing. We're working it. Let's go next slide. All right, hold on. Let's see. I mean, I walked this thing down 30 cents already. Oof. Not good.
Well, maybe some things weren't meant to be, Saznoff.
It kind of feels like this wasn't meant to be, but we'll see.
Yeah.
SPX, we sold a strangle, very tight strangle. IWM, we did a poor man's cover. I'm sorry, we did not. IWM, we did a call diagonal. TGT, we did a Jade Lizard. Oracle, we sold a Strangle. We sold a Strangle in Oracle. In ABGO, we sold a Naked Call. In Microsoft, we did a Broken Wing Butterfly. In Crude Oil, we did a put ratio spread. In DDOG, we passed. In FedEx, we passed. And in STZ, we tried. And we're still trying. But no bueno. No luck.
No bueno.
Yeah, and it's not incredibly liquid, just so you know.
Mm-hmm. Mm-hmm.
Yeah, so I don't want to scare the children here, but it's not that liquid. That's it. That's all we got.
Beautiful. Well, I think you did good, Sosnoff. You know why I think you did good? Because I'm a Sosnoff fanboy. That's right. But you know who else I'm a fan of? That's right. Jacob Perlman, who's coming up next. It's Skinny on Options Math. We'll take a quick 90-second break. Oh, you're just rolling down some calls.
Yeah, no, we didn't get filled.
We'll be back in 90 seconds. Let's Tasty Live.
We didn't get filled anything else.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. TastyTrade. Make your move.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch TastyTrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, no. Take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at TastyTrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
TastyTrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Tomas, we are back, my friend. You know what that means. Enough out of you. We've got this, man, the skinny on options, man. Jacob in the house. How are you, Jacob?
Morning. I'm turning down this side light for a second. There.
Good morning, kind sir.
Good morning, Tony. Good morning, Tom. How are you two doing in this?
Hello, Jacob. All good.
You now? Did you know?
It is
Can't believe it.
Can't get anything past you.
It did slip past me actually for a couple of days, but luckily my landlord reminded me.
I'm sure he did. Good lucky you got one of those.
Yeah. Yeah, if I was a homeowner, I'd just be late on my mortgage payment. I don't know.
Right. That's right. You'd have no idea.
I never know.
That's right.
But no. Luckily, rent is due, so it is what it is. But how is everything in Chicago these days?
Perfect, man. Perfect. It's 50 degrees and raining. We had 85 and sunny yesterday. Typical.
Good wild fluctuations. That's what you want in a weather pattern, yeah?
Yep. Absolutely.
Well, if it makes you feel any better, here it was 85 during the day and then 40 overnight, so.
That does not make us feel any better.
Does not. I agree with Tom.
All right. I will never try to make you feel better again. Instead, I'll make you feel worse. Let's talk about math.
Let's do it. Which, by the way, my son Vinny has his math final today for school. So
what class is he taking?
He's trying to take a class he can pass.
How old is he?
He's a freshman. So
in high school, college?
High school. Yes.
High school.
Yes,
okay. So it's like Algebra 1 or something.
Yes. He might be calling you over the summer.
Yeah, I'll be very helpful. I'll give him a really hands-on, practical way to solve his problems with full theoretical rigor.
Yes. Thank you.
Yeah, no. A classic problem of going to the math tutors for help is that they make your problem worse, not better.
It's true.
If you want to mess them up for life, have them reach out to Jacob.
Have you considered this possible confusion?
That's right.
I know you think you understand what's going on, but let's get confused.
I don't think you do.
Yes. But today we're going to talk about the Markov property or Markov chains, which are just processes that have the Markov property, and sort of what it is, why it's so widely used in probability theory, and then raise the question of, does it apply to the markets? How much does it apply to the markets? And sort of what conclusions can we draw from that in terms of our behaviors? Let's get into it. We can begin with the definition. A time homogeneous Markov chain. Time inhomogeneous ones are more general. They're also much harder to work with. So things are consistent throughout time, is a random process going through a series of states where the probability to get to any particular state depends only on its current state, not how it got there or other factors like what you're doing in some room to the side. To put that into very formal terms, for any measurable set A, the probability of finding x in A at time t, given all information up to time s, that's what the calligraphic f sub s means, is the exact same as the probability of finding x at t in A, given just x's value at time s, and other things that depend only on x's value at time s. That's what the sigma there is doing for us. It's saying what is the value of x at time s, and then what are obvious questions you could, right? These things on the right of the bars are supposed to be collections of questions that you might have answers to. So if you knew the answer of what is the price of what is the price of SPY yesterday, you would also know what's twice the price of SPY or half the price of SPY. There's other sort of questions you can generate. That's what the sigma is trying to encapsulate. To make that a little bit less abstract and confusing, here's a relatively simplified weather model, right? Every day it's either sunny or it's cloudy or it's rainy. We're somewhere where it doesn't snow. And if today was sunny, then tomorrow is 40% to be cloudy, 80% or 10% to be cloudy, 10% to be rainy, and 80% to be sunny again, right? So it's 0.8 to loop the sunny node loops back to itself with a 0.8. It goes over the cloudy node with a 0.1. It has an arrow going to the rainy node with a 0.1. If it's cloudy, it's 40% to stay cloudy, 40% to go back to sunny the next day, and 20% to start raining. Right? That's what's going on in that diagram over there. And this is a pretty common way to represent Markov chains, at least with discrete time, discrete space, time homogeneous, yada, yada, yada. These are going to be in practical terms of actual working probabilists, these are sort of the backbone of a lot of things, including Monte Carlo methods that we use all the time, even when we, hide the fact that we're using them from ourselves. They're what's going on all the time. Every time the platform hands you a probability, it got there by Monte Carlo methods. Monte Carlo methods work by running these by sort of doing a Markov assumption so that you can model the things using these transitions diagrams. And then running through it many times is how Monte Carlo methods work. So why do we apply Markov chains so broadly? Is this like a valid thing to do? What are the advantages of doing it? Let's see. We'll sort of do those in the opposite order. We'll start with the advantages, and then we'll get to the how valid is it. Right. Let's at least make it seem like a thing we might want to do before discussing can we actually do it. Assume the market is Markov. So let's go forward. So. Powerful facts for working with Markov chains. This first one's not a fact. This first one's just a technique or a bit of notation. If I take all of these transitions, right, the chance, if I say let P sub ij, right, be the probability of going to state j from state I. So for example, in the previous thing, right, P sub cloudy would have been 0.4. Because the probability of going from cloudy to cloudy was 40%. So that gives you what's called the transition matrix for X. And this will contains all of the information about how the Markov chain behaves. It doesn't contain information about what the Markov chain, where it is, what it's doing, but it tells you everything about how it behaves. And one interesting thing is if you give it an unit vector, right, something that's a vector that's just, this makes a matrix. Matrices multiply vectors. If you give it a vector that's just a 1 in one component and zeros everywhere else, representing the system in that state, then multiplying it by the matrix gets you the state after that, or the probabilities of being in each of the states after that. And if you because it's time homogeneous, squaring the matrix gets you the probabilities of being in the state 2 steps after that, cubing the matrix gets you 3 steps after that, and in general, p to the n times some initial distribution vector v gets you the distribution n steps later. If you have a left eigenvector of eigenvalue 1, so something that doesn't change when you multiply it on the right by the matrix, right? So pi p equals pi, then that's then that means that it doesn't change, right? If something was already in a distribution over its possible states, right? It could have been in any of them with given probabilities, then it would wind up in the next ones with the same probabilities. Nothing changes about its probabilistic properties. That gets you an eigenvector. If you then scale the eigenvector so that all the entries are non-negative, it's a result of linear algebra, that a matrix that has entirely positive entries, like our transition matrix. If it has any eigenvectors of positive value, it has one that's all non-negative entries. Then you can rescale it so that they sum to 1. So then it's viewed as an initial distribution, or as a distribution on the possible states. That distribution is called the stationary distribution. It's stationary because when you hit it with the transition matrix, it doesn't change. A really powerful result is that if a chain is aperiodic, meaning that there's not, right, if on the previous slide, rainy and sunny had just pointed to each other with probability a half, right, then there's a periodic loop in it. And irreducible, meaning that it's not just two pieces, right? If the graph that I showed splits into just two separate pieces, right? So you can never get from these states to those states or from these states to those states, right? If it's hailing, it will never be, there'll never be a volcano eruption. And if there's a volcano eruption, it will never be hailing. That would be a reducible weathered model. But if the chain is aperiodic and irreducible, then stationary distributions exist and are unique, which is really powerful. Sort of mathematicians love the phrase exists and are unique. And so, for example, one thing about that is that once you have that, no matter what starting state you put it in, if you run the process for a long time, if you hit it with the transition matrix over and over again, it will come out in about the stationary distribution, no matter where it started. The stationary distribution will become this attractor state. So, for example, in a lot of Monte Carlo methods, rather than running them for a really long time, they can be explicitly solved for their stationary distribution. And then if you're going to run them for a long time, you instead just substitute in the stationary distribution, which is a nice energy and computation saver. So those stationary distributions are sort of the powerful reason why we might care about Markov chains. Let's get to a more hands-on market-related, trading-related thing, right? It often greatly facilitates things. It so frequently facilitates analysis that it's a pretty standard practice to, even if you have a model that you don't think is Markov, you do what's called making a Markov assumption, and you just assume that it's Markov, do whatever math you can to it, get what results you can, see what shakes out, and then you haven't proven any of those things because you had an unfounded assumption in reaching them as results. But then they give you a really nice starting point to go back and look for results, because many of them wind up being true in a broad range of situations, which we'll see why that kind of works on the next slide. But in the general idea is that you can sort of, these Markov methods are better than they seem. And so you can often apply them even when they maybe shouldn't. So, for example, if we assume the price of the price of an underlying is a Markov process, right? We don't know, but we'll say that, how it got to a particular price is completely irrelevant, only matters what the price is. Then we would see that following a strike breach, the underlying is going to be still 50-50 to go up or down from there, because it doesn't matter how it got to breaking your strike. Once it is there, it's just like an underlying that started there, so it's going to go up or it's going to go down. That's about 50-50. And here, Tony, if you want to pull up the platform, we can see that this has a really practical effect where the probability of touch is almost exactly twice the probability of being in the money for all options, all underlyings, all the time. It's only approximately that because there's a little bit of a drift thanks to the risk-free rate. So, it's not really 50-50 to go up or down. Even in the full Markov version, it's slightly more likely to go up.
And shorter dated options are going to be more to 50%, almost exactly. Longer dated are going to be a little bit more room for wiggle here. You can see here in June, you got 25% for in the money, and you've got a 50% chance of a touch, basically exactly what you said. If I go a little bit further, I'll go all the way out to August and go a little further out of the money. Well, it's basically the same here, 24
Yeah, you need to go out like a
52.
year to see much difference.
Yeah.
Because
you're right.
The difference is entirely due to the risk-free rate, and the risk-free rate's not very big. And so you need to go out pretty far before it really starts having like a noticeable effect, right? Is 53% double 26%? There's some rounding going on.
Sure, makes sense.
But right, so that's sort of a nice application about what we can get if we just assume Markovness in the market. So then let's think about why we're sort of allowed to assume that a lot of the time, even if it becomes impractical.
And that would be equities, ETFs. It doesn't matter, right? I mean,
commodity, equity, ETF. It's just a property of general probability. It's fully theoretical. For when we preach about being underlying indifferent, this is truly an underlying indifferent.
Understood.
Yeah, so let's go forward one, and we'll sort of see why we can get away with assuming the market is Markov. And I apologize for the small text on this one. But so the idea is that the Markov assumption and the efficient market hypothesis are very similar. They don't quite say the same thing, but they do say something quite similar, right? The Markov property is supposed to be memoryless, right? That what's going to happen in the future depends only on where you are right now. The efficient market hypothesis says that where you are right now incorporates all of the past information, right? That there's no better price, current price, based on past information than the current price, which is very similar to a memoryless condition. It's slightly backwards because it doesn't say that the whole future distribution is centered on the current price. It just says that it's is based on the current price. It just says that it's centered on the current price, right? It doesn't tell you, right? It would make it impossible to distinguish between two underlyings that had equal spot prices but different volatilities. Right? If we tried to say that it was fully Markov, right? That the only thing that mattered was the current spot price and not how you got there, an underlying that got there by going like this and wildly fluctuating to be $100 today would be the same as an underlying that had gone up $1 every day for the past 50 days and was now $100 today, even though those two underlyings are pretty different in how they've been behaving. A pretty common technique, though, in the full theory world is that you expand the state space to apply Markov methods to more general systems. So, for example, you can include, if there's a little bit of memory dependence, you, instead of saying that the state of the system is where it is, you say it's where it is plus one bit of memory, right? It also knows if it was raining or sunny yesterday. It doesn't know anything further back than that. And then that expands the model, but it then makes the Markov methods apply. So then you can find If you didn't have a stationary distribution before, you'll have a stationary distribution now. It just also includes this like memory bit. But for the market, we can be better than that. We don't need the memory bit. If we use local volatility or a model like that, we can, instead of using the memory bit, we can take in the option chain, right? If the state of the underlying isn't just its price, its spot price, but also the prices of all of its options, right? I would like to just say it's volatility, but in fact, I need like more than Black-Scholes volatility. I need the full option chain. So I'll say it's the full local volatility. Then it does behave in a completely memoryless way, right? Then if you had the option chain, then you know the future forecast probabilities. And so now you really don't need any memory component to looking at it. And so it is a Markov process. This is why, like in a more concrete way, why the in the money percentage, probably touch percentage times 2 relationship holds, even though what we were saying wasn't exactly Markov, is because it is Markov in this broader sense, even if it's not Markov in this like price dependent only sense. So this lets us do all of the theoretical applications of Markov properties. It isn't great because the computational complexity balloons, right? Instead of the state of the system being a single number, right, the price of the underlying, it's now hundreds of numbers. It's the price of the underlying and the prices of all of its options, which means computationally it can be impractical to actually work anything out. But theoretically, we get all of the benefits of being a Markov process, even if the computational advantages go away. And a theoretical advantage that's not a practical advantage is my favorite kind of advantage. So there's my summary of what are Markov chains, why do we use them, and how valid is using them in the market. And then just, our one little takeaway, whenever you doubt yourself of do Markov properties matter, just, think about, do you care about probability of the touch? Do you care about probability of the money? Those matter to you as an option trader. And those things relate directly because of the Markov property. We can go to takeaways.
Beautiful.
The Markov property is a rigorous way to say that a random system is memoryless, that how it behaves is based only on where it is and not how it got there. It allows for powerful analysis via stationary distributions and facilitates Monte Carlo methods to get rapid results. And if we expand our conception, almost any system, and in particular, thanks to the efficient market hypothesis, the market itself, can be viewed as a Markov system. This may lose some of the practical benefits of Markov analysis, but keeps all the theoretical advantages. And then as our little practical effect of this, we observe that the probability of an out-of-the-money strike being touched during the life of an option is approximately, because of the risk-free rate, twice the probability of it being in the money at expiration, which is just, it's nice when that works out. Remember, in the platform, it's not using, it's simulating many possible trial runs of the underlying and getting these probabilities. It is not computing the one probability and doubling it to get the other one. It is, in fact, doing them separately and getting exactly twice the result, which is a nice confirmation of when the theory and the arithmetic line up. It's makes me feel relieved. I'm always anxious that somehow the theory is not going to hold.
Do you feel relieved?
No, but I feel like this whole Markov discussion is just like a little more confusing than like an efficient market theory discussion. I feel like they're the same thing, though.
They're very similar. The Markov assumption is stronger than the efficient market hypothesis.
Yeah,
right. The efficient market hypothesis says that the future distribution has to be centered on the current price. The Markov assumption would say that the future distribution needs to be totally determined by the current price. So it wouldn't let different volatilities exist unless you expand the current state of the market to also include volatility. At which point they become the same assumption.
Yeah. So I get that, but like I'm trying not to overly confuse things. Both essentially disregard historical performance.
Historical performance, right? They both rule out the concept of momentum.
Yeah,
right?
Yeah. There's no such thing as momentum. There's no such thing as it basically destroys the whole technical analysis argument of what happened in the past is going to repeat itself. Yeah, of course.
Yeah, exactly. They both say that that's not a good way to look at things. That means that you're ignoring the truth and favoring your own made-up stories about how things got here, and that it's probably better to try to focus on things that are real, like transition probabilities, probabilities of being in the money, probability of a touch, current volatility,
I got it.
current
Well,
prices.
it's essentially, it's very much what we do here at Tasty. Everything we do.
Where it gives you nice reasons to neglect all the things that we say you should neglect. Like, how did we get here? What's going,
I got it.
Where just focus on where you are. We have to live in the present. We can't be bogged down with the past and how we got to here. We need to be Markov. Be as Markovian as possible, everybody.
Markovian. What was Markov's first name?
Antonin, I think. I can check this. Andrei Markov. He's a Russian fabulist of
got it.
Late 1800s, I want to say, maybe 20th century. Late 1800s, early 20th century.
There you go.
Okay. Thanks, Jacob.
Thank you, guys. Have enjoyed.
Thank you, Jacob. I'm going to take a quick 90-second break and come back. Even the S&P's catch a little bit of a bid up 45. I'm sorry, up 15. NASDAQ up 50. Russell unchanged. Sadnov. Bonds up 101, 113.04. Not so bad. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. TastyTrade. Make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at TastyLive.
If you missed the live show, here's our cherry on top weekly recap. How was Nashville? Did you go hiking? You were going to do a bike, you were going to go fishing, and you were going to visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He hands me a
fishing area.
He hands me a fishing pole, and he goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
Wave the guy down. I go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
How was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down. Telling Corinne, this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you gotta move
I like how
quickly,
you're
'cause
clutching
people are
your
getting-
pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're on the road for
it is an absolute up for grabs show with 1,000 people running around grabbing stuff, eating
That
stuff.
is like crack for me.
There's like barbecue sauce flying all over.
Yes.
That place is not a beautiful mecca of anything.
Who do you think the best dressed on-air personality is of all the Tasty people?
I probably guess I got to go Ilya.
Ryan Grace, easily.
Oh,
yeah, right, Grace, 100%.
He's very preppy looking. It doesn't do anything for me.
Oh, who's the guy? Who's God on the research team? He's got to be in that top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah.
He throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
So, Dr. Jim, throw him out. He's horrible.
Jim wears children's clothes. It's easy for him to dress.
This is
Let's
It's
see.
like granimals.
Yeah.
You can throw me outside. No, don't worry about it.
Oh, I'm throwing you out because you got
yeah.
old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
Get the full scoop by checking out the archives at tastylive.com.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on TastyTrade. Genius loves company.
Tomas, we are back, my friend, but you know what that means. Enough out of you. That's right, TastyTrade World Headquarters, your friend of mine, the very popular Mr. Scott Sheridan from the Scott Sheridan Studios.
Golf clap.
Wait a minute. Followed by
talking about golf
followed
clap.
by followed by Johnny Trades.
Followed by Johnny Trade. So 2 sports questions.
Okay.
Yay, thumbs up or thumbs down to Tibbs getting fired by the Knicks?
Thumbs up.
Okay.
Really? Yeah, he needed to be fired.
I agree because he got him to a point, and at some point
There was no way
it's
he
the
wasn't.
coach.
Yeah.
Yeah, when you have a home court to make it to the finals and you lose 2 games at home, I think that was.
No, I think the decision was made a long time ago. He wasn't the right guy. He got him as far as he can get him.
Well, if they won the NBA championship, they're not getting rid of him.
Oh, then they're keeping him.
Yeah.
But the decision had been made to get rid of him.
2. Steph Curry's talking about what he wants to do after he retires.
He should be an announcer.
Well, he's saying announcing. I mean, obviously businessman.
Yeah, he's good. Yeah.
Great. Golf. So on the what do they call the
Corn Ferry?
Is that the Corn Ferry? He shot a 74-74 or something. Pretty impressive. But that's impressive. That's really impressive. But that's not going to get it done.
Might have been like a pro-am, I forget.
No.
Was it Corn Ferry?
No, it was one. It was some tournament. It was I don't know if it was Corn Ferry, but it was one.
If I was running the Corn Ferry thing, I'd let Tim play in it.
And what they said was, think of it this way: there's no guy out here who could play in an NBA game.
Oh God, yeah.
Right. Yeah. So that's impressive.
But you question? I mean,
no, that's impressive. No. But 74-74 is not getting it done on tour. He's talking about like he'd like to go on tour. Did you say Max Homa? He was in the top 10 last year. He had to qualify for the U.S. Open. He didn't make it. He lost in a playoff.
Well, and he 3-putted. Like,
is that what he did?
Well,
and he carried his own bag.
Yeah,
his cat, something happened. The guy got hurt.
I saw Xander Schauffele in an interview say that listen, Jordan beat me straight up. Golf. Last time we played.
Jordan.
I mean, dude, these are world class.
No, sold.
Said he did.
These are world class athletes. They're going to be good at everything.
Said he beat me straight up.
Sports wise.
He said that's what he said.
You believe that?
Yeah, I believe he beat him. He could beat him in a single round.
I mean, they're no potential MVP at Ojibwa last weekend, but they're good.
We did have. You'll like this, and this is kind of.
This was it's early.
Yeah, we do it the first week in June, but the first week in June today.
It had to
this
be
was
cold.
Sunday.
The lake's freezing.
Oh, the lake was frigid. The lake was frigid.
And it's got to be cold in northern Wisconsin.
Yeah, it was cold. But we had, you'll like this, a pro athlete married into, family of us people.
Us people. Oh, that's nice. You're associating with us.
Yeah. No,
Nice.
I'm happy.
Pro
When he's out, I'm all yours.
Pro athlete's not one of us.
Oh, pro athlete. I'm talking about a top player in the league.
What kind of sport?
Football.
Married one of us?
Yeah.
Oh, nice.
Quentin Nelson.
Who?
Never heard of him.
Offensive lineman for the Colts. He was there. He played hoops. 6'5", 330.
I would not want to take a charge from him.
He is the biggest. It was the biggest human I've ever seen.
6'5",
330, and that's what he's marked at. His neck was this big. It was the biggest thing I've ever seen.
Please tell me he took the bottom.
Wait a minute. Bigger than Tom's neck?
Bigger than Tom's neck.
Wait, again, please tell me he was on the bottom butt because you don't want that guy.
I think we brought in a special bed for him.
Could he even fit? You're 6'5", 330. You're not fitting in a.
No. You need You need a special mattress.
Okay, so wait a minute. Ojibwa, because at Kawaga, bathrooms were down the path a little bit. In Ojibwa, do you have them in? Because if it's 30 degrees and you got to go.
Well, we do have, but there's an unwritten rule. It's no number 2 in the bathroom in the cabin. So you got to walk to do that because, Oh, it's that's the rule. But Quinn Nelson was there. Played hoops.
Never heard of him.
He was a great hooper.
I never heard of him.
Quinn Nelson.
No,
he's like
There's no chance you knew this guy before the weekend.
100%. There was rumors that the Bears were trying to trade for him. He's
he's
a
still
guard.
playing?
Yeah, he's like a 4-time Pro Bowler. He's one of the.
He's allowed to play basketball.
He's a top 25 player in the league. I'm not sure if he's allowed to play. It's kind of on.
We're not really saying he played or didn't play. You don't want to give him a trouble.
Yeah.
He
We're not
there.
gonna. Yeah. He was there. Yeah. Not going to confirm or deny.
Could he dunk?
I'm sure. Yes.
330 is pretty big. 6'5" is tall, but 330.
He's really big, but
His hands.
He was caught. The basketball looked like
a 16 inch softball.
It looked like a wiffle ball. He would just palm the thing. It was amazing.
I'm sure.
Amazing. Yeah. We hung out. We're friends.
Tight.
Cool.
We're Facebook friends.
Camp friend. You're camp friends.
Camp friends.
We're Facebook official.
Yeah. Camp friends.
Well, how did he get sucked in?
Married a Jewish girl.
I understand, but do they have kids?
No, they're getting married.
Then why would she have a connection to a Jibba? What was the sister? What was the girls' camp?
No, she is the daughter
Her
of.
family owns a camp.
Oh, the family owns the camp.
In the not owns the camp, but is
Got it. It's okay. You could
investor.
You could say that. Oh, investor.
But they go there. They're a bigwig.
A bigwig at a Jibba. What's the girls' camp? What's the camp?
No, we got some bigwigs.
What's the girls' camp for a Jibba called?
Maramita.
Yeah. All right.
No, nothing to do with
The
Maramita.
6 went to Maramita.
No, Quentin Nelson married into the family
Of bigwigs.
of bigwigs
At a Jewish summer camp.
At the U People camp.
My guess is he's doing.
Are you guys done with the camp geography?
No.
He's doing much better playing for the Colts. All right.
Yeah. Well,
Tony, do you ever go to these?
I was only an investor.
Don't you get to go through association with your son? Wait a minute. And how come Vinny hasn't gone?
No, this is an alumni thing.
Why is Vinny? Wait, more importantly, why
Vinny,
is Vinny?
should go.
Vinny's too valuable.
Vinny should go.
Mom won't let Vinny go?
Vinny's too valuable.
Something
Nick
could happen while he's away at camp.
My dad shipped me out at 10. Vinny's 15 and can't leave the house.
Don't worry, we shipped your sister out at 9.
Yeah.
She was a problem child.
Yeah.
You made it to 10.
Oh.
My kids started, I think, at 7. When did your kids start?
Not at overnight camp. 7.
Yeah, they did 7, 8. They were little. Lila was little.
Really? Wow.
She was a 7 or 8 when she went. I mean, Max was a camper. He loved
Yeah, my kids were young.
Well,
They
the mom was a 6. You would think the kids would get a little bit better. That's what you want. I mean,
Ugh. All right. Well, listen. You've got the real talent in here with Johnny Trade. So how about if I get my list? I do my list, and I'll leave it to you.
Do your list and then get the hell out of there.
Whoa. One little comment about camp and the missus wearing the pants, and all of a sudden it's a little testy. Right?
Okay.
Oof.
Okay.
All right, top 15 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Time for you, number 15, DLTR at a 23. For everybody else, Tesla at a 28, CRWD at a 14, PLTR at a 31, Meta at an 11, NVIDIA at a 4, CRWV at a 58, Apple at a 23, Microsoft at a 4, AVGO at a 33, HIMS at a 40, TLT at a 27, APLD at a 61, UNH at a 33, Hood at a 29, and number 15 for Tom, DLTR at a 23, rounding out the next 10, GLD at a 42, Nike at a 56, and MU at a 43. So I just started listening to podcasts. I'm looking at Microsoft. Steve Ballmer.
You ever see the dance video? It's just a classic.
When he's on stage, when he's launching a product or something.
Yeah,
I think it did. But anyway, he went on the show. Not the important part of the story. When he left, so they said he's probably the greatest investor over the last 20 years, which I disagree with because, I mean, I guess you could argue this. He never sold a stock.
Yeah.
So he was worth $20 billion, and now he's worth, I think, $130. That's how much Microsoft has moved.
Yeah.
It's amazing.
Yeah,
That's unbelievable. And
we were just talking about the Nasdaq itself, the Qs going from $25 to $500 and change now in the last 10 years or so. So
it's unbelievable.
Everything.
Everything.
Everybody's worth like $100 billion right now.
Yeah.
Everybody?
Everybody who's a boomer.
You get you get a car, you get a car, you get a car.
You get 100 billion.
You get 100 billion, you get 100 billion.
Everybody who's a boomer, the greatest
And
investor.
with 100
in
billion,
the
you'd
world.
buy a sports team.
Oh, for sure. See, and I think I like what Joe Mansueto's doing, where he's putting his own money up to build the the soccer stadium. It's good.
Oh, I think it's
on
great.
the south side, Banana talks
It's great for the city.
Who is doing this?
Mansueto, Joe Mansueto. He owns the Fire.
Oh, he owns the Fire?
Yeah. So he bought the Fire. He bought half, and then he bought the other half. I think he only paid I want to say like 50 or 100 million for the Fire. Wasn't crazy.
I don't know who Joe Mansueto is.
Yeah, you do. Morningstar.
Oh, he's the Morningstar guy.
Yeah, it's Morningstar. You know Joe.
I don't know him.
You've never met Joe?
No.
He's a Parker. Oh, you remember Parker. Sorry. Oh.
You're afraid.
Sorry. You never went to
Johnson will
the
get his grubby little hands.
Lila's
Don't
good
worry.
friends with his son. He's a nice guy. But, I mean, good for him.
Good friends?
Yeah.
I don't know him. I never met him.
Anyway, so he's building this. It's $650 million of his own money, which is great. Great for the city. So the Bears, if they're listening, they should think about that.
Mm-hmm.
City can use all the handouts it
Why
can get.
put the tax
You're right.
on us? All right, I'm done. Go ahead. Take it away, Johnny Trades. Let's go. Play some music.
Johnny Trades. Couple trade ideas.
Well, let's put it this way. Nobody's putting up any money for the Fire to build the stadium. All right. It's, I mean, I don't want to burst your little bubble with Joe Mansueto, but nobody was putting up any money.
Talking.
Johnny Trades, all right?
It's more important to have the Bears in town than the Fire.
Wait. Scott's not even in the room anymore. Let's talk trading. Go ahead. Nick.
Yeah. I got trades. Want some?
I'm ready. Yeah.
All right. First trade. SPY.
What about it?
I think you got to get a little short delta here. We got the 6,000 handle. It's been a beautiful bill of a rally here. We're getting a little short delta here.
Hey,
I'm
what do you
doing
wanna
a put diagonal spread August and July. So I'm buying the 590 in August. You get a lot of time on this.
August 590. Got it.
Buying it. Selling the 570 in July. 20 points wide for 784. You got vol very, very low here. It's a long vol play. You got a little bit of
580s.
Because I want to get paid on a down move.
580. All right, I'll split the difference. 575.
Welcome to my world, Nick. Welcome to my world.
It's tough. I just remember the
Did you just say oi?
Yeah, I gave you an oi. I just remember the good old days with Tom where, he'd say, I'm just, shorting. I'm just gonna short some E-minis.
We whack them in how?
Yeah, I'll just short some E-minis and hold them for 30 days, 40 days.
We're done.
No problem.
Take a fill.
All right.
Look at these bonds.
1 for 1. Next one here. AVGL earnings after the close tomorrow. I mean, the stock has just gone straight up.
Yeah.
I'm doing a broken wing butterfly in the weekly. You might like this because it has no risk to the downside. So I'm buying the 275 call. I'm selling the 280 call. I'm selling the 285 call, and I'm buying the 300. So it's a 5 by 15. You got a little bit of extra room to the upside. Your break even is at 290.
Are you bearish or bullish on this?
This one is omnidirectional. So I got no risk to the downside. If it grinds higher, I make a couple bucks.
I'm super bearish in here. I'm playing to the downside.
All right. Well, this is kind of in. If you've got all that short delta, this one is, if there's an inside up move, it might hedge you a little bit.
What are your strikes?
I bought the 275.
What cycle?
The 2-day, June.
Oh, the 2-day.
I'm going the 2-day. It's a little like a shot trade. You got no risk to the downside. You do it for a small credit. So if the stock goes down, you're going to make a couple pennies on this.
Hey, what are you doing? What strikes?
275 for the call, buying it. Selling the 280.
Right. Okay.
Selling the 285.
Okay.
So you're staggering it a little bit. And then I'm buying the 300 just to cap the risk. If you want to, just kind of go naked there, you can move the 285 to the 290 and do this probably for like a 50-cent credit or something like that.
So you're going to torture me here. So you're in the 2-day. You want to buy the
275, you sell the 280, and then you could sell any call above it and do it for a small credit. You have no risk to the downside. If you get an inside up move, you probably make a buck.
No, I don't like it. It's just confusing, all the strikes. All right, what else you got?
Too complex for him.
Seriously, this is the godfather of trading. He's telling me a broken wing butterfly is too confusing.
No, it's not that. I have every strike already out. I don't.
It's too big. The position getting too big. It's I got all these. I don't need you, little Johnny trade. That's what you're saying. That's what you're saying. Screw you, Johnny. I'm too big. I got too big a position. Yeah, I'm this and that.
I like my position.
All right.
What's next?
You kind of like the assumption though, because you're going to do it, but you're fully loaded.
I like the assumption.
Maybe when he graduates, from being a freshman trader.
Yeah.
Yeah, I like the assumption. I just don't. Yeah, I like it.
All right.
Okay.
Nike, you got a position?
Yes, I'm pretty long.
Okay, I'm leaning slightly long here, but I think it's a vol play. You got a high implied volatility here, relatively high IVR. Earnings coming up middle of June, so it is something to think about here. But I did like a iron fly / synthetic straddle type position here. So I did the 62.5, 50
Which is the expiration cycle?
I'm going into July. So I sold the meat of this position is the 62.5 put and the 65 call. So you're straddling
62.5 put, 65 call. Got it.
And then I bought the 50 put and the 80 call to define the risk. I did it at 556. It's a risk one to make one type trade.
80 call.
Yeah.
So you're doing it in July, the stuff you have on the screen? Is that what you're doing?
Yes.
Got it.
Yes.
Got it.
I don't have the screen here, Mr. Batista, smart ass.
Oh, yeah, you do. Oh, yeah, you do. Oh, yeah, you
I do not. Tell him it's off.
Yeah, it is off. We're having a little kerfuffle here.
Don't support him like that.
I'm sorry.
Never go against the family.
I got to be truthful. I'm an honest guy, Dad. I'm an honest guy.
You'll find yourself back at Ojibwa.
Build 570.
There you go. All right.
Not the best fill in the world, but 570.
Yeah. All right.
You know what stock you can't get filled anything on?
What?
Core Weave.
Yeah, there's a huge borrow rate on it. That's
I know, but I can't sell it. I mean, the markets are like $1.50 wide.
What are you trying to do there? Because I did a little something.
Sell some premium.
Do an upside call ratio spread. Big wide one.
I love the short premium in there better, but I can't get filled.
Yeah. I mean, it's flying around. It was up
around.
40. What's it up today?
Like $6 or something.
Really? Wow. All right.
Yeah. Okay. All right. Good news. Bonds up 111, Tony. Get excited.
That's the good news because it's good for you, right?
Yeah.
Yeah. What's good for me is good for everybody.
That's right. Center of the universe.
It's such a Democrat. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
The beauty of thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new TastyTrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. TastyTrade. Download today.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Dierking, the beautiful brunette. To the left of me is Miss Jenny Andrews, and this is a very special episode for me. Not only are we at the SIBO floor, but what else we got going on, Jenny?
Oh my gosh, we have such a special guest today. Our viewers have watched him grow up since he was, what, 4 years old?
4 years old.
We started the show, he was 4 years old. Now he's on his way to college in a couple months.
18 and 6'5". I wish I could rewind the tape, but we're going to bring him up. I'm going to get a slow clap for my son, JD Dierking. Come on in.
So excited to have JD visit
Hi,
us
how's it
today.
going?
You can stand up straight. He's very tall, but he's in the camera.
Yeah.
Nice to meet you guys.
We've been talking. Nice to meet you
No,
guys.
He's talking to the viewers. He's talking to the viewers. He's
The
a pro.
viewers.
He's a pro.
He's looking into the camera. We're going to keep this short and sweet, but they've heard so much about him over the years that we had to put him live on camera. Here's my son going to UK next year. First time on the trading floor, though.
Yeah, I love it. I mean, it's a really cool place. A lot of people. I mean, I feel like it'd be a great place to work at in the future, maybe.
It was a great place to work.
So the viewers know we've been watching JD's account through Liz since you started trading when you were 18.
Yeah.
How do you like it?
I love it. I mean, it's a lot. There's so much you can learn, and I would love to just learn more.
I asked him earlier today what his favorite position is in his trading account. JD, tell everybody.
Okay, hello. The one that you got me for my birthday.
That's not a
Yeah.
staged answer. I don't know what is. If that's not a staged answer, I don't know what is.
I did not tell him to say that.
Yeah, it's my favorite.
How do you feel about archery aviation?
I like that one. That's the one my dad told me to buy. It's great. I like it a lot.
Yeah. And are you still holding on to your Tesla position?
I am, yeah. Sometimes that one's up and down, so.
Yeah, Tesla's
Yeah.
been on a rough ride. All right,
Yeah.
JD, we want to say thank you very much.
Yeah.
He's brought two of his friends here as well. We've also
Yeah.
got Maxime and Faraz, who are future traders. Actually, they are future traders of America, and they're future traders.
Yeah.
Oh,
like they're futures traders.
They're singing futures,
Yes.
and they're the future
And they're future traders of America.
All right.
Yes.
JD,
All right, thank you very much.
Thank you guys for having me. Thank you so much.
Oh my gosh, that was fun. That was the first time we've had JD on our show live. Well, the kids came in long ago. Long ago.
And they filmed a commercial. He's never been live
yes,
before.
but he's never been live on our show. And that,
do you remember, like,
when I had Sean Rossler live. Okay, you boys listen to this. Sean Rossler, one of his college roommate, was live on my show one time because he won it at a...
Oh, yes, I forgot about that. You auctioned it off at a gala.
I auctioned it off at a gala, and he slowly started to fall off the chair the entire time he was talking to me. I was like, you gotta be kidding me. Get back up here.
And then I think after that, we said that we were told we're not allowed to auction off live guest spots at galas anymore. But I think that raised a lot of money for the school.
It did. And bought by his best friend. All right, what is the market doing today? SPOOs are up 13.75.
13.75. It's kind of been an inside day. I was just telling you before the show started, we have a great study today by Jacob, and I just took his study, put it on exactly what I saw from his study, and in SPX 0DT, and it's already off.
Which is... did you do 25%?
25%.
That's amazing. Now you have to have a certain type of day in order to have your 25%.
An inside day.
An inside day.
And that's what we've got. We've got an inside day. So it's already off.
Yeah.
And I can see on Twitter, we're also taking live tweets, and there are lots of people on Twitter putting on the 0DT trades today, too. So we'll go through Twitter, we'll go through Jacob's new study. I don't know how he continues to come up with new studies week after week after week.
Well, he's above our pay grade, Jenny Andrews. Jacob is smart. I was telling Jenny, I silenced almost everything in my phone except for Teams. And at 1:48 this morning, my phone's going off, and I was like, what is happening? It was Jacob.
Why on earth would you leave, like, Teams notifications on?
Forgot to hit it. Forgot to turn it off.
Okay, Jacob doesn't live in Chicago. He lives in California. So, and he's a late nighter. He's working on these studies, midnight, California, which would make sense that you're getting the Teams alert at 2 a.m.
2 a.m.? Yeah, 2 a.m. Yeah, Jacob. I was like, I love it.
Some people work better at night.
Some people do.
You are a morning warrior.
I'm a morning warrior. You're more night, I think.
I'm more night.
Yeah.
Yep. I work better at night. Just, I don't know. Morning, I have a hard time getting out of bed.
I know you do. All right, but we've got a jam-packed show. It is also Wednesday for What's Your Assumption as well. We'll see if we can get to some of those. We looked at them and we vetted them. We'll see.
Okay, we can pop in the platform to take a look at what the market's doing. We have SPOOs up 14, 15, 15, not doing too much, just kind of sitting around here. Earnings yesterday, the only one that I think is a big mover, crowd, down 20, which isn't bad. It was down much more.
What did it open at? Because its expected move was 35.
So it was down 40. It was down.
Okay,
it was down. So 468 now, and look at that bar. It was down to 445.
Okay, so significantly lower from
23 points lower than it is right now.
I want to say, and I mean, correct me if I'm wrong, because I was kind of touring 18-year-olds around, but the other big mover was HPQ was up a ton, or HPE? I don't know which one it is.
HPE, I think. I think that... So HPE is Hewlett-Packard, and it used to be HPQ, but now it's HPE.
Wait, so they had earnings. Are they down?
Oh,
okay.
So look. It was
it was up huge. I was listening, and they were saying, oh, it's up so much.
It was up to 1917, and now it's right back down.
Yeah.
And we've seen that this week. Stocks have a big move and come right back.
Yeah, we have.
And maybe last week. It just seems like we've had some of these on earnings move and then come back. Look at A&F.
So, I was thinking about that this morning because that was true. We've seen these moves. Do you remember that one trader I was telling you from that Market Watch book? Not whatever it was, Market Wizards.
Oh, Market
book,
Wizards, yeah.
Where they would say if it's up that day, they're going to put the bullish trade on. That wouldn't have been working in this environment.
No. A lot of these were up on earnings and by the end of the day down to almost unchanged.
Yeah.
So, and that's what we're seeing in HPE right now. That was it for earnings yesterday, and I think today we only have one, MongoDB.
Yeah, Thursday's our big day in earnings. MongoDB. We're not going to trade MongoDB unless somebody wants it. And what's your assumption? We're not going to trade it.
MDB, MongoDB, $198, near the bottom of its range.
I mean,
what's the expected move? $25 expected move.
Wait, here's my question. Remember the trader Mongo? Is he still down here?
I think he's down here.
We're going to have to ask, as a floor official, as my guy Gary walks by, I'll ask him.
I think he's still, I think I may have seen him, Mongo.
I don't know if he's still down here or not. But
was it MGO or MN?
I don't remember.
I don't remember.
I don't
know what three letters can give you Mongo, because you need four. Do you know what I mean?
Well, MDB, we know it's MongoDB.
Yeah, like we know there's MongoDB, but like you need four letters to come up with Mongo.
True.
So I don't know how that guy got his name.
Never been spoken. We don't know
how that guy got his name. All right, let's take a look to see if there's anything. I know bonds were having a big-ish move up today? Yes. Look at the bond. Let's talk about bonds. Look at this bond move.
Okay, yesterday was a loser and today it's a winner. I can't see that one little corner, but that's okay.
Oh, and I say big move loosely. If you look at it on the chart, it doesn't look big, but it's up a full point.
Yeah, that's a big move. That's a big move for bonds, and that's the big. Do we want to close that? That's the new one we put on. That's the new one we put on.
No, we're not
going to put on a new one.
We're not up enough. We're up $70 today, but since we put the position on, we're only up $23, so we're not going to close it. I will put in a 50% GTC just in case we ever get a big move in bonds and we're not sitting here in these chairs.
Yeah, I would put it.
Or we're not in this account.
The other not breaking news, but I want to tell you, we don't have an SPX trade in right now. I think we should put one in now.
Oh yeah. Okay.
Let's put our SPX trade in. And yesterday at about 2:45 p.m., our SPX trade from yesterday closed at 10%. So that was good. I thought it was going to be more of a loss. We came back, we pulled back at the end of the day yesterday, so we were only up about 25 on the close.
So here it was yesterday, SPX at 10:11. We sold this iron fly for $8.15, which seemed a little cheap to me.
It did. And then what time is that? 2:45.
7:35 was what we bought it back for.
10%
at 2:46.
Yeah. It was the end of the day. This came in under the wire. So that's kind of what we're doing here. We're putting our it's price point in and leaving it.
Okay, so it's very, very low risk, right? If we just make this $10 wide, $10 wide, we're taking in $8.30.
That's not bad.
$8.20. Similar to yesterday.
So spoos are up 24 when we put it on. So
that took all day to get.
All day. But it's an iron fly.
I know, but our drawdown is so low on these. The risk is so little.
Yeah.
Today, when I put on my $20 wide, I only collected $450, $460, and it was $20 wide, so it's $1,500 in risk. Versus this is like $160 in risk.
So we put this in, but I want to make sure we keep the GTCs in, and I'm not looking for 25%. My bar's a lot lower than that.
No, and I have to talk to Jacob about that. Every study is like managing at 25% or managing at 50% or managing at 25% or not managing at all. I would like to see results of this trade managing at 10% since it's what we're doing right now.
Yeah.
Let's ask for it.
Because his study was 25%.
Today's study is showing 25% or 50%. Right.
What's going on in the broken wing butterfly?
Well, if we just put this trade on, it's down.
Okay, that's fine.
So I'm going to close 10% on this one. And honestly, if we're taking in over $8, 10% is $80.
Yeah.
I sold that $20 wide for $450. 25% wasn't much more than $80.
No.
So it's like,
but with less of a drawdown. But I do like these. But it's kind of for every risk appetite. We're looking for a lower drawdown because this is a smaller account. You have a bigger account. You're okay with the drawdown.
Well, I don't know. I'm not sure. I'm not sure if I'm like sold on those or sold on these because these are kind of nice because so far they've been working.
Yeah, they have been working. Okay, so that's in.
All right, that's in. That's in. Okay. And we don't need to keep an eye on it. We know that it's not going to fill. And that's the difference. The wider ones, bigger ones, further with the delta, they'll fill sooner. Like this won't fill till later.
It won't fill till later. And that's okay. That's why I was surprised when you said you got out of it. I thought you did this. That's why I was like, oh, no, got out of it already.
No, but it was, I'll show you. We'll go through all the different scenarios. I'll show you which one I did. But I couldn't believe it closed so fast.
Yeah, that's good. That's good. Okay, anything else that we need to manage or anything else have earnings coming up?
I don't.
Tomorrow's the big day. You got Lulu, AVGO, and a bunch of things like that. Other than that, nothing else needs to be managed.
No, I don't think we have anything.
The Dollar Tree 100% is an old one. Oh, we did DG.
Yeah, and
same thing.
Okay, wait. No, that's the old one. But where's
DG and DLTR? It's on go.
Oh, DLTR.
Yeah.
Oh, so it's down. We did the downside, and it's down. So it's at our long. Let's go. Okay, so this is interesting. It's at our long, and this is a weekly ratio spread, and this is not winning any more than we collected. So
it shouldn't because it's not through the long.
No, but at the long, you would think
that long is losing. The 88 is losing $8 right now.
Yeah,
it's weird,
and it's at our long.
But nonetheless, I don't know.
I want to take a look at and see if these are wide markets too. Oh, that's what I was thinking. These are pretty wide markets too, and there's still $1 left in the shorts. But this is doing what we wanted it to do.
It is. No, well, you want it in the middle. But we know those butterflies, and we talked about these. Those butterflies aren't going to open up until the end.
Right. Well,
and the end is the end. It's Friday.
Sometimes you have ratio spreads and it goes to it or goes to your long and it is a winner. It depends on how wide it is. It depends on how wide it is. We only have $2 wide here, so it's not enough of a winner to take off. It did exactly what we want. I think we have to just wait.
We can wait. You can, yeah. I mean,
yeah. There's nothing.
$17. That's fine. Okay. So that's that. Do you want to jump into Jacob's study, or do you want to go to Twitter?
Sure.
Or do you want to do Twitter?
Well, I guess we can take a look at Twitter, see what we have coming in. I'll go top down. All right, I am Jimmy. Need advice.
Whoa. That's above Jack Tucker. I was like, I don't have that one yet. Okay, what's the advice?
Okay, I need advice. I have a bullish zebra, which the stock price is now way lower than my long call. Okay, so you put on a bullish trade and the stock went down. Didn't manage in time. That's okay. Loss aversion. And if you don't manage in time, if the stock keeps falling, you could be better off. It's not
it does, because it's defined risk.
Now I feel I can close my short call for a penny to ride the recovery with the 2 long calls. If the short's a penny and you want to just leave your longs, they're probably worthless.
They're probably not worth that much.
But
anyway.
There's no reason to close those.
So that's not what we want to happen. I am Jimmy. Love the handle, by the way. But that's if your short's a penny, close it. I've done it before.
I have done it. I've done it plenty of times where you have that zebra. The stock goes so far, and honestly, if I don't want to sell puts and I want to get a long position, I might go with the zebra. Then, if the stock falls so much, sure, I'd buy back that short call, leave the 2 longs. But then I might jump in with a different trade. Then vol might be higher. I might jump in with a short put. I might do something to try to offset the loss of that zebra.
But I am Jimmy. Nothing we say is advice.
No, that's what I might do. Like if I start with a zebra and the stock really falls, then I may sell a put in that product.
Right. And then Punished Pixels comes in. Good morning, ladies. Just a PSA, public service announcement. TastyFX is currently only available for U.S. customers. Oh, Punished Pixels. That stinks.
I'm going to have Glenn on pretty soon.
And she's saying it very casually so she doesn't call him Gary.
Glenn, I'm having Glenn on when you go out of town, when you take JD to his orientation.
Yeah.
And we'll talk all about FX and find out when it's coming to other places.
I made my first FX trade in and out yesterday.
You did?
I did.
What'd you do?
Well, I just wanted to see how it worked. So I did the U.S. Euro dollar pair and got out. I just made $20. Quick $20 help.
Yeah. Nice work.
Did it yesterday.
Slow clap, high five.
Yeah.
Nice work on the FX.
Thank you.
So I'm going to have him on, and we're going to try to, we're going to go through this new FX platform that we have, which is really cool.
I was looking. I mean, I just wanted to press the button, and I did the smallest denomination possible. So I would like to see the platform demo.
I'm looking forward to it.
Yeah.
Looking forward to it. Okay, then Jack Tucker comes in. Happy Wednesday. Low vol may mean an inside day. And Jack, you're going to be interested in this study because it talks about what's been going on recently and how these SPX 0DTs have been doing just in the last 30 days or the last 60 days in this recent market environment.
But I kind of like that. You were saying inside day. I want to see where the VIX is right now.
17?
The VIX, 1760.
Okay. Not much. Yesterday was like 1790.
Yeah, no, it's down 0.5%. That's it.
Yeah,
it's nothing.
Okay, Bob on Fire. Thank you for sending in the earnings. We have just MongoDB today, but like Liz said, tomorrow Broadcom, DocuSign, Lulu, and what's IoT?
I don't know, but I'm gonna type it in right now, and I'll let you know.
Then Eric. I mean, look at Eric's day today.
Samarsa. We've never traded IoT.
Eric's day today. I should have said wonderful Wednesday. I'm done for the day. With about $1,800.
That's fantastic. That's a good day.
That's a good day, Eric.
Good day, Eric. And his risk is done and it's over. So we were showing the teenagers this right before.
That's what I was going to say, Eric. If you see 3 new followers, it's JD and his friends who are here.
JD, Maxime, and Faraz.
Yeah. They saw this. They're like, look at this guy. He made $1,800 this morning. We're gonna look for the blue wackadoo on Twitter.
And the blue wackadoo. And I will post a picture of all of us with Maxime and Faraz too on Twitter, so they go up there too.
And Ajit sends in, high IVR products, Adobe, CRWV. Oh, gosh.
And it was Ajit that called in on Friday.
Yeah.
He was talking to us about Apex Trading. And what is the one these guys are using again? Top Trader or something? Top something?
Top.
I don't know, but like Ajit.
I've got it here.
These are the kits. That's okay. We don't need to promote it.
No. Top Step. Yeah. That's what the kids are trading futures on.
Yeah.
Yes. Which, ironically, is right in the same building.
Yeah, it is ironic. And then we've got Eric coming in. Wow, it's Wednesday. Yeah, he's got 2 6-lot tranches just underneath it.
Okay, so if we need to look for more trades today, we've got the list here. Again, DocuSign keeps popping up. The earnings aren't until tomorrow. CoreWeave is
it up again today?
CRWV.
We have a CoreWeave position.
It's up again today.
$3.67 again today.
But
how?
All right, so our puts that were 515 are still 465. These puts aren't coming in. Yesterday,
Well, they're July.
Yesterday I sold July puts for $1,000. They're probably still $1,000. It doesn't matter if the stock's going up. These aren't even coming in anymore.
They're not. If you get a massive move, so what was it up? $12 the other day. That's why we rolled our puts up. $3 for a $150 stock in CoreWeave with the implied volatilities of 154 in that cycle is not that high.
No, I'm pretty sure I sold these hundreds yesterday.
Yeah, you lost money on it because now they're 10-10.
No, I don't. Unless I sold the 90s, but no way. It had to be the hundreds. I think the vol just keeps. If the vol keeps going up, the prices keep going up. You get the up move, these puts aren't really coming in that much.
They're not.
I mean, we've got the 80 put, So we'd have to lose. We'd have to go from 150 to 80 to hit that put.
No, I mean I like our price point there. I do. CoreWeave is very interesting to me, and even after our discussion with Scott, the margin is very good in it.
It's still, I guess. Is it? Let's see. Sell this 100 put. What's the buying power? Yeah, $900 to make 1,000.
Yeah.
And take the risk of owning CoreWeave at 90. So, but that's on the Jeet's list today.
I mean, it makes sense. You're looking at high implied volatility stocks.
All right. Anything else? Oh, and then the SIBO posted this.
Yay! I love the SIBO.
I know.
Great team.
So fun.
And I know for a fact this is the first day we were down here.
Well, that's what I was going to say.
It is because I remember that's the only time I wore that zebra dress.
I'm just trying to figure out what is this blue thing right here.
Oh, it's a water bottle.
Oh,
it's a core water bottle.
Yeah. That's all because we've got the bevy machine here, so we have these clear cups with the lids. That's all. I couldn't figure out what that blue lid was on the table.
I like how your mind works in the most weirdest way possible. You look at a picture of us, you're like, what is this? You zoom in on a blue dot.
Because every day, this is what we have: our clear cups with the lids.
That was day one.
The kids' cups.
Day one.
All right. Do you want to jump into the study?
Yeah, let's do it.
Yeah. Okay. Let's see. Here we go. Recent results for zero DTEs.
And this is great. It's very heavy, this one, and this is sponsored by the SIBO, so thank you very much. This one's heavy. We've got lots of data in there.
Yeah, and when he talks about recent results, last 30 days, last 60 days.
Well, let's just jump in the study. Let's let Jacob's words speak for it.
Zero DTE option markets have quickly become some of the most active and liquid markets globally.
And due to their recent surge in activity, we are still expanding our data set and refining our understanding, working to distinguish between noise and meaningful results.
Let's explore how the past few months have impacted zero DTE option sellers and determine whether their most successful strategies differ from those that excelled over the past 2 years. So most of his studies are past 2 years. This is just looking at recent times.
And it's interesting. When you think about it, we have so much data on SPY and all these other things.
Yeah.
These are only 2 years old. Like, they're brand new.
Right, they're brand new. So the study, using over 2 years of data in the zero DTE SPX options collected every 10 minutes.
And this is the only thing I want to see. Considered selling zero DTE iron condors at either market open every day. So that's at 8:30 Chicago time every day. Using short 20 delta strikes, and the long wings were different. So everything is 20 delta.
Everything's 20 delta.
So you got $10 wide, $20 wide, or $30 wide past there.
And that's why you're not collecting too much. When I did it this morning and did the 20 delta shorts and made $20 wide, I only got $4.50.
Yeah.
Now I did it maybe 15 minutes past the open. I didn't do it at 8:30. I did it like 8:48 or something like that. But I only had $4.50, which seemed small.
It does seem small.
Yeah, I thought so.
Yeah, but no. I don't know that that's given the.
Hey, well, we'll see when you look at average P&L if that seems small.
Yeah.
Okay.
And then, so examined closing winners at 25 or 50, and that's what we were kind of alluding to in the beginning. We want to see the 10% in there.
Yeah, like waiting for 50% seems like it would take forever. Kind of like waiting for our 10% on those tight iron flies. I would love to see results for just taking, on these, just taking 10% would be too small. It wouldn't make sense covering the fees because you're not collecting that much when you're going out to 20 delta.
You can't do it.
All right, contrasted results from the past 30 days, 60 days, and 90 days to the results from this year and the full data set.
And all times of Chicago. Okay, next.
All right, here we go. So this is looking at all time, right? Since the 0DT started.
And so these slides will be attached, so you can kind of go back and look, because Jenny and I kind of cherry pick and look through these because it's a lot of information.
It is a lot of information.
I mean, there's 7 of these in a row.
These, and you look, every one of these is going to be the same, where you've got manage at 25% $10 wide wings or 50% $10 wide wings, 25% at 20 delta wings or $20 wings, or 50% price profit target at $20 wings, or then $30 wings, and then your 25% or 50%.
So they're all the same. If you know the tops are the same, and the all time is going to change because they're changing the time frames. And when I look at this, I like I think everybody's going to come up with something else. But when I look at this, when I glanced at all these, and when I say glanced, it's a glance. What I found fascinating is how consistent the 25% $10 wings was. Consistent.
Okay.
I just was saying it's not the best, it's not the worst, but consistently it was a normal drawdown, and you usually got.
I like how you say everyone might have a different takeaway from these, because when I went through these, I thought, gosh, in almost every scenario, you're better off managing at 25% than 50%.
Oh, that's what I'm saying, that 25%, the $10
yeah,
wings,
the 25%. Okay, well, I don't mean just $10 wings, just 25. In every scenario, you're better off managing at 25% than 50%.
Yes, for sure.
There's not a case up here where you're not better off managing at 25% than 50%.
That's true.
But I see what you're saying. Let's look at them all. You're saying consistent with the 25% $10 wings.
Yes, that's when upon glancing, when I was going through, that's the one my eye line went to. Okay,
so this is going back 2 years. Now we're going to look at 90 days. So over the last 3 months, how has this worked, and compare it to the year. What I find very interesting, if you go the last 2 years and you go to just the 90-day, the average P&L jumps up so much on the $10 wide wing.
But the last 90 days have been high implied volatility.
Right. So you see,
and when you get that bounce, you can get out of that. So it doesn't matter if you're up or down. If you're getting a two-way action, you can get out of that.
So right in the last 90 days, it's been pretty good. You look at that $10 wide wing, average P&L 42.80. The $20 wide wings 76 versus 28 and 57.
Yeah.
So, but in the $30 wide wings, there's not much of a change.
True. So, like I said, my takeaway here is the consistency in the taking profits early.
Yeah.
That's the consistency in taking profits early.
Now we're going to look at just 60 days, and that performance is even better than because in the last 2 months we've seen some boost in vol.
But to your point, it's always 25% is better. Always, always, always in every scenario. And then let's go to the last one. We'll get to the takeaways. We can kind of go back.
And then looking at this, okay, so this is what I did today. This is what I did. The 25% profit target, $20 wide wings. It says average P&L, $107. Now I know vol was low today because when I put that on today, I only collected 4 something.
So it should be 80 something.
Yeah, right. It wasn't so average P&L $107. I guess. I mean,
that's around about right.
I guess that's around about right.
That's right.
80.
Yeah.
$100 would have been is what I took out of it.
Yeah.
$100 exactly.
Yeah.
So a little bit lower than
average.
Average of the last 60 days.
Yeah, it's not bad.
Okay, and here we have just in the last 30 days, which in the last 30 days you see a drop. You see a drop in these the average P&L.
Yeah.
So,
now what are his takeaways? Because, I mean, honestly, what I see here is consistency is the key. Whatever you do. Just don't make 50%. I mean, don't take the 50%.
Okay,
whichever one of these, whichever risk appetite you have for whatever drawdown you want, just don't take the 50%, take the 25%.
Well,
I hope it says that on the last page.
And you know what else I thought was interesting? In every slide, I think there was only one category that was negative, that had a negative average P&L. So far, this slide, all positive P&L. Here, all positive P&L. Positive P&L.
It was this year.
I thought,
all time.
Oh, yeah. Of all time, 50% profit target with $30 wide wings, that actually had a negative P&L.
Other than that, everyone's a winner.
Oh, we crack ourselves up. Okay. All right, takeaways. Here you go. This is what you've been waiting for, Liz.
I was like, give me to this page. The high premiums of recent days, especially from the beginning of April, have meant larger zero DTE winners when we've had winning trades. Check.
Okay, by scaling out the short strikes with Delta, the rate of winners remained largely consistent. Well, that's what you said, consistent over the data set, and the size of losers is mostly determined by long strike placement.
Of course, there have only been about 100 trading days in the year so far, so we are still in small sample size territory.
All right. In the end, here it goes. Maintaining position sizing to give yourself room to be wrong is the best way to deal with this uncertainty, but staying mechanical with our strategies can help us benefit when volatility cooperates. So we're kind of surprised, like, oh, VIX down to 16 now because it's been 19, 20, hanging around 20, and you can see these have been performing better.
They have been performing better. But honestly, I like having these study once a week because they kind of build on each other.
Oh, yeah.
And it just kind of edifies the fact. Keep your size in check, take it off quick.
Manage at 25%.
Manage at 25%.
And I'm going to ask for the 10%. And I honestly have a feeling we're going to see that managing at 25% is better. And then we'll start managing at 25%. But
we'll have to eat crow. It's fine.
I'm sure it's better. But I kind of like I think with those iron flies that are so tight, it's almost impossible to get 25%. I think we're never going to hit 10% or 25% on those.
Well, what I found fascinating with those, when I was putting 25% in, you would make sometimes I made $6. It just goes to cash settle. You don't hit it. It doesn't hit that GTC. I don't know where the boys are going, but they're all leaving. They're all leaving. Goodbye.
See you, boys. Oh. Hopefully we can find them when the show is over.
I already lost one once.
Have you ever lost any of your kids?
Cats. Oh, I lost JD once at the aquarium.
Oh,
the Shed Aquarium.
Yeah.
Because I had taken, and I think every parent in America will understand this, I had taken Kathleen's kids, and she had 3 kids, but my kids were city kids, right?
Yeah.
So I had us all holding hands, but I put JD on the end because he's a city kid. Just let go of Hannah's hand and wandered away.
Oh, how long did it take to find him?
It was probably 10 minutes, but it felt like 4 hours.
Oh, it's scary. I can only imagine at the Shed Aquarium.
Yeah, he wandered in the gift shop. But I will tell you, moms united like epic proportion. Dads would have too, but there were only moms there.
Looking for him.
Yeah, people are like, what does he look like?
It is scary. I lost Logan when he was about 3 in Woodfield Mall.
Oh, in Woodfield Mall?
Yeah.
Ooh, that's a big one too.
In Woodfield Mall. And I had the police and everyone.
The police?
The mall police.
Oh, yeah.
Mall cop.
Paul Blart.
Paul Blart. Looking for him. He was in the tunnel of one of the play areas.
Was he really?
And we were looking in all the stores. Yeah.
JD was in the gift shop. Yeah, because where are you going to go? I mean, they're so little.
It was scary, but
now he's like my beacon because he's so tall in crowds.
You never lose him.
Use your height. Okay, so I do like that study. That study was a good study. I'm glad we're building off of them.
I love it.
I'm learning on a daily basis.
I don't know what I'm going to do. I don't know what I'm going to do tomorrow. If I'm going to do the 20 delta, it's very high probability. It's very high probability.
You're not doing anything.
Oh, tomorrow and Friday we're going to bring it. We're going to bring it back. We're going to bring back the study that was the Monday game changer. We're going to bring that back on Friday.
Yeah. So then we remember for Monday morning.
Yeah. Right. 10:32. Do you want to get into what's your assumption? Or do you have another plan?
I think what's your assumption would be good. Do you have SIBO's most active, or am I throwing you in?
No,
because I did.
Here you
we
go.
have not looked at this in a while, and I know the they're coming back. The teenagers are coming back. Because I was going to say, Faraz was saying that he wanted to start trading by active, where the volume is, and looking at things like that. And the only thing that I knew about was this. So we were looking at these.
Today's June 4th, and here you see June 4th, June 4th, June 4th, June 4th. If he wants it, this is 0 DTs. So you might want to point him in the direction of the 0 DTs.
I know. It's crazy, right?
I think he might like it. This morning on the train, he was buying futures and selling futures in NASDAQ. And I think he might like these better.
Yeah, but you got to be your pattern day trading rules.
Come on, Scott.
Come on, Scott.
We're praying that you get that.
I think Scott's going to do it. We can say this because he said it on air with us, but he's thinking he's going to get He's fighting
working
the powers
on it. They
on
are
the pattern
working
day
on
trading
it.
rules.
They are.
Then what's going to happen to this pit if there's no pattern day trading rules? It's going to.
Yeah, oh my God! It will.
It will.
It will. We better tell everyone. Start hiring. Start hiring more SPX 0 DT traders. So yeah, I mean that's where the volume is. There and HYG.
I think we look at that, and I don't know what HYG is.
Let me see. I feel like you're right. Like we say this all the time. iShares, iBox, high yield, corporate bond.
Oh, obviously.
Yeah. HYG, high yield corporate bond ETF.
So is that kind of like Box and Bill?
No, it's not because, okay, well, I don't know, but I'm just saying that by looking at the chart. So we know if we want to make money in like the SPX box, we could just go buy BOXX and it just looks like this, right?
Yeah, and Bill will look
and T-bill.
Just BIL.
Yeah, so there's BIL, which
which looks like this, because that's the dividend, and then you just acquire more shares and more shares.
Yes.
They're versions of the same
And
thing.
then there's also TBIL, which also looks like this. So like if you have money sitting on the sidelines, these are products you can put your money sitting on the sidelines in.
And it's nice to have these, and I do have some of this in there.
But then you look at the
liquid, I can take it out
HYG,
of
this high yield corporate bond ETF.
So it's
no,
it's an ETF.
It doesn't.
Yeah.
It does not look like those other products we were.
Yeah, that's an
looking
ETF.
at.
Okay.
All right. Are you ready for what's your assumption?
I'm ready.
John, hit us with our theme music, please.
Do you think we get the theme music while we're here?
I don't know. I don't hear. I don't have an earpiece in, so I have no idea.
In my mind, it's playing right now.
Steve, is a guitar playing in the background?
Okay, what's your assumption? This is great because people send in their viewers' assumptions, and then Jenny and I. It's different than Fast Market. Fast Market was unique last Friday.
Oh, Fast Market just tells you the trade.
Fast Market, they told you the trade, and we'll say yes or no. And then, what's your assumption? People give us a product, and then we come up with a trade idea.
And then is it Fast Market where they check off in the end, like Tom and Tony said yes to 10 out of 10?
They do that for here, too.
Oh, okay. But for Fast Market?
Yeah.
What are you gonna 10 out of 10.
All right, what's number one?
SPX, neutral, 0DT, already have it in.
From Deutschland.
Ooh. If you could go anywhere, where would you go?
If I could go anywhere, like right now?
Yeah, like take a vacation with the kids. Take the kids on vacation, where would you go?
JD wants to go to Tokyo.
That looks cool.
It does. I mean, I know he wants to go there. I'd like to go to Paris. I can't believe my first time taking my kids to Europe was to Germany.
Come on.
It was great. I loved Germany, but it's just not what I would have planned had it been like more of a planned event.
Hey, but
it was wonderful.
Dancing and singing and running on the hills of the Sound of Music in
That was Austria. Salzburg
that
was amazing. I'm telling you, Hallstatt, though, I think I'm saying it wrong. Hallstatt was the most beautiful place I've ever been in my entire life. And that I was surprised that I ever set foot into.
Okay, see?
And so it was funny, we were there, and Dan's like, next time we come, JD's like, pretty sure this is a one-time thing. Like, you're not going back to Hallstatt.
Well, I remember when I landed.
Where would you like to go?
Well, I'm only asking because yesterday, this is the first time I've ever gotten it. I've never gotten this before. I got the big Adventures by Disney booklet of all of their places and all of their tours.
So I've always wanted to go on an African safari. I know he said Tokyo, but I want African safari.
Okay, that's not my thing. Like, I don't want a lion running around next to my, what are they called? Safari vehicle?
Yes.
No thanks. No thanks. I don't know. I was going through the book thinking if I could pick any place, where would I go? I think I would just pick Italy, and I've been there, but I like their food.
Yeah.
I'll go visit
Tom
Dylan.
says they have terrible Italian food.
Whatever. Maybe I'll go along when they're like in Milan.
Yeah. Oh, we got to talk to them about stuff afterwards.
Oh yeah, I forgot about that.
Yeah, we did too. Okay.
IWM bullish before September. IWM to 255.
Before September. I love it, Remy.
Remy from Reno. I've never been to Reno.
I've never been to Reno either. Okay, IWM. Now, I might be Remy from Reno because I am bullish IWM.
I was actually just looking at IWM, just looking at selling puts. I don't mind.
No, it's fine. It's just a little capital intensive for this account.
$3,303.
3-3. You love the number 3?
Well, 3-3 is my birthday. So
you can spread it off.
I'm not interested. We need something else. I'm not a huge. What am I going to spread it off with? Buy the 190 for $1.
So what do you think I have in IWM right now? Look at the price of IWM.
A jade lizard. You have a jade lizard.
Nope. Look at the price of IWM.
Oh, you have the 217 calendar.
That's right.
I'll do it.
But you have to pick weird strikes because you'll see some of them don't have 217.
Well, and they were September. So let's try to put this on and sell in between.
Well, they said 255 by September. So honestly, a diagonal might be where we go with this.
Okay.
So if this is their assumption, they're saying 255 by September. Let's put on a diagonal.
All right. So our choices are again like we do a put spread. Here's a $10 wide. We're not getting a third of the width. We're getting $1.60 on $10 wide. That doesn't. I don't love that.
Don't love it.
Don't love it. It's not.
And if their assumption is 255 by September,
I'm gonna look at a zebra. I'm gonna look at how much a zebra is. It's not that expensive. $1,685 to control 100 shares of IWM. If you think it's going to 255.
That's not bad.
That's not bad.
That would be, I would take that over a put. If you think it's going to 255, I would for sure be doing this because it'll give you profit from 209 to 255.
I don't mind it. I don't hate it.
I don't hate it either. All right, next. Let's do diagonal.
Otherwise, the diagonal can be our middle ground.
Let's take a look at that.
And do we sell in 44-day?
The diagonal? Yeah.
Do we sell the 220?
Yeah.
And then buy in August?
No, let's do it near, yeah, I guess, yeah.
So if I buy the 208, okay.
This isn't bad.
Well, all right, so 208, 220, $12 wide and paying $7. But if I'm going to do this, guess what? I'm just going to spend the $1,600 and buy the zebra.
I know.
Yeah.
I love the zebra. The zebra is the zero extrinsic back ratio created by the Liz and Jenny show.
So for me personally, if I would do this diagonal for $700, I'll take the zebra for $1,600, please.
Yes.
I don't know. What do you want to put in here?
The zebra for $1,600.
We'll watch it. We'll watch it. We can either slowly watch our $1,600 decay if IWM never goes up, or we have a few days of a bullish move and we take it off for a few $100.
Well, don't. Listen, what's his name? Remy from Reno? There's no way we're holding on to this until 255.
No.
But this is what I would do if that was my assumption.
And so
I'd be very curious to see what Tom and Tony did here, because if that's their assumption, I bet they just sold a put, where we have the ability to make a lot more money. And if it goes up, you can ratchet it up, Remy.
And I'll try to make it a little cheaper.
Yeah, make it cheaper. I mean, if you want to, you can sell.
No, I'm not selling anything against it. Okay. So then this to the viewer who wrote about his zebra where it was all almost worthless. So let's say IWM drops down to 190, 170, whatever, and the zebra is almost worthless, and I paid $1,600 for it. At that point, that's when I'm going to jump in because vol is going to be high, IWM is going to be much lower, and that's when I'm going to jump in and start selling puts.
Yep, I get it.
That's the cycle.
I get it. All right, let's go to the next.
All right, $1,679. All in favor?
I'm in favor. Aye.
Aye.
Have we done anything yet today? Have I not been doing my job? Or have you not been doing your job?
I have. Let's see. What have we traded so far? Okay. Today, all symbols. All we did was put on the SPX. I'm going to publish that to the follow feed.
Perfect.
And then IWM Zebra, send that to the follow feed.
Perfect. So both should be up on our follow page.
Okay. And then, I'm sorry, there's a little error in my setup here. I've got to scroll through Twitter to get to what's your assumption.
Love means never having to say you're sorry.
Oh, that's nice. I should keep that in mind.
So next?
Target neutral. I'm short. I'm locked and loaded with target puts.
I was going to say next.
Are we? Do we have them too?
I think so. I don't think so, but
Chris
target...
from Houston. This could say Jenny from Chicago. Well, I'm locked and loaded with target puts. IV rank of 27. Not great, but better than most. How about a Jade Lizard? Sure.
I mean, puts are selling a Jade Lizard, or puts are selling your Jade Lizard with extra
Let's
premium.
see if we have it. Target, no.
We don't, because it's expensive.
No, it's not.
No,
it's not
selling puts water.
It's not anymore. It's not at all. Look at this. 217. It's going to use $1,300.
Oh, that's not bad. 217.
Yeah.
Sell it for less than its midpoint.
And then I think he said he did the 100, 105. And did he do the 95?
That's not bad.
That's a big lizard.
That's a big lizard, but you could use those.
You could use that 40 cents.
Yeah,
and buy
use that 40 cents to buy something.
Sure.
And
Okay. And now we're only, but now we're still using $1,000. And we didn't cover the. I kind of just like the 90 puts for. What could be 217, but really we can get about 2.
Yeah, you can get 220. So as much as we like 217, because that's my favorite number, you got to take 220. Hit it.
I mean, if we wanted to free up a little buying power, I could buy the 80, and then we get $1.67 for 800. But
well, we can free up the buying power if we need to.
Yeah. Well, you can't buy the insurance when the house is on fire. If Target starts falling, then we can't free up. The only way to free up that buying power would be buy it back for a loss.
True.
And we've done that before. 220, 219. How much buying power do we have? Ooh, not that much. $7,000 in buying power.
You could just use $1,300.
I just used $1,600.
That's why we have $7,000. I was told there'd be no math today, but I saw what our buying power was in the beginning. So I think puts are a little bit tricky. I think defined risk is our way to go because target falls, this falls.
So if you're in this conundrum where it's like, geez, I don't have that much buying power, okay, let's see. Let's see what I'm going to get back if I take off these core week puts. Only $900.
So our biggest, I just went to it. Our biggest position right now is the IWM by a multiple of 3. Everything else is 700. That seems to be our sweet spot is 700.
All right, so here's what we're going to do. We're going to take that off if we have to. And we're going to take that off for a quick profit. We're going to leave that on for a couple days, hope for a quick pop in the Russell, and we're going to take that off for a quick profit.
Okay, there you go.
Now, I looked at, this is a winning trade. These core week puts are a winner. Maybe we're up $200 in them. But when I look at, this can pay us $445 and only using $800. I'd rather keep this on than get $200 using $1,300.
Well, that's how I am about everything with buying power. I really lean towards things that are going to give me a better return on capital.
I know. So we're just going to have to pass on target because...
Yeah, that's why when it came up, I was like, next.
Where are we using buying power?
So everything is adding up. So the biggest ones are, I'll tell you right, IWM's our highest by a multiple of 3, and then it's core weave is the next one. Then everything else is 7, 6, 5. We're actually pretty good in what we're doing.
Right.
And I'm looking at it right now, so you don't have to go through everything.
Okay. And I know, all right, I guess that's all. I know this MCL,
That's
it Jade Lizard?
Maybe take that off.
Yeah, it's a Jade Lizard. We've only been in it for 5 days, and we're up 36%. I'll take that off.
I think we tried to take that off yesterday.
Maybe that'll give us $500 or $600 back. $300.
Just take it.
How did that Jade Lizard and micro crude only use $300?
Well, because it's a micro.
It's still big enough. We've seen that. Okay, and then we'll keep a close eye on the ZB too, because that will give
Those two are not in our margin when I go to that.
But they are using up buying power.
I know they are, but it's not in when I go to the margin requirements.
So anyway, Chris from Houston, I'm locked in, loaded in target puts, but
yeah. All right, next.
Oh, whoops. Oracle neutral. This is from Ajit.
Ajit. I love Ajit.
170 short straddle. Okay, the fact that it's the 170 short straddle, I know we can't afford it. I can already guess. We can't afford it.
Ajit's big by big, and he knows what he's doing, though.
Or if you're a little scared, then put on some wings, like a fly or a butterfly. I'll look at it. Oracle, 718. Straddle. All right. You're going through earnings, Ajit.
Ajit. Okay.
Ajit, straddle through earnings?
Ajit, you're riskier than I am. I don't like doing a straddle through earnings unless it's the EBUB.
And this is June 11th, earnings coming up.
Yeah, Oracle's got it on deck. For some odd reason, I thought they already
But Ajit knows what he's doing. He's smarter than we are. Yeah. If he wants to do the Oracle straddle, let us know how it works out, Ajit.
Good job, Ajit. Okay, next up, AVGO bearish. They have earnings tomorrow. This week or 1 month. I have no problem putting on, and I mean, if this is just for Charles, I don't know if we're going to do this.
Yeah.
I have no problem. It's been up. AVGO was up huge yesterday too. It's very overbought.
Okay.
So I get what they're doing. I have no problem if you want to do a bearish trade.
But
before
tomorrow.
Earnings, but I don't know that, but I don't know that. I know it's your assumption. You can do it. You can put a bearish trade on. You can be directional.
I mean, maybe we could do another upside broken butterfly since tomorrow's Thursday. And then it'll come off on Friday.
Yeah.
He's from Hickory Corners, Wisconsin. Never heard.
Have you been there?
No, but I know many areas of Wisconsin.
You do know many areas of Wisconsin.
Well, my grandparents lived there for 50 years.
That is true, because you're always like, I've been to that
50
place.
years going to Wisconsin, spending my summers there.
Yeah, that's true.
Mm-hmm.
I'm not that
Never heard of
familiar with
Hickory
it.
Corners.
I drive through it, and I've been meaning to stop at Frank's place.
Oh, yeah.
Rhinelander.
Yep. I like Wisconsin. Okay.
So let's take a look at AVG, or no, we don't have to. Let's
Well,
just
we could,
because we'll look at it tomorrow.
We're a little bit running out of time. Microsoft, bearish. Broken wing butterfly, slightly bearish. I'm curious to see what this is going to say. Like broken wing butterfly calls or puts. Broken wing butterfly, slightly bearish with no risk to the upside. Maybe sell 2 450 puts while buying the 440 and 455. 55, 50, 40. And
puts.
what cycle? Adam from Tennessee.
It says July 18th.
Okay. 55, 50, 40.
Well, hold on. I'll keep it up.
55, 50, 40. Microsoft. July 18th.
I know you keep saying those in your head. I've got it up.
50, 40. Got it. Okay, so he wanted slightly bearish, no risk to the upside. So yeah, this is very slightly bearish, and
so
44 days from now. So
they're clear of the concept of slightly bearish. This is slightly bearish.
I know.
And you have no risk to the upside.
No, and it's only $440 in risk. If it goes up,
you can make
keep 60 cents, but you're slightly bearish. If I'm slightly bearish, I'm just going to sell a call spread. And like if you're going to take, but he wanted no risk to the upside.
He wanted no risk to the upside.
That's tricky.
That's that. But you checked all your bells and whistles.
I mean,
slightly bearish, no risk to the upside, broken wing butterfly. So yeah, good job, Adam from Johnson City, Tennessee.
Right. If it goes, but again, we've seen this with these broken wing butterflies. This isn't going to pay you until the end. So you have to. It has to be at 450 in 44 days. That's the problem. That's the tricky part.
Yeah, you're not holding up that much capital. It's fine, but you do need the butterflies. We talked about it. You have to keep them until the end.
Yeah, and no risk to the upside. Even a downside calendar would have risk to the upside because if you pay for a downside calendar, you're going to lose what you paid if it keeps going up.
Yeah, I don't know.
Yeah, I guess this.
I mean, they check all the bells and whistles, but this is. You get a. Can I just give you a gold star without putting it on?
Yeah, he gets a gold star.
You get a gold star, but we're not going to put that on.
Okay, after Microsoft CL, which we just took off. Well, we're trying to take off our CL.
We just took off our MCL, so let's go to the next one. Thank you, Simon from California.
Datadog. A Datadog in the entire market
look where this is from.
Datadog in the entire market to have a stellar summer into August. Bullish.
All right, let's take a look at
I don't think
Datadog bullish. I don't think it's from BAT.
I don't think it's from BAT, but we'll look.
Datadog bullish.
Datadog up 230 today. Sure. It's 121. If we were bullish in Datadog, I'll look at a diagonal.
I would sell a put and see how much it is for a put for $121 stock. Because we've been lucky with some of these. How much is that?
1,300, same as Target.
Yeah, that's weird.
It's the same as Target.
Yeah, and then CoreWeave, it's like, here you go. Take whatever you want.
I know. You want to take on the risk of a put in Target, but go ahead and sling CoreWeave puts.
Yes,
it's crazy.
I know the market.
Someone's slacking.
I don't want that much capital to get $200. There's got to be a better risk reward scenario.
Well, you can just find them. You can find them out there.
Yeah.
What did I look at today? And I was like, boys, look at this. You can use $100 to make $100.
It was Webull.
Oh yeah, that we can afford that. Do you want to see something we can afford? Webull. Oh, we have a position here, and it hasn't. It's not working. But these July puts, the July 10 puts, they were about $1 earlier on the train. Yeah, $96 mid market, and it's using only $160. So you talk about making $200. You do two of these. I'm using $300 to make $200.
Yeah.
So when you're handcuffed with a small account, you have to find little hidden gems like this.
You have to find little hidden gems like this, but you got to keep in mind they are slightly directional. So we already had a bullish trade in Webull, and it's not working for us.
No, and there's risk in these trades, right?
Yeah.
But when we talk about using $1,300 to make $200, we could try to find a way to make $200 with less than 6.
You can.
Yeah.
There's always a way.
Yeah.
There's always a better way.
Well, I don't know if it's better, but it's just the handcuffs of a small account. You have to cherry pick certain products.
Yes.
Yeah.
Or get creative with your strategies.
Well, you know and I know, like creating a spread is not, it's annoying. Like we'd rather sell naked puts than a spread.
It's also annoying to have a small account.
Yeah. Oh, FedEx, neutral. Oh, FedEx, they're on. I'm going to pick up my FedEx package today.
Jenny's been in a personal
battle
with FedEx.
Someone sent me a gift, which was super nice. Super nice. If they're watching, thank you very much. I appreciate it. I totally appreciate it. But it has to have someone over 21 sign for it. So every time they try to deliver it, my daughter's not 21.
She's like, nope, sorry, come back again tomorrow.
Yeah, I gotta take it back.
It'll eventually get there.
Oh, I'm picking it up today from the FedEx location.
Perfect.
Can't wait. Can't wait to open it up.
Perfect.
Yeah, I think it could be some wine. Some alcohol, I'm guessing.
Well, if they won't let Lily have it, I'm hoping.
Thank God we're working from home tomorrow. I'm going to open that box.
In the morning. Okay, FedEx. No, we're not going to put a FedEx trade in, right? June 14th. They have earnings. So June 4th, Wednesday, they have earnings.
That's
June
today.
24th. Yeah.
Oh, and June 24th.
Yes.
I put a trade in for Wednesday, 6-4 strangle. Wait, what did he do? Put a trade in for Wednesday
AM, 6/4/25 strangle, 6/20/25. So they put the regular June in, and the strikes are the 230, 207. So they did a strangle
today.
They did a strangle in the 620.
No, but I put a trade in for Wednesday AM, 6/4 strangle. Oh, but I'm thinking they did like today. So, but they put it in for 620.
Yeah.
So it'll be over before earnings on the 24th.
Yes.
It'll be over before earnings.
Yes. So that's like a very near-term strike.
Yeah. Good luck. I mean, hopefully that works out. It could.
It could.
Very well.
Yeah. And that's before earnings.
Well, I'll take a look at
you
FedEx.
Also so Jim, you also get a gold star.
And Julia Jake is looking at Constellation Brands. STZ.
STZ.
High IVR on a beaten down stock. Let's take a look at. We'll look at Constellation Brands
and that's the last thing because I think we're running out of time here.
Okay. And FedEx. STZ. Constellation Brands. It's still $177. So I see what Julia Jake's talking about. It had a big fall in January, and it's fallen the last couple weeks. Can we sell puts and we're going through earnings, but it's a directional trade. What's the buying power on this $200?
It's gonna be expensive.
Wah, wah.
Yeah. I mean,
$1,700.
We're handcuffed. Julia Jake's big by big. He's throwing this in, but that's
someone needs to put more money in our account so we can trade like Tom.
It's fun trading with Tom's money. Tony's trading Bob the Trader.
I know.
Yeah. But nonetheless, that's not a bad thing.
And okay. FedEx, the FedEx strangle, FDX, FedEx 219. Hey, how about a 217 earnings setup calendar in FedEx?
Did they want it?
I know they have their strangle, but I'm just saying it's trading 219, so we could do an earnings setup 217 calendar. We can sell the 217 in the 16-day. And go out to the 23-day. No,
217 is a very
elusive strike.
It's an elusive strike.
It's not.
So you got to go nearer term. It's usually the ones that are in the weeklies.
No, it's not going to work.
Doesn't work.
Sorry.
Wah, wah.
Sorry, Liz. All right. That's it for what's your assumption.
That's what's your assumption. Let's take a look at our SPX trade because they were up 20? What were they up 13 when we put it on?
13, 14, yeah.
So our SPX trade. No, we have another one in there, so it's not as bad.
We're trying to buy back for $7.35. It's working $8.10, $8.15.
We sold it for $8.30, so it's a $10 winner.
$10, $15. Yeah. We'll leave it. So far, we've been getting lucky.
Yeah, we're going to leave it. We don't expect to get out for 10% over that time frame.
Let me see what Reddit is. So Reddit, our put spread's out of the money now, which that's good. Reddit up $5 today.
Okay.
Which
do you have everything pushed out? And let's talk about what we did.
Okay.
And then that's it for
Let's
today.
see. And I want to see if we ever got filled in the MCL. So we're still. Oh, good. All right. All symbols today. SPX got pushed out. IWM got pushed out. And MCL.
We're missing it.
And hopefully the Russell's up tomorrow, and we can take our IWM off and get $1,600 in buying power back.
Yeah, that's hopefully your lips to God's ears.
Hopefully we don't have a big down day in the Russell, and then I'm never going to hear the end of this.
We're all in this together.
All right, and I will do a quick double check on Twitter to make sure we got through. AI gone wrong, looking fabulous. So thanks, but that's a really old. That's from a few months ago.
Yeah,
but you don't look a day older than the day we took this picture.
Thank you. All right, Jenny. Best hour of the day done and dusted. We got to go feed the teenagers.
Oh, they're going to love it downstairs in Sellers Market. Everybody, thank you so much for watching. Don't forget your red shorts tomorrow.
Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow, everybody.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on TastyLive.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
TastyLive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch TastyTrade.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
There's a beast in the financial world, and it's not the bull. If that's you, join us on TastyTrade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler with me as always, and if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. Get to spend it with my buddy, Mikey Butler. How are you, sir? Good morning.
Good morning.
Yes.
I'm doing good.
Mm-hmm.
Doing good. Just watching the markets fly by.
Chop around.
Yeah.
Chop fest.
Yeah. Not much is moving. CrowdStrike had earnings yesterday. Sold off a little bit, but I think it's going to be okay there. They've rallied pretty aggressively from the lows. Big intraday range there, but I had a calendar spread at 520, long the July, short the June, and it's down $250, but there's still $160 in the short option, so I'm just going to wait on that. If this move reverses over the next week or two, it'll be just fine. But yeah, other than that, closed that Southwest Airlines downside put zebra for $120.
Nice.
And that's all I've done today.
Nice.
It's been a light day in this light movement market.
Yeah, it's been quite the chop fest. We've got E-minis up 4. We've had a 20-point intraday, 25-ish point intraday range today. It's been basically nothing. There was a little tiny bit of a hiccup earlier this morning where they went red for a second. That has since been bought up, so we're okay. We're fine. You got the NASDAQ up 34. Kind of a mixed bag when you look at the big name stocks. Like Tesla was kind of weak today. It was down 12, 13, 14 at one point today. Apple's been going red to green, green to red, back and forth. Amazon on the stronger side. It's basically been at this 205, 206 handle for quite some time. NVIDIA is now red. It was up about $2 or about $1-ish from yesterday's close. So it's certainly been like kind of a mixed bag. As you said, CrowdStrike taking it on the chin today. After earnings, but was significantly lower. It got as low as 445. So it's just been kind of a chop fest across the board here. I know that we had some employment numbers this morning. We have Beige Book coming out later today. You got initial jobless claims at the end of tomorrow morning. So there are some events, so to speak, coming up. Maybe that's why this is a little bit of a chop fest. You got the Dow down 14, the Russell down 5, the Russell the weakest of the group. It was strongest yesterday, despite bonds rallying today, which is kind of a weird situation with the Russell being down the most, being the weakest of the group today. Oil selling off a bit, /CL 62.73, down 70 cents. It just sold off. It got as high as 63.96, so we've had about $1 intraday range. Volatility futures at the lows, but really haven't moved from this handle here, 1905, the low of the session. We're sitting at 1925, up a nickel. Bonds up 1.5 points here. They've been rallying through the entire opening session here. Gold up to 3,400 or back to 3,400 after yesterday's little dippy do. You've got silver basically unchanged here, down a penny and change. Bitcoin was a lot weaker this morning, 104.5 on the futures. We're at 105.9. Spot is up 200 from the overnight session. Definitely just kind of a nothing burger of a day here, or at least that's what it's been for the morning session.
Yeah, it's been definitely a chop fest, but like you said, there's still a 65-point expected move in the E-minis for the next 2 days. So it feels like there's something priced in there based on maybe the jobs number or one of the other things. But because for this to be so choppy, like 65 points is still a pretty big number, I would say, given the fact that we haven't really done anything this week.
On the E-minis?
On the E-minis.
Yeah.
But yeah, still some things moving under the hood. Gold, seeing a little rally here.
Yes.
Silver, kind of flattening out, but that was a big move a couple days ago. I mean, is Ethereum back? Like, what is this? It's almost at 2,700.
Yeah, big move there.
Yeah. We do have some earnings on the horizon, some fringe earnings.
AVGO is.
Yeah. I guess, yeah. AVGO and Lulu are not fringe, but
not our go-to.
Not the go-tos, but we will likely be trading them. But yeah, Broadcom and Lulu after the close tomorrow. And that's pretty much it. I mean, you have Oracle, Adobe, next week, but that's the end of it. Then we have a little couple weeks break, and we'll be right back at it with some more.
Yes.
But yeah, looking at this portfolio, everything is kind of within striking distance in terms of closing stuff, but nothing's really screaming at me right now.
Yeah. There's usually not a ton to do when the minis are basically unchanged. So it's not a shock that we've been pretty light on positions. I did do a couple little Johnny trades today. I did a straddle / iron fly type position in Nike wrapped around the 62 and this. I'm short the 62.5 and the 65. Put in call. Bought the wings just to define the risk. But, you know, small little position, 50-50 type shot. I got a little bit of short delta in SPY, just given that we've had such an amazing run up. We've kind of stalled out at the 6,000 mark on the E-minis, you know, for the last 2 weeks or so. I figure maybe there's a little bit of a downside move brewing. So I put on a longer duration put diagonal spread, especially with volatility this low. It's pretty cheap to do this. I'm along the August 590 put, short the 570 in the July expiration. So this is a 70-40 expiration split. You got a little bit of positive theta baked into this position, but about 20 short deltas. So an interesting way to get some short deltas if you feel a similar way. I also put on an upside, or at least an omnidirectional butterfly type position in an AVGO. I mean, the stock has just seen a significant move to the upside. It's basically doubled since the low in April. Same sort of thoughts here as, you know, looking at CrowdStrike's move, you know, good earnings and the stock, you know, kind of just sold off just because it's had such a huge move, or at least that's what it feels like. Maybe AVGO is in the same bucket. I bought in some downside risk on NVIDIA, and then I closed out this CoreWeave position. I put on a little shot trade into the close yesterday, or at least, you know, like 30 minutes before the close, with a ratio spread on the upside. It nets out to be like a 60 or 70 cent loser, but I was hoping you'd see a little bit of a down move, kind of like we saw in IonQ and HIMS after that crazy move, where you get a little bit of a pullback vol contraction and you could buy in the risk or take a small profit. Didn't end up happening there, and I was using too much capital for that trade, so ended up just basically scratching it for a tiny little loss. Nothing type trade. So
there you go.
But yeah, it's been a waiting game for today.
Yeah. Some of the biggest P&L movers are actually these futures trades.
Yes.
I've got on like the Japanese yen.
I'm routing in order to close that one. That's a nice trade.
Yeah. But yeah, the good thing about like the gold futures trade that I've got on is it was a broke wing butterfly converted to a free butterfly. Same with Natty Gas, was a broke wing butterfly converted to free butterfly. So both of those are at the 21-day mark, but that's I'm loving the fact that time is ticking out of there. Not going to do anything because first of all, there's no risk, and second of all, if you're actually trying to get value out of a butterfly, you want there to be like 10 days, 5 days, 0 days left. So if you get a move towards those spreads, then of course I'll close it because the max value is going to be where the short strikes are. So 335 to the downside in Natty Gas and 3480 to the upside in gold. If we get that gold move to the upside, this will come in nicely. But yeah, if we get the move to the short options, I'll just close it regardless of days to expiration. But ideally, the less time there is, the more value I'll be able to get out of that. So
yeah, I think I'm gonna put on a little gold play here.
Here you go.
Upside broken wing butterfly, a wide one with, you know, about $2,000 in risk. 3475, 3500, 3550. So it's a 25 by 50. Did this in the 21-day, kind of into your exactly what you just said in your little monologue there of you want this to come in, you got to kind of hold this past that 21-day mark. Mm-hmm. So, I mean, gold's at highs here, near highs. If we grind higher, this should be perfect. If not, I got a $3 credit there, so a nice little trade. I like it.
Beautiful.
And we focus on gold in the cherry picks yesterday, gold and silver. We looked at just the immense call skew that you've got in both of them into this sort of move, which isn't abnormal. When you have big moves in the metals, you typically see vol expand, especially on the upside, because there is that kind of baked in price floor for the metals. So I like it.
And sometimes that skew kind of drives you to a different strategy. So like, let's say you want to sell a put in gold. You're probably better off just buying the shares like in GLD and selling the call out of the money, because you have such call skew that you can get way further out of the money for a similar premium and have that intrinsic value potential in the shares.
Yeah.
If you're willing to put up more buying power with 100 shares plus a short call out of the money versus a short put, even if it's at the money, like your risk reward is similar, but your reward is much bigger.
Yeah. Or a call diagonal spread or broken wing butterfly, those sort of trades, because they play into that skew where
any strategy with a short call option
where you're selling
playing
premium, where you have some sort of short premium play.
So I like the gold butterflies to the upside for that reason. And if you get a sell-off, any kind of sizable sell-off, you can immediately turn it into a free butterfly, secure some credit. I did a similar thing. I think I collected $250 for mine. No, $280 for mine, and then I bought it back for $230 a couple days later. So secured 50 cents. Sometimes you can collect more, but 50 cents to $1 is usually what we're looking for if we're doing that. But yeah, kind of a lull in the market, but not a lull in the YouTube chat. I see plenty of people in there. If you want to join us there, just pop over to the Tasty Live channel. You'll see us streaming live. You can throw in your trade ideas, questions along the right-hand side chat. And we'll get to them right now.
Yeah.
How's your Tasty FX position? I think we're both down a couple of bucks.
Yeah, if you got some FX pairs you want to trade, I'm down for those. I've enjoyed trading these. I am down $18 in my Aussie dollar position. So
I'm down 7, so
it's okay.
Yeah. So that's a Chipotle dinner for 1.
Yeah.
With extra guac.
No. You don't do extra. Not in today's day. Not in
this economy, yeah.
No.
All right, I'm gonna pop over to the YouTube chat. Let's kick it off with a stock that has gone down a lot, trying to come back up, UNH. Bought a naked call in UNH September 15th, 330 strike. Went all in as a beginner. Now I'm down 30% on that so far. Can you please give me advice on how to manage? So,
yeah, that's a vol crush for you.
Yeah, first things first. There's just no reason, and I know if you're a beginner and you're not, you haven't looked at the strategy yet. Like, there's just no reason to not have a short option against this.
Yeah.
Even if you're super bullish, or if you're just buying the call because you want to define your risk and whatever. When you place this trade, I'm not sure what you did it for, but we can look back.
They're down what, 30%?
30%. So
you've lost $400 or $500. The stock hasn't really gone anywhere.
Yeah. So, and the IV rank is lower than it was. IV's come down a lot.
Yes.
So when you have this strategy on, like, there's nothing wrong with this strategy. If you want to buy a call, fine.
Makes total sense. Stock is down 50%. I hear you.
I would buy a call too instead of selling put. Because it's like, when's the floor? Where's the floor? You want to define your risk? Totally fine. And you go out 100 days, that's another thing. If you go out 100 days or more, just longer term calls, you're getting out of the near term IV that's priced into those options. With that said, if you're buying a September call, if it was right at the money at the time or out of the money, there's not really a reason to not sell something in June or July against it.
Yeah.
Because even right now in July, after the vol crush, after everything has happened here, you could still sell a 380 strike or 390 strike for
$350. I mean, like the 350 3 days ago got as high as $10. It's trading at $3 now.
Yeah.
And that's what killed you on because the same thing happened to your September call. Mm-hmm. Your September call probably didn't lose as much there. You probably lost like $400 or $500 on that versus the short-term call that lost $700. So you'd be probably profitable on the trade. But that's the short-term vol you have to sell. You have to get, especially into a huge move like this.
Yeah. So you either bought this call end of May or last week, I would assume.
Yeah.
But let us know. But yeah, either way, like, there's just no reason to not sell anything. And it's not going to hurt you. Like, if you own this 330 call, and you had sold, to Nick's point, the 350 in July that was trading for $10, you still have a 20-point wide spread. If it goes up, you're going to be profitable. And even if you sold like anything higher, like a 360, 370, 380, the higher you go, the more it's just vol premium you're selling.
Yeah.
And it's not going to hurt you if UNH goes from 300 to 360 and you've got the short call there. Yes, you'll see a loss on your short call line item, but your overall position will absolutely be profitable.
Yeah. And you'll likely get a vol contraction into the up move too. So like you have to be into something like this, into a move like this, where your goal is to get that gamma and that delta exposure. You need to be short the volatility too, because they come hand in hand typically. When you get upside moves in a stock, you typically get contracting volatility. And so to Mike's point, selling any of those, 350, 360, 370, 380, all those calls would have hedged you into the move that we had here, which was basically no movement. And it probably wouldn't have cost you all that much if you were right on direction, considering your long option, your risk reward on missing out on, a 50-point up move is probably $200 or $300 versus the $200 or $300 or $400, $500 hedge that you give yourself into this sort of move, non-movement and vol contraction.
Yeah. Especially into moves like this that UNH has seen, you are always going to see way more vol premium in the 30-day, 45-day cycle than something like September. So there's always a reason to sell something against it. Just it helps you hedge the continued downside move if it happens. It helps you hedge the non-move, which is what we're seeing now.
Yeah.
You're seeing a non-move and a big vol crush, which is why your call is losing money. But you'd probably be at a scratch if you had a short option against it. And you could just buy it back and then lean long with the long call.
Yeah.
But going forward, that's why we are almost always doing a diagonal spread versus just a naked long call.
Yes.
CRWV puts look tempting, but I haven't been following it. See a meteoric rise in the future, thinking a 110 short put, 44 days to go. Are you okay?
I'm okay. Yeah. I mean,
50%.
Yeah, volatility is through the roof here. You have to be careful, obviously, because there is a high borrow rate. I didn't really look into this when I put my trade on yesterday, but you have about 140% implied volatility, or 140% borrow rate. So it is very expensive to borrow there. I don't know if I would go there. I would probably be a little bit more conservative and go to like the 100 or the 85. I mean, the 85s at $5 is still very juicy if you're neutral to bullish. I can't get bullish into a 3x in the price in less than a month.
But if it drops to 85, it's a much better cost basis. Like your cost base is at 80 if you sell the 85.
Yeah, it's more reasonable to be, and especially into this sort of move, which I think we all can look at and see it's a little bit of a squeeze here.
Just a little bit.
Just a little bit. That's the sort of thing I would do, or you do like a wide ratio spread. You could do the 110, 90, or 95. This gives you it gives you a lot of buffer to the downside. If you're looking to be short this on the other side, you got to be careful because of that borrow rate, the call ratio spreads. You have risk on those calls, which I didn't look at when I was trading this. I just thought it was just a silly move. So I think a lot of this is probably squeeze related and float related. I'm sure the float is lower than, there's some sort of lockup here. So just be careful. But if you are trading it to the downside, put diagonal spreads are probably something I would look, or if you have the capital, doing like a 1x2 type crab trade. You could buy the 125 and sell, two of the hundreds against it. That sort of setup is an interesting setup here, just because of the volatility here and playing into the directional move. This sort of trade gives you a break even at 100 or lower.
Yeah, and if you're looking for a continued meteoric rise, like you could do a diagonal spread too. Like you could buy it August, sell July.
Yeah.
50 points wide for $1,500, that you're going to make more money on that than the short put.
Yeah.
If you do get a move up. So, yeah, a lot of different things there, but definitely got to be careful with the big size move. We don't like to do double calendars for earnings anymore. Why? I'll still throw it on eventually, or every once in a while, but I don't
think we really ever did.
I mean, I've done it before, but it's the only situation where it sets up to where you can actually make money, in theory, is when you have a massive earnings implied move and it's not being priced into the later cycles, and we just haven't seen that setup recently. Because if you do a calendar on the call side and put side, if you do get a move to one of the sides, one of the call options or put options is going to be a losing trade. So you have to offset that by gains on the other side. And the way that the setup that helps you do that is if you are collecting, let's say, for the short options, $500, and you're paying $1,000 max for the long options. Like if you're collecting 50% of the value of the options that you're buying, it helps you absorb the vol crush in smaller moves. But really what you're looking for is a move towards one of the strikes, ideally the call strike, because that's generally where you're going to get the most value with the increased stock price. But it's just a tough setup where we're just not seeing that much volatility. Like I've been covering earnings reports for a lot of these top stocks this quarter, and everything has been within 10% of the stock price, which is pretty low. If you see something that's like 15%, that's when you can maybe look at something like that. It makes more sense. Theta Trader, I got this short at Target. I own, I think, every color.
Big Target guy.
Yeah. This was a great shirt, though. I bought this in an emergency situation in New York, and I was like, oh, I actually like this. Went back. These are like $15, $20. So these are not even a premium brand.
Hey, you could get long Target if you'd like.
I actually do have a shirt similar to this that I got at Nordstrom Rack for $90, and it's my most frustrating shirt because it's so thin that like you can't even fold it, and you can't hang it either unless you have the long hangers because it gets a little dimple.
Yeah, yeah.
So it's basically an unwearable shirt that I spent $90 on. What are you gonna do? That's why you just go to Target.
Yeah, I think we're gonna get long some Target here then.
Perfect. I'm already long Target.
Are you?
Yeah.
I'm gonna do a cheapy diagonal spread like the 9,500 August, July. I was gonna sell put, but it uses too much capital. So
yeah, I've got the 100 103.
353. I mean, that's just cheap.
It's just so cheap.
I mean, this isn't like a high upside trade. Maybe $100, but it's a cheap way to play.
Can't fade the bullseye.
Yep.
We tried fading the mouse. That didn't work.
Yeah, I still have some short delta there.
Yeah, mine's just a little bit. I have the 115, 105 put diagonal in Disney. So it's fine. It's right there. Just need a continued sell-off here.
Okay.
IWM tried to rally yesterday, sinking back again in a slow walk of shame. Instead of small cap disappointment, maybe vanilla S&P 500 trade. How's the liquidity in the micro E-minis these days? It's not great. It's not terrible. I mean, it's still tradable. The most annoying thing with the micro E-mini specifically is you just see these bid-ask spreads just like fly around.
Yeah.
And it creates an environment where you see your P&L just shift in an impractical way.
Yeah. It's just, yeah. It's just too small. Too small.
Yeah.
For the options. I think it's a perfect scalping vehicle and static delta vehicle. I just think the options, the bid-ask spreads get goofy. You have all sorts of overnight messing around in there. So yeah. I don't know. I just think you do SPY. Do a put diagonal like I did in SPY for $700, and you'll make more on that than selling calls in micro E-minis.
There you have it. Are we still sticking with the IonQ short put? Yes, we've got that. I've got the 35 in July. It's down 40 cents, but still out of the money, so it doesn't matter to me that it's down 40 cents because it won't be down 40 cents as long as we stay here. So yeah, seeing a little bit of a drift lower, but so much premium in there that we can absorb a lot of movement. And as long as we just stick around this level, it'll be just fine. But yeah, it's a short put, sized correctly, just one contract. So even if INQ drops below 35, I'll just continuously roll it until eventually it goes above 35, if it ever does. So yeah,
I have an upside butterfly here. I bought in the risk on.
Cool.
Yeah.
Leonardo Teixeira, followed you on the love position. Why did you close it today? I just looked at it, saw it was up $120 and said, okay.
Yeah, had a nice move.
Yeah.
I mean, what are you playing for?
I think another reason is I was short Southwest. I'm long UAL and I'm long DAL, Delta.
Okay.
So I was kind of doing all at once. So I just saw the opportunity to close love after the little sell-off it's seen in the last couple of days.
And you had just a zebra?
Yeah, just put zebra.
Yeah.
So if you want to hold it, you can hold it. Nothing wrong with that. But usually with zebras, like I'm just playing for a short-term directional move. I got it, $120. Take it off.
Yeah, I mean it's easy to put management metrics around stuff where you have capped profit potential, like a short put or strangle or whatever. With zebras or diagonal spreads, or if you're just naked long calls or puts, it's a lot more subjective. And I think over time, in my opinion, when I get a move like this, like how much more do you play for than a 10% move over a week? Like that's as good as it gets.
Yeah.
I know things move around a lot. You look at a core weave and you're like, oh God, I mean, this thing moves 200% in a week. And sometimes those happen. But from a realistic standpoint, if I told you could, make 10% a week, everybody would take that.
Yeah.
And that's kind of how I look at positions.
Yeah.
There's always going to be more opportunities.
Yeah.
Like everybody's obsessed with making as much as like why not just get the last 5 cents out of the trade or the last 10 cents? And it's all, there will always be more opportunities.
Yeah. I think that that brings up a good point. Like my gold butterfly, it's up $140 right now. I could close it, but I also know that I have no risk on this trade.
Yeah.
And if we get a move higher, it's going to appreciate to much more than that. Same thing with like micro crude. I've got a long micro crude contract and a short call against it. It's up $100, but it's a long-term trade. I have no upside risk. So I'm fine with that too. But like a love put zebra, I don't necessarily need to hold that long-term. And I don't want to hold it long-term. It's a purely directional trade. And really when I come to the market in the morning at 8:30 when the market's open here, I just look at my P&L open and see what's over $100 and then just analyze that. Like that's literally what I do. If it's under $100, I don't even look at it.
Oh.
If you hold an AVGO June 6, 210 call, would you hold for earnings or exercise or close before earnings tomorrow?
June which?
June 6th, 210 call. If you own it.
You are just long the stock. So I would probably close it because this has been a mega home run.
Huge.
And I would roll to you want to keep some risk on, you do a diagonal spread.
Yeah.
And
100%.
If the stock is down $10, instead of losing $1,000, you lose $200.
Yeah.
If the stock's down $20, instead of losing $2,000, you're only out $300.
Yeah.
Like, that's the sort of thing I would do. That's me.
Yeah.
Or sell the at the money call, sell the 260 against it and say, you know what, if the stock goes up, I'll make, $800 more, but and then that's it. And then I'm done. And if the stock stays sideways, I'll keep that $800. If it goes down, you got some risk. That's how I would do it.
Yeah. I mean, a 2-day
or buy, sorry to cut you off, but you could also buy or sell out of the 280 and buy the 320. You know, just take that risk off the table. It costs you 70 cents. You know, like, why have that tail risk for nothing?
Yeah. Yeah, there's just no reason.
Yeah.
I was looking at like maybe setting up a collar against it, but it's so deep in the money. I would just close it. And then I agree with Nick. I think if you want to keep risk on, you could even buy a 260 16-day and sell a 2-day 280 or 270 and just keep the risk small. You'll still make money to the upside.
Yeah.
But your risk is way less to the downside.
Sell the 245 put in the weekly.
Yeah.
Yeah, something like that takes off, $15 of risk.
Mm-hmm. But yeah, definitely closing it.
Great trade though.
Trade.
Shout out to you for the tendies.
I mean, you basically turned
a couple bucks into a couple thousand.
Yeah. It's a great trade.
Yeah.
Interesting that you mentioned buying gold shares and selling a call against it. I've been selling puts near the money, hoping I'll get assigned shares. That's fine too. It's just like, what are you trying to do? Are you trying to acquire shares at a lower basis, or are you trying to maximize profit potential on the upside? That's the question. If you're trying to acquire shares at a lower basis, then the short put is where you want to do what you want to do. If you're trying to maximize upside profit potential, then buying the shares and then selling an out of the money call that has call skew against it or call skew within that short premium is going to be the way to do that. So, yeah. And if you sold a put and then you take the shares and then you sell a call, you're still participating in the upside call skew.
Yes.
They added more strikes today on CRWV. Yeah, I bet.
Yeah, they
will add strikes every day.
Yeah. There will be more, I'm sure.
A lot of people looking at CRWV. How about selling a July 90 put 220 call?
It's a big boy trade.
Yeah.
I get it. I really do. I would be careful on the call side just because you do have that ball rate. But yes, it's a big boy trade.
Yeah. And it's like one of those trades where these are those trades like when you first come to the market, you're like,
this is free money.
How could this lose?
Yeah.
And then 2 days later, it's in the money. Like,
yeah,
there is plenty of risk here.
Yeah.
So yeah, just got to be careful with that. Let's see. This is one where like,
what are you thinking?
I'm just thinking like, these are the ones where I've done this before in Tesla, but these are the ones where like a reverse calendar is interesting. Like if you really wanted to sell the 90-220 strangle, you could go out 2 weeks and buy the same strikes for a fraction of the cost. And if you get a big vol crush, you just hope that your short premium in the July cycles crushes as much as June. At least you define your delta risk in that scenario, but still it's too risky, I think. Because the borrow rate, even if you place that on and then you have your short call assigned
on a crazy
move, then you're hitting the borrow rate, and then all your systems are in flux. Yeah, it's tough.
It's a tough trade.
Yes, this shirt is available. This is short sleeve, and this does have a pocket. So, earnings play. It's exactly what you're looking for. Put this on YouTube, put it on your phone, drive to Target right now, and go grab them. I think it's
free ads.
Oh, here you go. I think it's called Goodfellow. There's the pocket, short sleeve, great quality. Oh, we got the solo. We got the solo look.
Oh my God! What is this? The freaking fashion show? What is this?
Oh, they flipped it to you. Tasty.
Oh, there we go.
If you want to get tasty gear, threadless. It's on the website.
tastytrade.com.
Yeah.
Yes.
I'll just
link on the site.
I'll put it on there.
Yeah, put that out there.
Anywho, let's see. Boeing. IVR of 4. How would you go long here? Position.
God. We're up only again. Everybody wants to get long everything.
Yeah.
Scary. I don't know. I would do poor man's cover call or call diagonal spread or something like that. I think it's hard to sell some premium here. The buying power is probably pretty high. Call ratio spread or crab trade would be pretty interesting. You know, that's the sort of thing I just can't can't get long into this.
This is so funny. It's just like
what?
A couple months ago in April when things were really crashing, we were like, this is not going to be a V bottom, and it's the biggest V bottom ever.
Jinx it.
At least right now. It has V bottomed. It doesn't mean it can't go lower, but I did not see this coming. That's for sure. When would you use a zebra versus a calendar or diagonal? Good question. So calendar or diagonal, I would use in a higher IV product. Not IV rank, but actual implied volatility. So like gold or LUV even, like LUV is under 40% IV. So I would say that's low. Gold, even though IV rank is 42, gold IV is 20%. So I've done a diagonal in there, but you can place a zebra in here, and really the lower the implied volatility is in the product, the lower the cost of the zebra will be relative to the price of the stock. So like I could do a 45-day zebra in gold for $1,000, less than $2,000 if you're trying to kill all extrinsic value. So like $300 product, less than $2,000 to get 100 deltas in there. That's not going to be the case if you are doing a zebra in a 50% IV product. So zebra, I like to do them in really low implied volatility products where the premium is just not there, and you can create a zebra or set up a zebra in a 30 to 45 day cycle and pay $200-$300 for it. Calendar diagonal is where we're trying to either take advantage of skew, like the GLD diagonal we did a couple days ago, or if it's just a high IV product. Because if you're buying an option that's further out in time in a high IV product, but you're also selling an option in a near-term cycle, you're offsetting a lot of that high IV cost. So that's pretty much it.
Yeah. And I think that, the strategy selection, obviously the cost and exposure to volatility, those are all parts of it. But from a directional standpoint, a zebra is 100 shares of stock. So you're much more directional on that trade than you are with a calendar spread or a diagonal spread or something like that. So that's, the directional exposure is certainly a part of it too.
Yeah. How are we going to adjust or defend the calendar spread on CrowdStrike? So there is not much to do with it.
Let's see what my Iron Condor would have been a small little winner. Never got filled.
Yeah.
So you're what? The 520?
520. So 520 long July, short the 16-day. The first thing I looked at this morning was how much is the 520 short worth. It's still worth $150. It was worth $1,000 when I sold it. But $150 now is still a decent amount. And with calendar spreads, I don't want to roll this 16-day closer to the 44-day long unless I really have to. And I would rather do that into a 10-point, 20-point up move because that will allow me to roll for a credit and pick up more premium if I were to do that. So right now, I'm not doing anything. Even though we saw this big sell-off, 520 is still right at the expected move. And like we saw earlier, like this was only down $160 an hour ago when CrowdStrike was down 20. So this can very easily become a scratch if CrowdStrike rallies 20 points, 30 points, which seems like a lot, but it's a $500 stock. So the expected move is 50 points for the next 44 days. So I'm not going to do anything with this yet. It's already a calendar, so there's nothing I can really do. Like, I don't want to roll the call down and create credit spread risk.
No.
So I'm just going to sit here and see if we get a rally. And if we do, then I will probably try and roll up and out to a higher strike in a late, like 1 week later, like go to the 23 day and roll from the 520 to the 530 or something like that. But the markets are not good right now. On ES short puts, we've been talking about buying far out of the money puts to manage risk and get ahead of big market sell-offs and buying power requirements.
Please do it.
Thoughts on buying in the same expiration as the short put versus progressively buying cheaper at closer expirations?
You certainly could. Both are the great thing about futures is that it's dynamic. Your span margin is dynamic. So like if you're selling a 50-day put and you're buying a 16-day put, it's going to reduce your buying power significantly. I know this is a reverse diagonal, but even if you're buying a tail put here, it doesn't even matter. It's going to cut your buying power significantly, and it's going to hedge you if there is a big move in the next 16 days. So either of them works. I think I would just do it in the regular expiration because then you don't have to get into the issues of that put that you're using as a hedge is probably going to be closer at the money, and you're going to want to take profits on that. But the vol of the further out expiration, depending on how big the move is going to be increasing. I think either is fine. Either of them, you have to do one or the other. You have to do some sort of put, especially if you're in a smaller size account. You can go very, very far out
and still reduce bases.
And yes,
reduce buying power, I should say.
And it's not even about the short-term buying power reduction. It's about the tail risk reduction because this spread obviously can get much bigger. It's got $87,000 of risk. But you're going to get significant reduction. When this is a very tail option, let's make it 4,900 into a down move, a 200 or 300 point down move, or 30 VIX or something like that, where you see that sort of event. Instead of this going from the naked position going from $11,000 to $100,000, it goes from 11 or 6,000 to 20,000, 15,000, just as estimate numbers.
Yeah. And just make sure if you are staggering the expirations, just make sure they're in the same contract. So like if you're selling a 50-day put in the ESU5 contract, the closest expiration you can go to in the U contract is 16 days out. So the Tasty platform shows you that visually. You can see the dark shading of all those expirations. All the way up to 106 days, those are all the U contract. And that way you're not selling one put in one contract and then buying a put in a different contract that's not even settling to the same one. Any play in GE? It has blown through the iron condor with the calls at 220, 230, have $3 in credit.
Look at this. 160 to 252.
What are we to do?
Give me that.
Yeah, they spliced out these products. So this is GE Aerospace. 220, 230.
Oh, I'm gonna get some short delta here.
There you go. Yeah, I mean the only thing you can do with a credit spread is roll it out in time before it goes in the money, which is when it was at 220, which was like last week, which is insane. 2 weeks ago, but. Yeah, this one is trading for close to max loss. So you're risking 70 cents to get back some if it actually does sell off. So there's not much to do with this particular trade. If you wanted to add risk, you could do something like what Nick just did, maybe a diagonal spread to the downside. But with this current risk, there's not much you can really do with a deep in the money spread like that.
Yeah.
Let's see. What about selling an out of the money short call on AVGO for next Friday around 10 Delta?
Next Friday. 10 Delta. Let's see where you're sitting at. Yeah, I mean, you're 300 strike. Yeah, I don't hate that idea. I think, yeah, it's a big position. $2,000-$3,000 in buying power.
Yeah. But like, I might just sell the 2-day.
Yeah, the 280 or something at 285.
Yeah.
290.
Because like the 285 or the 290 in the 9-day is trading for between 250 and $300. The 2-day is trading for 120 to 250, a little bit less, but you're getting all that premium immediately. So, and even into an up move. The nice thing about the 2-day is even if AVGO goes from 260 to 270 and you have the 280 or 290 short call, on Friday, those are worthless. The 9 days will not be. The 9 days will show a little bit of a loss, I would assume, because the vol collapse is not going to be as great as the 2-day. Do we ever trade small cap earnings like APPS? Thoughts on how you would play it? Juicy premium.
I would probably just buy shares.
Yeah.
And just be long the stock. It's tough because you don't have weeklies, so you're kind of stuck in the trade. You know, if you sell the 4.5 put, it probably doesn't move on a $2 up move. You know, just based on 170% implied vol. You know, you want to get some added leverage and you want to buy the, 4 strike call or even an out of money play like a gamma type play with the 5.5 or something like that. It's just stock's $4.50.
Yeah.
You're taking a shot.
Yeah. Yeah, even if you're selling premium like the 4.5 or 5 strike, like you're basically manufacturing premium by selling it right at the money or slightly in the money, selling some intrinsic with some extrinsic, but yeah. And really, like these things, like if you sell the 4.5, if it rallies $1, you're worse off with a short put than if you just own the shares, because you can only make 60 cents on this 4.5 strike. So these $4 or $5 stocks, like you might as well just buy the shares if you're willing to take the risk.
I would agree.
Let's short 100 shares of AutoZone and go long 30,000 shares of Ford. Okay. Ooh.
Oh, I just got my Japanese yen.
Nice. So yeah, I guess AutoZone's a $3,000 stock.
Yes.
That's insane to me.
That there's been no split or anything?
Yeah. That is wild.
I don't think this is, 40,000 shares traded today. So that doesn't look like it's one of the most active.
This thing was $500 in COVID, and now it's $3,700.
Hell yeah. You can't trade these options either. Look at these bid-ask spreads.
Yeah, this is like the old Chipotle.
Even worse. There's nothing. Where's my volume? There's volume. Yeah, there's nothing you can do here.
Put my first Forex trade on in the platform, long New Zealand dollar.
Ooh. Against the USD?
Yeah.
All right.
Should we join him?
Yeah, what's this looking like? A nice little rally here. What Do we have a thesis, or did we just? Well, you had a good move if you did this yesterday.
Yeah. The thesis is New Zealand is sick. That's it. Yeah, you had a big rally from yesterday, for sure.
Yeah, I'll do it. My little micro lot.
There you go.
Let's see what this looks like on a. So this goes. Oh, it's a big. So let's look at where this chart's been. Yeah, I guess we're still kind of on the lower end. Let's do that. We're gonna get long it.
Perfect.
Deal confirmed. I don't know if I like that wording. Deal.
Making deals? Just slinging deals?
Like Phil.
It's probably the official. I don't know, but it's probably the official deal confirmed.
I got it. Long the Aussie and the New Zealand dollar now. Look at that.
Oh. What would be a good play for AKBA? Akebia Therapeutics. Another $4 stock. Nothing to do there.
Stock's going from $1.50 to $3.50.
Yeah, these options are zero bid.
Yeah,
so
you can't do this.
There's nothing to really do. The only thing you could do is like if you're trying to buy the stock without all the risk, you could buy like the 2.5 call for $1.20 in October. Like
you might as well buy the stock.
Yeah, you
not
can,
have to deal with the goofiness of the options.
Yeah. You can do something like that, but yeah, if you think if you don't want it to go to zero and lose $300, you could do something like that and reduce your risk. But yeah, these stocks we don't touch because they don't anything that doesn't have weekly options we don't touch. To put it simply. Lots of tourism income for New Zealand. They got hobbits.
I like it. I'll take it. New little trade for me.
Yeah. I wrote a earnings preview for Lulu.
Is that today after the close?
That's tomorrow. Long story short, they might run into some tariff issues.
Ooh,
40% of their inventory is sourced from Asia. Vietnam's 40% is in Vietnam, I believe. So 30-point expected move, $300 stock. They had massive international sales increases last year, which is interesting relative to US, but I don't know, man. Lulu plus tariffs plus more expensive clothing. Do you think the quality outweighs the cost if they were to jack up prices?
I don't think they're going to jack up.
We're both Fiore boys.
Yeah, I like that.
Yeah. So yeah, I would say I think I'll come back to this tomorrow, but I'm eyeing an iron condor in here. Maybe leaning a little short, but I think an iron condor feels right. Because IV is so high in here, like you could do a 300, 380 short strikes, 10 points wide in June for $300. Feels right.
All right.
I'll come back to that tomorrow. I placed a link to the earnings preview in the YouTube chat. We also have AVGO. Our boy Gus wrote this one.
Ooh.
Yeah.
The young gun.
The young gun. I put a link to the article in the YouTube chat as well. You can find these on the News and Insights tab on tastylive.com if you're not in the YouTube chat. But yeah, we're definitely going to be trading that one too. But both of these are tomorrow after the close. So join us tomorrow. We'll place those trades. We want to avoid like the big moves pre-earnings, especially for neutral trades like an iron condor.
Mm-hmm.
Which is what I'm leaning towards for Lulu.
That it for us?
I think so.
I'll be on with Chris after this, so you get more of me. Mikey will be done.
Perfect.
Cool.
Yeah, we'll get you out of here a couple minutes early then.
Yeah. I get a bathroom break.
Oh, perfect. Amazing. Thanks for tuning in. If you've got any questions, you can find us on the Twitters. I'm a Trader Mikey B, Nick's a Trader Nicky Bat. We got plenty more content coming your way on the YouTube channel, as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new TastyTrade and TastyLive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work?
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
We are back. It's still Wednesday, June 4th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Nick Batista. Nick, kind of a soft turn here through the middle of the week for stocks, but hey, we're still green.
Yeah, it's been a chop fest. I mean, I don't know exactly what we're waiting for. Maybe the employment numbers. You got beige book today. I mean, that's got to be something, right? But yeah,
I'm so excited there, Nick.
I'm front running you. I'm sorry.
No, I'm not excited about the beige book at all. I don't think it really matters here, but go on.
Yeah. I mean, it's been a chop fest. We've stalled out at 6,000 multiple times. I mean, we haven't touched it yet today, but I put on a little short delta today. I'm no bear, but you know, it seems opportunistic here with volatility so low and just kind of the choppiness that we've seen in the market. You get in some of the other stuff that's kind of indicative of a little bit of froth. You got all the, Core Weaves of the world and their INQ and HIMS and just, when the pigs start flying and we're kind of chopping around and you can't break these nice round numbers and volatility's at lows, my spidey senses start to tingle a little bit. So that's kind of where I am right now.
You're not the only person who I've heard say that in the past 24 hours. A few people on my Twitter feed were saying that last night too, as today, like when the short stuff, the most shorted stuff skyrockets, but the indexes aren't climbing. It's probably just like the last little bit of the short-term covering rally. And then maybe you get a spillover here. So stocks, they are having a choppy day. John, we can turn to the slides if we haven't gotten there, in part because of what I think is really uneasy U.S. economic data. Nick, I saw these numbers this morning and I just said to myself, I'm going to have to deal with Ilya later today because it's everything that Ilya would want to see.
I know. And then the market's done nothing though. So how is he? Oh, he's on with you after the close today. So you'll get that.
I'll get that earful later today, but it is the data, I think, that's drawing the attention here. The data itself, who cares about ADP? Honestly, we've actually seen studies come out. Goldman Sachs, their research group in recent years, has shown that the ADP report, when it misses expectations, it usually caters to non-farm payrolls beating. And if ADP is better than expected, it usually means NFP is going to miss. So ADP today comes in at 37,000 jobs versus a forecast of 115K. President Trump uses it as a pretext to call for Jerome Powell for a rate cut. But the ISM services that comes out at 10 a.m. Eastern, 49.9 versus an expectation of 52. Services are 70% of the economy, 2/3 of the economy if we want to go on the low end. 50 is your line in the sand for contraction or growth. So the largest part of the economy in the U.S. may be in contraction. Forget the narrative there for a second. I want to focus on what the market is doing in terms of rate cut pricing because we are 2 weeks out from that Fed rate decision. And while the data don't necessarily have any impact on the June meeting, although June cut odds have gone up from about 1.5% to 4.4% today, we're starting to see some life come back into the July. And now even here for September being favored for that rate cut plus a little bit more even, 1.39% chance of a 50 basis point cut. So the evolution of the data still not catering to the Fed being able to cut just yet, but today's was enough to get the market thinking, okay, actually, September's probably here. And July may not be out the window if we keep trending in this direction, which may not be good news for stocks, which, as you pointed out, Nick, low vol and the pigs are flying. Maybe we should use the opportunity with the low vol and the flying pigs to be a little bit more cautious.
Yeah, I mean, I think the rally in bonds today obviously helping some of these numbers, but I think that's also kind of keeping the market a little bit bid here. But yeah, I mean, nothing today is, I mean, like, does today's employment numbers change all that much? I mean, even when you're looking at the percentages, it's not a huge change. You got a couple percentage points up on the June hike. I mean, September was projected to be our first hike before this, or our first cut before this. Does it really change all that much?
I don't think it changes. It doesn't change the destination, but it changes perhaps how we're getting there. So getting to no cuts in June and July with the cut odds going down heading into those meetings gives a vibe of like the rate cuts are getting further out of reach, right? Mm-hmm. They're kind of like being dangled on a string and like we can't just quite get them. But if we're heading into these meetings with rate cut odds rising, it gives you the sense that, yeah, the cut may not be coming now, but maybe it comes next time. So it is a different bit of a framework. And you point out the move in bonds today. I think that's really of consequence, and what a relief as we turn to that part in a little bit here. We do have an abbreviated show today because Truth or Skepticism is up next. Ooh. So I do want to get over to the charts, Nick. And
you never want to step on a rat again. You'll never hear the end of it, okay? So you make sure we're out right at the minute or two before.
And he has my personal phone number, right? So, you know, I hear from it. We can look at the S&P 500 right now, up 0.18%. It's a fairly modest day. Vol continues to go into the tank, though. It's a 14.5 IVR. Nick, volatility is in contango again. If you look at the VIX volatility term structure, it's pretty clean up, actually, as you go out. There's no real kink or hump in the curve. So what do you take about this market action here? We're near multi-week highs, basically short of 6K. You feel like it's safer to be short up against these highs and maybe risk 30 S&P 500 points than pressing longs up here?
Yeah, I'm not jumping at the opportunity to get long. I don't think there's a lot of places that look cheap, given the move that we've had. I mean, you look at like a CrowdStrike that had earnings after the close yesterday, reported great numbers. You know, it's a pretty insulated business from tariff issues or, you know, really anything. It hits all the numbers, or it hits all the buzzwords and all that stuff. And they basically hit all their numbers. Obviously, it's a high PE stock, but that one sold off. You look at AVGO, you got earnings after the close tomorrow. The stock's gone from 150 to 250 in the span of, you know, 60 days, a little bit less than that. You know, I'm not jumping at the opportunity. Like I was talking about this with Gus in reference to AVGO. It's a lot different to move, you know, 10%, which I think is around the expected move, right? So AVGO has earnings after the close tomorrow. The weekly expected move is $17. So we'll call it, you know, 5 to 7% expected move. That's a lot bigger from a notional value standpoint when the stock's at 1 trillion market cap versus a month ago when the stock was a $500 billion company to move 5%. Like those are vastly different numbers. And I think it's, you know, I'm hesitant to, I think the good news is already baked in a lot of these products that have moved like this, that have V-bottomed into this sort of, you know, into earnings here. I'm not jumping at anything to get super, super long. I'm normally and am long delta. I am not as long as I normally am right now. Is how I
semiconductors Yeah, semiconductors here. They're actually having a pretty decent day ahead of the Broadcom earnings tomorrow. Names like Marvell, they're up to 5.81% right now. You have Omni Semiconductor or On Semiconductor, excuse me. That's up another 6.07%, and then NXPI. That's another leader here in the semiconductor space. I just saw a headline crossing my terminal here. Putin tells Trump that Russia must respond to the Ukraine drone attack from the weekend. I think that's obviously, I don't think that does anything for us here in the equity space today.
Yeah, it doesn't move
Nick,
much of the needle here.
I couldn't help but notice SMH. It's been trapped in a 2-week range. We get up there after the Geneva talks, right? We gap open higher. And then we basically chop around between 235 and 250. And today we're finally poking our head out above 250 in the semis, which was the whole point of bringing up those individual equity names, right? So the semis here are a leadership group, as is retail, which really intrigues me because these were the two sectors that were beaten down the most during the whole Liberation Day tariff episode from, we'll call it February onwards, when tariffs came into purview. Do you look at something like this and say, okay, the sectors that are the growth sectors are still leading and on the way up, so maybe I shouldn't be too bearish up here. Maybe this is just more chop rather than the top?
I mean, sure, you could build that story. We're back to all the, like, when you look at NVIDIA, it's back to 140. It's like nothing happened. And, you know what I mean? Like, it's like if you just, you were cryogenically frozen, at the start of the year and you woke up now, you think nothing has gone on. And, generally speaking, I'm buying the dips. I don't know how at this point with volatility so low, you got an IV rank of 4. What's the upside play? I hate to use Tom's wrong phrase of pot odds. But in my opinion, when I'm looking at the markets, it seems like, maybe a little bit of a pullback is warranted at some point, pop and volatility. I think there's still so much going on in geopolitics and, tariffs and wars and all sorts of things that can pop off at any time. It seems like vol is kind of cheap now, but, when you get a, 30% rally, 40% rally in some of the world's biggest stocks, you would expect volatility to get dulled. So I'm not jumping at this. If I'm playing I would rather be in these single names, your NVIDIAs over an SMH, because I think the big name stocks, especially your NVIDIAs, Amazons, Apples, I think they're going to be relatively stronger in any sort of down move that we have. And so that's, if you're trying to get long, I would stick to what's working.
Yeah, some of the individual names here today, Meta's up 2.45%, Microsoft's up 0.3%, Eli Lilly's up 2.47%, Tesla, Palantir down 3.35%, 2.81% respectively. So it's a mixed bag. You can see here with the semis perking up a bit broadly across the board. In some of those names, NASDAQ is your top performer. Sector rotation overall is decent. We track 25 different sector ETFs here on Futures Power Hour, and then consequently over time. I see 14 of the 25 in the positive. Right. And the big winners here are semis, biotech, home builders, home construction, which I think speaks to more of the move of what we're seeing in rates today, Nick. So the home builder story probably looked to the long end of the curve and the dramatic decline in mortgage rates after this morning's U.S. economic data, again, which points to a weaker labor market if you believe ADP, even though studies suggest maybe you should not, and then the ISM services, which came in below 50, just by a hair at 49.9. So I see a lot of low volatility here, Nick. I think that's also the problem too. Like when I see low volatility in the stock indexes, I'm drawn to go maybe be a stock selector on an individual level or kick out my attention to commodities or currencies a bit more. But even some of these individual equity names, like what do you do with an NVIDIA that has an IVR below 5? Do you just ignore it for the time being?
I think so. I mean, this got to be the tightest intraday range we've had in the E-minis in quite some time. And we're looking at, we've got a what, 25, 24 point intraday range today. Volatility has basically gone nowhere. it seems like the market's waiting for something. What do you think it's waiting for? Like, why aren't we blasting off above 6,000? Like, we've had no sort of downside. Putin's, throwing some things around. Taco is on the table, so the tariffs are all done with, and, that'll all be a nothing burger. Why aren't we exploding higher here? M2 keeps going. Big, beautiful bill, going to pump some more. Why aren't we exploding here, Chris?
Well, maybe the big, beautiful bill's hitting a roadblock. But before I speculate here, I do actually want to add some color to what you just said about the smallest intraday range on ES that we've seen in some time. That's not just a feeling. We're sitting at, 24.75 points right now for the intraday range in ES front month contract. So the ESM5 here. 23.25. That's the lowest range that you have prior to today, and that's December 3rd, 2024. So it's been literally 6 months since we've seen the market this quiet. I guess if what we're waiting for something, we're waiting for non-farm payrolls on Friday. That seems to be an important report. Mm-hmm. This is a month where we get the tariff pause and the detente with China during the reference week for non-farm payrolls, which I don't think that's a coincidence. So when the Census Bureau, the BLS collects the data for non-farm payrolls, they don't collect data every single day over the course of the month. Mm. They collect it for the week that has the 12th within it. So tariffs push back when? The week of the 12th. So we're not going to have the jobs being lost at the port and that dominoes of the truckers losing their jobs and then the retail store clerks losing their jobs, right? So that all stops. So this non-farm payrolls report shouldn't be bad in theory. Maybe we're waiting for a green light to let us know that maybe recession isn't here. Today's ISM services certainly throws a kink into that. Maybe ADP if you believe it too. But I don't know if we're waiting for anything, Nick.
If the employment numbers are not bad, then how do you move rate cuts up the chain?
I think honestly, I would prefer, if I'm an equity bull, I want to see good jobs numbers and not bad ones. In 2023 and 2024, one of the biggest misnomers was that the stock market couldn't rally unless the Fed delivered on cuts. And the reality was every time the Fed pushed back on cuts, their rationale was like, things are going better than expected. We don't need to. Like, that's not a problem for stocks. And so if the Fed tells us, inflation's down, but we're still waiting to see what the impact on growth is, and it just hasn't materialized yet. So the negative impact hasn't materialized. That's a good thing. I think that no cuts right now and pushing cuts back is probably the best bet. There's a sweet spot. I think a sweet spot is like September. Give us a September cut. It means that the tariff-induced nausea didn't lead to any significant economic damage.
Okay.
And that's where we are right now.
It seems like the dangling carrot.
We want the dangling carrot, but we want it, we don't want it getting pulled further away from us because of inflation.
Yeah.
We want it getting pulled further away from us because growth is holding up.
Yeah, but it's got to be in just the perfect spot. You can't be too far away and you can't be so close that, you can eat it.
Right. I think that's an apt analogy. Nick, Russell here the past 2 days was really strong. It was the clear leader yesterday. Today it's lagging a little bit. Volatility, not much to write home about with an 18.1 IVR, but it hasn't really broken out the way the S&P or the NASDAQ has. It's still kind of trapped in this range between 1980 and 2130. Do you have any strong feelings on small caps here after what they've done this week so far?
I guess there is a catch up now, and especially if you think that rates are going to come down, and if bonds continue to rally, you would think this is going to be that this is where you'd rather be relative to the NASDAQ, which is a couple points off of all-time highs. I guess that would be the story. I don't know. The Russell has been kind of off on the last year of trade. It hasn't. I mean, the correlation. I haven't even looked at the correlation. I guess it's 0.96 correlation to the SPY over the last 3 months. So, that's kind of a lot of the volatility that we've seen. But it's felt like the Russell is always doing its own thing. So I don't know if it's my place to be. How do you feel on it?
It's the laggard, right?
Yeah.
You don't need to be the fastest guy if you're running from the bear. You just got to be faster than your buddy. And so if you're going to short something, this probably feels like the thing to short. If I wanted to have short deltas in stocks, we've explored what this looks like if you wanted to take a a real tight position, even just going out to 44 days. This is actually in the U5 contract. So just to make sure we get the recent swing levels here, those are up at 2158. So just going on the other side of them, we'll call it 2175, 2200. That's a pretty decent trade, Nick. If we want to be short stocks, we can get a 62% probability of profit, a better than 2-to-1 risk to reward right now. That's not the worst thing for an 18.1 IVR. And it's better than, I feel much more comfortable shorting something that's lagging rather than the S&P or the NASDAQ, which low vol, positive technical drift, light trading volumes. We're in the middle of the summer. That's just a melt-up kind of market. You need something to kick us down. And today you've had some things that could throw some punches your way. Russia war going on, big retaliation coming, the bad U.S. data. I mean, pick something out of the hat. So I don't want to short the NASDAQ or S&P up here if they're behaving like this.
You think it's just that the market has gotten used to the headline risk?
Yes, but I do see that national Democrats are trying to screw that up. You know, the whole taco trade thing is not something you discuss around the president because we as bulls want him to chicken out on the tariffs, right?
Yeah, we just don't want to tell it to his face.
So when you're doing something like Taco Tuesday on Capitol Hill,
ooh,
you know, it kind of seems like he's going to have to prove that he's not a chicken. So we're going to get spike tariffs. You know, like in Curb Your Enthusiasm, where Larry David opens his spite store.
Yeah.
To compete with Mocha Joe. Like, we're going to get spite tariffs now.
The 2 a.m. tweet, but the market's telling you that, you know what, that they're not worried about it. That nobody's worried about that coming.
I just hope the DNC doesn't screw this up for us. The taco trade's a good thing. We have a good thing going here, Nick.
Yeah, okay. I agree. I mean, yeah.
I'm still leaning long. I need to kick out. I was talking about this with Jamal yesterday and Ilya and Dylan. I still like being structurally long deltas in the NASDAQ here. I'm leaning that way. We only have 26 DTE, so I do need to make a move on this position to roll it if I want to retain that exposure. For now, I do. So that needs to occur at some time. Today's probably a cheap day to do it, considering vol's in and prices are up. In doing so, I like the strikes at 44 DTE, still around the same area, long 3,000, short 33, or 23,500. It's a 4+1. It's a moonshot trade. You know, it's not the typical Tasty methodology. I'm not looking to sell vol here. I want the upside convexity. So I'm tinkering with it.
You're the up only camp. I love it. I'm with you. At the lows, I'm buying. I don't know.
You're more of a hero than I am, but I'm a momentum guy. I'm like, it's my fault. I will never catch the exact high or low. And it sucks when you have V-shaped recoveries because it takes a bit for those momentum indicators to turn the corner.
Have you felt the momentum being stronger, though, in the last 2 weeks? I mean, we've gone essentially nowhere.
We've gone nowhere, but you have gold holding up and oil doing what it's doing. And like stocks are kind of just riding it out. And for all of that V-shapeness, you have RSI that gets overbought and stochastics and MACD. And then all of a sudden they lose all these overbought readings, but prices haven't been dislodged. That's great, right? Now it's no longer we got here too quickly. We got here fast, but it's been a while, so we can keep going on this journey. Right. I like that, generally speaking. The digestion of overbought or oversoldness without price dislocation. I will stay long. We will keep moving. Bonds are the biggest movers on the board today. I say bond rally normal, Nick, because it's a play on what we said yesterday, where the bond decline was normal. You have good U.S. economic data. Stocks up, bonds down. Today, bad economic data. Stocks sluggish, bonds up. That seems kind of normal. If we were back in a normal market all of a sudden. For ZB, though, where we have long delta exposure, this is a very welcome sign of relief, particularly on a technical basis. Nick, if I may walk you through this, we were eyeing potential signs of candlestick bottoming last week when we had back-to-back or near back-to-back bullish engulfing bars here, and then here as we attempted to break out in a bullish falling wedge. And then all of a sudden we got this nasty little evening star candlestick pattern with Monday's close. And with that occurring up against the 1 month moving average, all of a sudden being short put spread here wasn't feeling so hot. But the past 3 days now gives you actually a morning star variety of a bottoming candlestick pattern back through the 1 month. This is a whole bunch of jargon, which most means nothing to people. The point is the technical improprieties that were building into this chart that suggested bottoming was not working out or becoming less likely have been negated by clearing what was that high we have at the end of last week on 113.06. So here we are, 113.20. I still have long delta exposure here. I'm going to hold on to it. This is a big relief, to be honest, because it looked like those bottoming call wasn't working. But the candlestick pattern and the chart pattern's here, and it's now playing out, and this is what we would want to see. So I think press on moving forward. I think this is a good day to get in. We have a sustainable low to work around near 111.5. I'm going to trade this for the foreseeable future as if we're going back to 121. Maybe I need to get a little bit more upside convexity, Nick. But this looks like a good chart now all of a sudden, which was falling apart the past few days.
Does the employment number tomorrow move bonds or no? If it came in low, you would think bonds would have to go up significantly.
I think about these things in the terms of narrative and if only narrative flexibility, which is to say that what's the narrative right now on U.S. economic data? It's either good because it's pre-tariff, or it's good because the tariffs haven't been reflected yet. But we're all kind of there's that sense of we're waiting for the shoe to drop.
Yes.
There's a lot of people waiting for the shoe to drop. So narratively, if you get good jobs data, I could see a whole bunch of people who are not even the perma bears writing it off to a certain extent as it's good, the economy is resilient, but let's see what happens next. Like the tariffs are in place, they are here. If it's a bad set of data, then I could see everyone panicking, saying, oh yeah, the recession's coming faster than anyone anticipated, yada, yada, yada. So if bonds sell off around the figure tomorrow, I actually want to, we'll figure on Friday, I would use that as an opportunity to sprinkle in that long call spread here. Okay. I was talking about this with Westwater this morning, going out to 51 days, maybe bracketing along like 119, 123. I know it's, again, low probability of profit. It's not the typical Tasty way, but if this is a bullish falling wedge, the technical imperative is to trade this like it's going back to the base, and the base here is the high that you have on 4.7 at 121 and 10 ticks. So having a call spread that brackets that 121 and 10 ticks area with some high convexity here, basically 11 to 1, would be a little bit better than that, like 12 to 1.
Wouldn't that be, as Ilya would say, a not good bond move? You know, like to get that big of a move that quickly, wouldn't that be a not good move for the market?
Yes, it would probably be in a not good scenario. And considering that, like most of my, my equity point of view is that things are fine for this current 45 and 21 day out window, not thinking much more beyond that. This would perhaps reduce my beta weighted delta overall. Okay. So it could serve a purpose. And if NFP comes in really crappy, Nick, right, the equity positions, maybe they get obliterated because we go back into growth fears like we were in late February. And it's not necessarily that I think we're going to get to 119. It's just that I think the 119 options at a 29 IBR are underpriced.
Okay. I like that.
So
I might get along a little TLT then.
Let's play with it here. ZN is the other thing that we've been watching here. Nick, do you have any, you said you're looking at TLT right now. Do you have any bonds exposure at the moment?
Not currently, but I'm open to something. I mean, you're clearly on the long side here, so I could dabble.
Notes have this similar pattern where we have this bottoming Morningstar candlestick cluster right up against the 1 week and 1 month, which to me says we're turning higher. But the big picture, Nick, is that the year range, we're basically at the halfway mark of the year-to-date trading range.
Okay.
This has been a market where we've been looking at short iron condors previously. I think that's eminently reasonable still. Given the expected move, we're talking about 108 and basically 114 being the local high lows. And we could do at the 1 standard deviation move here, picture perfect, 51 days out, it's closest to 45, but you could do it basically 2-to-1 risk to reward at 55% probability of profit in notes and make the bet that the year-to-date trading range is not going to break in the next 51 in, 21 day out trading cycle. I think that's a reasonable bet to make here. So putting this back on as well, let's send that here.
Yeah, you convinced me as you were talking, so I'm in with you as well. I'm at the 109 and the 113 for my shorts. I went 1 point wide on each spread, so yeah, I like it. Same exact trade. 1/3 the width of strikes. I'm into it. Volatility not super high, but you have some events coming up, so I'm sure volatility will swing around a little bit here.
Nick, even at the absolute worst of the fears in April, and even on the pullback that we had in May, we did not dip below 109 on this chart.
Mm-hmm.
So I would think that if we get to 109 again, we're probably going to see deterioration. It's not just going to happen overnight. Even if we had a down day like we did on, April 9th, that would just bring us to where? 109.5. We would still retain it. It wouldn't be a winning trade, but you'd still retain enough intrinsic value where you could get out while you're still within the guts of the short iron condor position. So, I mean, today's a nice rally here, but we took off the trade last Friday. Don't like putting new trades on Fridays in particular. And now there's reason and rhyme as we're close to the midpoint of the year-to-date range.
That's a good point. We haven't had a lot of weekend risk over the last couple weeks.
Ever since the trade detente, right?
Which
Ever since
one?
Mid-May.
There's been like 100 of flip-flops, this, that, change, move it forward. Now we're in, what are we in? July now? July 9th is the next one. That's the next deadline.
We are officially, I think, 60 days into the tariff, into the 90-day pause window, right? Okay.
But doesn't one come into play next week or a couple weeks from now? Before China is earlier, right? Or are they all?
No, China's in August. China's in August.
Oh.
Because of, yes. But what makes this interesting is we're now 2/3 of the way through this 90-day pause. We have one agreement, not a deal.
Yeah.
A deal is signed. An agreement is handshake, spoken word. So we have an agreement with one country, the UK, a country that we had a trade surplus with.
Awesome.
So we've either going to get a lot of deals real quick. This is going to be extended, or maybe we're just going to do Liberation Day 2.0, Electric Boogaloo. We'll call it Independence Day, dare I say, because July's right around the corner. Gold here, holding up, breaking out. Ilya had a great point yesterday that when you look to the 4-hour time frame, where did we pull back into? The former high. That was a very clean stair step up. And as we make that stair step up, Nick, this symmetrical triangle is breaking out. What else is there to say? This is as technically clean as it could get. For bullish continuation, I'm playing for a move back above $3,500 an ounce. Maybe you should too.
I actually have that would be perfect. 3,500 would be, if we just stopped and pinned 3,500, that would be perfect, because I have like a little broken wing butterfly there on the upside. We looked at gold and silver in the cherry picks yesterday and just looking at just the skew on the upside. And this is not abnormal for the metals, because the metals, they exhibit this upside skew. You have a scarcity aspect to it. You also have kind of a fear gauge aspect to it. So I like the play. I think the upside volatility is really interesting here as a play if you're doing long call spreads or broken wing butterflies, or if you're trading GLD with like call diagonal spreads. That sort of thing is certainly in play right now. You have volatility, IV rank at a mid 40s. So I'm with you on this assumption. It's tough to get long some things at highs like this, but when you have something like gold with the upside skew, I can play that game.
We're going to keep banging on with it, Nick. I'm going to figure out my exact. I'm still at 21 here. I like to ride these a little bit longer if I'm doing the out of the money calls, like 16, 17. So I'm not quite ready to do it yet. And if we do get a bit more of a squeeze here, it wouldn't hurt. But the swing levels here, we have a high back on the 6th at 34.77. We have highs here in April at 35.39. So if we wanted to go out to 54 days and play around those levels, we could say, let's go long the 34.75, and keeping it $25 wide as an anchor point. It's a 2-to-1, 40% probability of profit. You could go a little bit wider. You want to get us pinned at 3,500? That would be ideal in something like this.
Yeah.
3.5 to 1. I think there are ways to play with this, though. And you mentioned the vol. Like the call skew, it's here, but it's not as extreme as it had been. And we know that the market can get into that place where call skew gets exaggerated. So that could just be an aspect of the trade here. We're looking for that call skew to actually inflate a bit more in our favor. Right?
Yeah, I think it's if you're trying to get smaller with it using GLD, like even a diagonal spread of, a longer duration of let's call it, let's say August, where you're buying, the 315 strike and you can sell the July 325 against it or something like that. If you want to do a little bit less risk, you could go to like the 320. But this sort of position has not only the delta, but plays into the upside skew. That longer dated option that's closer at the money gives you some positive gamma, and you've got some time decay in the short term with the 325. These setups are really cheap ways to get some heavy delta. I mean, this is the sort of trade that I put on in SPY with volatility so low. I did it to the downside for the same sort of thinking, in that, when you get a big downside move in SPY, you also get this pop in volatility, and not only do you get paid on the delta exposure, but you have that gamma exposure as well. So these sort of trades, they're very cheap right now relative to the upside that you have because of the skew. It's not very often that you can sell, 10%, 5% out of the money options in gold for a 1 or 2%, premium to the price of gold. It just doesn't, you don't typically have that sort of upside volatility.
It's intriguing. Silver here holding up too. Yesterday it had a pretty sizable pullback, although 6% rally on Monday. Yeah. And then by the end of the day, we basically finish unchanged, right? We more or less get back to where we closed on Monday. And today we're pinning up here again too. That's a doji with an inside day. And as you look down to this lower term time frame, I'm really drawn to the fact that this looks like a little flag. Perfect little pennant forming up here after a breakout. Again, the metals look very technically clean here, and this level around 34.75, it's been an area where we've seen the market turn away from numerous occasions. So I'm operating under the principle now that we're trading in a new range in silver prices, like 34.75 up to basically 36.25. And to that end, consistent with waiting for an opportunity here, the trade was bunked last week, but now with the breakout and looking for the opportunity to get back in, like again, continuing the metals exposure here, I think there's enough going with gold, and I want to fix that momentarily. Yeah. But like long 36, short 37, the buying power is really high. Maybe this is better to do an SLV, considering look at the volume and look at the options interest in these strikes. But silver's breaking out, and I don't think that we should ignore that. So Nick, I've been a metals guy all year long. There's nothing in today's action that tells me I want to be anything other than a metals guy still.
Yeah, it was an interesting move on Monday. I don't know if this is for fact, but it feels like that was one of the few upside moves that we've seen in the metals where silver has actually outperformed gold, at least on a 1 day time frame. It's felt like the beta in silver has been more realized to these downside moves, like these big, when you have the metal selling off, gold's down 1%, silver's down 3%. It seems like that's where the beta has been. It hasn't really been the, 1 or 2% up move in gold and then the 5% up move in silver. So I agree with you. I think it's that kind of catch-up trade is starting to play out a little bit here. With gold being very, very strong, I think, silver hasn't had, it's basically unchanged from where we were in October, November-ish. Yeah. I mean, it's a little bit, it's gone nowhere. So I think I agree with you in that it seems like there is a catch-up trade there.
Last place to look is copper, which is up 1.29%. The short put spread that we had on here in the follow count, Nick, we took off yesterday, in part because we were trading near the top side of the range. It was at like 23 DTE. Is it really worth like trying to squeeze out another day or two when the market had proved quite volatile already this week, where yesterday we basically got, again, fortunate recovery. This is breaking out as well. Unlike gold or silver, which I feel a little bit more conviction being directional about and paying lip service to what our friend Ilya might say about the data looking terrible, I would posit that with that, we can go to CPER as a corollary for the IVR here, 57.3 for copper. If we were to look to a short iron condor position in that typical Tasty methodology, going closest to 50 to 45 days out at 21, you can get something in the neighborhood that's going to be a 3-to-1, 4-to-1 risk to reward. It might be worth it right around the yearly high lows, which have been effectively carved out around what we saw on Liberation Day, north of 5.41, south of 4.05. There's enough vol to harvest here is the point. And I think that with the low vol in the indexes and individual stocks, traders shouldn't be shy about dipping their toe into something like copper futures, which I know Tom is a big fan of.
Yeah, I think he's gotten whacked a couple times.
Well, that's what happens when you trade commodities.
That's true. That's true.
You get whacked.
Oil's been a mover. I mean, oil's been an interesting trade. I put on.
Yeah, let's head over there.
Oh, I'm too quick. I'm sorry.
No, head over there. Let's go over there. We have
sure.
10 minutes left.
I mean, it's been, we've chopped around the 60 to, let's call it mid 50s to mid 60s for the better part of this whole kind of sell off. Obviously, we had a little bit of more room on to the 70 side. We were there earlier in the year, but I'm talking since our kind of problems in the market. I think it's an interesting spot to be shorts and premium. You've got an IV rank of 39 and change. When you look at OVX, which is the oil volatility index, you got to type it into OVX with the colon CGI. It's not exactly high, but it's certainly still on the higher end of where we typically see oil volatility. So, when you're looking at, and this goes back to the silver trade or even in gold, when you're looking for something that's kind of got some juice to it, oil is kind of on the board here.
It's interesting. I'm looking at USO.IVR on the platform. It feels like this has been a line in the sand for vol, like a 35 IVR. We couldn't get higher than a 35 or 40 IVR for most of the year until we got to the start of April. And since the start of April, we haven't been able to crack below a 35 or 40 IVR. For oil itself, though, we do see a small pullback here today. It's not quite a bearish engulfing candle, but if we get below 62.40, it would be, and that's 28 cents from here. I currently have a short iron condor position on Nick. It's something we've been CLQ5 in that contract.
Yeah.
Okay, so in CLQ5 here, the short iron condor position, we're still 43 DTE, so there's a long time to go before anything's considered. But it's predicated on basically the post-Liberation Day area holding. My plan is if this thing cracks on through 64, I'm going to want to recenter my strikes because it feels then like we've kicked into a different part of the trading range on a technical basis. This looks pretty clean to me, right around 64. And then the new range becomes 64 basically up to 71. So I'd want to push out. I want to have my short call spread a little bit further away. I'd want to pull in my short put spread as well. 58, 56 as opposed to the current 53, 55, right? And I wouldn't want the 70, 68 short call spread. I want to push it out a little bit beyond the highs here, like 71, 73, 72, 74, just to give it some breathing room if we've traversed the midpoint of the range or going into the upper half of it. Because right now it's predicated on us staying in the lower half of that range for the foreseeable future. So not yet. Nothing needs to be done here today. We're still below 64, but punch through 64, and I think we need to tweak this a little bit so we don't get run over if this thing continues to move to the upside.
Okay. I'm with you. I'm wrapped between, I have the 57.69 is my short position. So playing that kind of range that we've been in 1.5 points wide on either side. So I'm playing for this. I'm basically neutral delta here, slightly long delta, I guess, with with the little bit of a down move that we have today. But I'm with you, playing for sideways action in the oil markets.
Sideways action in the oil markets, that tends to, absent geopolitics or a crisis, I suppose, that tends to be the prevailing trend. Just a lot of chop. Are you doing anything with natural gas?
I have not, but I was watching it the other day. There was a big move to the upside. What have we, I guess we've given up a little bit of it. What's the story there?
I know Westwater's short a put spread. He got in at the end of last week. He was looking at seeing if this area around 3.3, 3.4 would hold. I myself am waiting to see resolution of the more recent trading range, which is like 385 down to 342 or so. And it's just been oscillating within there. I mean, ideally, I would see like 385 and go, okay, well, we just broke the downtrend and we just broke consolidation. So I want long deltas. But we haven't made that decision yet. And nor have we broken through 3.42. So I can't say that I want to look for a short back into the lows that we saw in November. So it feels like chop. But it also feels like natural gas is getting close to a breakout. And so I don't want to have on a short volatility position here, expecting directionalist chop. It feels like it's going to move soon. So 53.4 IVR is tantalizing. It's certainly better than anything we're seeing in equities or even bonds.
Yeah.
But I still think we need a watch list this one and keep it in our pocket.
I don't move on natty gas unless the Oracle, Mr. Westwater, puts me into it. So I missed that one. I missed his put spread, unfortunately. So I'm on the sidelines, but I'm ready to jump.
I'm getting ready to jump too. I did not take the short put spread last week with him. We talk about the bond move being normal today and yesterday to an extent. Yields higher yesterday. The dollar was stronger. Yields are lower today. The dollar is a bit weaker. Seems like a classic risk on, risk off. What's influencing the currencies type of situation here? British pound, this would be a new closing high for the year with a slight uptick in vol, actually 45.9 IVR. Aussie as well. This would be a new closing high for the year. The Canadian dollar here today, it's time to get out of the 6C position where in recent weeks we attempted to put on a short call spread given the vol. There's 29 days to expiration. We just got a Bank of Canada rate a hold today. It doesn't look like they're doing anything anytime soon. The Canadian dollar is now at a yearly high after the BOC meeting.
Is it a short?
Why do I want to be? Yeah, short call spread. Why would I want to be a shorter call spread here with this market moving against me and starting to punch up into the area where, my strikes are? I don't like this. I'm gonna. It's a small loss, Nick. Right? And that's the great thing about these currency futures. You can dabble in some of these things and take some trades that good. See you later. $90 is $90.
Have you been trading any of the Tasty FX products? That's a fun way.
I finally got that activated on the account this week, and I have it available here.
Sweet.
I am trying to make sure that I have. Want to check some things in terms of how my old strategies perform, because truth be told, I have not traded spot FX in a long time, and I've moved just completely over to the currency futures.
Yeah.
Just because we haven't had it on the platform.
Yeah.
Right.
Yeah.
So I just consolidate everything in one place.
It's like riding a bike. You'll get right back on it. You'll have no problem. I have faith.
I just haven't been following, like Swiss economic data or looking at what their central bank is doing so closely. And
is that a positive? Do you feel mentally a little bit better not having to follow those sort of things anymore? Or do you have the itch to get back into it? Like to look at what's happening in like Mexico or, these other ones.
I'm like one of those people who just likes to read things, which
smart guy.
Knowledge without action doesn't yield anything, right? So
fair.
I need to kick the tires on some of my old spot FX strategies, because I had a few there that would operate around the particular New York and London opening and closing bells and the different liquidity pockets because of the different trading hours, right? And there's not really a break during the day. So it's a different market to approach. So I'm just, this weekend is the let's look at what worked in the different environments and spot FX before we go cannonball into there. Because one thing that hasn't worked this year, for what it's worth, is the typical methodology that, you know, CFA Institute taught when I'm studying for the CFA charter. Interest rate differentials. Can't trade currency on that right now because interest rate differentials say the dollar should be a lot stronger. But what do we have today? Maybe they're closing. Interest rate differentials actually closed today because U.S. yields are going down and the dollar's a bit weaker, Nick. So things are back to normal. I abandoned my yen longs, which today it's the top performing currency, so that looks foolish. Nick, I got a story for you. Did you know that the yen position in the futures market is the most net long ever? Traders have never literally been this long the yen.
Huh.
I will not be long the yen with them. I'm not getting onto that credit bus.
Well, it works out perfectly because I closed out of a put spread today, and Thomas gave us another put spread like a week or two ago that was great too. So that's good. I'm with you in zigging when others are zagging.
Yeah, it's a 36.5 IVR. So, look, if we get a little bit more of a drift higher here, I might be of the mindset that forget the long 007, the James Bond trade from months back. This becomes a short, the 0072. It's not quite there yet. But again, something in the neighborhood of 3-to-1 risk to reward against the local highs that occurred during the peak Liberation Day concern, Nick. Are we going to breach those levels? The next 65 in would be 21 out. That's the closest strike. I don't think so. But a little bit of a rally here. Get better pricing, better odds. Something to work with.
Okay. I can be convinced.
Outside of that, though, we hopefully get filled on ZB here. Going to roll the gold position, sticking along with the NASDAQ, although the NASDAQ needs to be rolled out too. Some adjustments today. It's a quiet day. Stocks here as we make our way into our end of our session here, Nick. S&P up by 0.22 now and NASDAQ up 0.35%. What's on the calendar for tomorrow? We do see that we have an ECB rate decision in the morning. Not nothing. Pay attention to it. We do see here that we have the press conference and then some Fed speeches. Fed speeches don't matter unless it's Powell. Non-farm payrolls on Friday, of course, is the big one. Nick, you and I are done here, though. You'll be back hopefully later today. Maybe you're going to pop on last call. Who knows? I'm just talking. But we're going to have Tom and Dylan on next. It's Sosnoff and Radigan for Truth or Skepticism, as always on Wednesdays. Up next on Tasty Live. Thanks, Nick, for joining us today here on Futures Power Hour.
Thanks for having me, Chris.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. TastyTrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
TastyLive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
Look who's back testing. TastyTrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at TastyTrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on TastyTrade. Genius loves company.
Hello, everybody. We're back. It's time for Truth or Skepticism. I'm Tom Sosnoff, and he's Dylan Radigan. Mr. Radigan, how are you?
Very good. Very good. Nice to see you. Yet another Wednesday. It's like Wednesdays back up on each other, one after the other here. I'm not even sure how it really works. But
we have like 50 of them a year. It's crazy.
There's Wednesdays everywhere.
Every day's Christmas. Every day's a Wednesday.
Yeah. So, what are you thinking?
What do I think about? I'm all over my brain's all over the place still. My mind's everywhere. I mean, what do I think about the Cubs? What do I think about what?
Anything you want to discuss? Anything in particular that's of interest for you here this particular Wednesday?
You know, as we kind of head into the summer, although it's never summer in Chicago, it's always 55 degrees and rainy. So we don't really know what summer is. I think today a fun conversation, a fun topic of discussion. I think that if you look back over the last couple of months, and you know, I hate to always drag politics into a discussion about finance, but I think that a lot of that's been done for us and forces our hand in a sense. And I think one of the more interesting things about the last, since the November election or since the January inauguration has been the relationship between the current administration and the private sector, specifically Trump and Elon, and the amount of money that was spent and influence and roles and just that that crazy relation. I think it's a crazy relationship because I don't think it's ever anything like that's ever happened before. And then I think there's not a single person in the world that would be surprised
by the inevitable breakup. I just don't think there's, I thought from day one, I'm like, who's going to break up with who, and when's this breakup going to happen? I mean, this is.
But I think let's
trying to be politically correct here. By the way, okay. I have so many comments I want to make about this breakup, but
But let's start at the end. Which is the breakup is upon us.
Yeah.
Not just in the sense of there's been a departure, but in the sense that there's been public commentary, at least from one of the individuals, that is pretty aggressive and critical. I believe the word disgusting abomination, or the phrase disgusting abomination, has been used.
Well, with respect to a specific bill, not with respect to the administration
with
itself.
With respect to the headline, not just any piece of legislation, with respect to the signature legislation.
Yeah, I think that's fair. Yeah, but for reasons that might be, but for reasons of abomination that may be different than like I felt that bill was disgusting and an abomination, but for reasons that are completely different from what Elon Musk thinks are reasons for a disgusting abomination. I mean, so I think that there's, and you also have to wonder how much of it is personal too, with respect to the rolling back of, all the credits for electric vehicles, among other things. How much of that is personal? So I think there's a lot of different aspects here. How much is personal? How much is for the things?
How much is really criticism of the actual legislation, and how much is just a pot shot at the legislation because of a personal animosity?
Well, and also how much of it is a problem with the legislation that is very different from the problem with the legislation that you or I might have. And then even, the bigger problem with it all is, how is this even allowed to happen?
Right, but I would even argue there's a bigger issue beyond all of this. Can I just even dial it back even a little further?
Sure.
Which is to say, this is what I think. I think we're at an interesting moment in the Trump presidency. I know we are at an interesting moment in the Trump presidency, because we're now at the moment where all of the momentum and the enthusiasm and the bravado and the madness and the press releases and the executive orders and the party time has sort of lost its gas. Right? It's Trump always chickens out as the sort of carnival taunt that circulates in social media, and his number one, the first buddy, the world's richest man, is an open critic of his signature legislation for whatever reason, and we can come back to the distinctions there. But I was having an interesting conversation with a group of Italian business people earlier today who were sort of wringing their hands at Trump's going to ruin everything. Well, how can you guys let this happen? And I said, is he though? Is he really going to ruin everything? I said, has your business really been ruined at this point? Has your business been affected at all at this point? Really? And I said, and maybe the Trump is really just a concept, a paper tiger, and maybe Trump's power to actually do things is much more limited than he would want the world to believe, sort of a Wizard of Oz phenomenon, if you will. And that Musk's departure is actually a meaningful reduction in his sense of, in the president's sense of his own power.
Well, the stock market would 100% agree with that statement by you.
Right.
But I don't think that's the issue, Dylan. I think
you're saying that's a foregone conclusion. You're like, for sure, Trump is not nearly as powerful as, and the stock market decided a month ago, this is all bullshit.
The
This
stock
guy
market
can't do these things.
The stock market has already, the stock market, the bond market, they've already spoken. I mean, they don't give a crap.
Moving on.
Yeah, the risk here, I think, is something different. I think the risk here is that there's a precedent that's been set. And what stops there's a couple things. First, Musk has already said, watch out, if you vote for this bill, watch out in the 2026 midterm elections, because you're not going to win.
I'm going to primary you. I'm taking you down because
I'm
now
taking
I'm a
you down,
political
right?
Mastermind.
Which listen, as a liberal, I could give a rat's ass what he would take down all the Republicans. Beautiful, go do it.
Sure.
But that's not my fear. My fear is that in 2028, okay, everybody's like, oh, there's a new playbook here, and now, somebody like Michael Bloomberg, okay, who's however old, you know how old Bloomberg is. I don't know how old, mid 80s, let's say. Okay, He's got $100 billion in his mid 80s, and he's going to go, you know what? F it. I don't need to run for president anymore in the mid 80s. I can just buy whatever I want. And so, hey, here's whoever the candidate is on the Democratic side. You know what? Here's $1 billion freaking dollars. Here's the legislation I want. Here's what I need you to do for me. Nothing for me personally, just here's what I want to see done. Here's $1 billion freaking dollars. And then you know what? Bill Gates piles on behind him. And then, and anybody else.
Mark Cuban and
whoever can, it doesn't matter. These guys have, they didn't realize that it was just about the money. And they didn't realize that. They jumped on board originally because they thought there was something else there. But now they're all regretting it. So now they're all like, okay, all we had to do was write a freaking check. We write a check for $1 billion to shut up a litigation. All we have to do to control
to buy a fourth airplane and a second boat.
Right. We'll write $1 billion check to get rid of an EU regulatory investigation. We'll write $1 billion check to get rid of, an SEC thing. We won't even blink. But we didn't know we only have to write a check for $200 million or $300 or $400 million like Elon did, and we can own the whole freaking government. Like, nobody knew that. Now they know it. So now the price is going to go up, and it's going to be whatever, $300, $400, $500 million. But so all of Trump's antics and all of these, they're going to come back to haunt the whole political system here unless we make some changes, because now Washington's up for sale. And so the bigger issue here.
Well, but why? How is it more for sale now than it was? I mean, we've ever since Citizens, one could argue this is not a new piece of, it's been for sale
because Trump set the precedent. He set the precedent. He made it okay. He basically
but you're saying, but I mean, I don't want to get. I would say he perfected it. I don't know. I would say
perfected, whatever you want to say. He didn't care. He didn't care what he didn't care what the Constitution said. He didn't care what the rules are. He doesn't care about anything. He just says, you know what? You can't touch me. He's untouchable. So I'll do whatever I want to do. Bloom, boom, bloom. Here we are. And so the precedent's been set. Now, in the future, unless something changes, this is the way. And so the dangerous part about this, who gives a crap what Elon does? I don't care if he does this, that, whatever. If he says he hates this or whatever. The problem, the issue that Trump's going to have here is, how do you respond to this? And in your response, will he think about the future? Because this is a very dangerous precedent. And how this all unwinds, okay, I'm not so sure this is good for the country. Now, will it hurt the stock market? Probably not. Will it hurt the bond market? Probably not. Those markets have already spoken, and at this point, they don't really care. Right. And so, will it hurt Tesla? I don't know, maybe a little bit, whatever. But the reality of this whole thing is, Dylan, that the bigger issue here is what's gone down over the last not even 6 months, what's gone down over the last 4 or 5 months is forever going to change the direction of this country, and how very wealthy people who are on a mission. It could be a social mission, it could be a political agenda, it could be a social agenda, it could be a business agenda, whatever it is. But now they know the market's been set.
And the method has been demonstrated.
And the method.
The efficient use of capital, because I think other people have thrown money at it less effectively. I mean, so sure, I can see that concern, but I'm not trying to avoid that discussion, but I don't think you can. I think that Elon Musk is more powerful than the president of the United States. I think that if I'm a betting man in terms of the Donald Trump's ability to make Elon Musk miserable is not nearly as broad in scope or as in deep in resources as Elon Musk's ability to make Trump miserable. I think we're on the verge of seeing a power contest develop, going to the words of Mr. Musk's child, in which he argues that Mr. Trump is not the president and he needs to shut up. And that the real president is his father, Mr. Musk himself. Obviously, that's a hyperbolic statement, but I think for the first time we're about to see a billionaire go head to head with a president in a way that has also never happened. And they're kind of one and the same, but we're about to see a true power contest between private capital and public policy.
That's what we're about to see. Yeah, that's what we're about to see. And I think if Musk had it to do all over again, he would have just wrote the check. Like he thought he had to be more involved. He thought he needed to do all the Doge stuff. He thought he had to do this and that. But now he realized he learned a lesson. He's a quick learner. He's a smart guy. He's completely screwed up, no question about it. He's ruined his, reputationally, he's destroyed his name and everything, and he'll never get that back. But he still has all his money, and he learned a lesson. He could have just wrote a check for $400 million, which is absolutely nothing to somebody that has a few hundred billion, and he could have had everything that he has now, and he wouldn't have to deal with any of the crap.
The real risk, there's multiple discussions because you can go on and on about all the risks. It's fascinating that that on the precipice of a full-on public battle between the richest man in the world and the president of the United States, that the stock market considers it to be nothing but a little bit of entertainment on the side.
Yeah, why do you think that that's weird? I don't think that's weird at all. I think the stock market has put this whole fiasco to bed a long time ago, and the stock market just normalized it. It realized, you know what? These are small men, and with small men with their own agendas, and they're not really relevant to the future of chip stocks, to the future of AI, to the future of the Apples of the world. And they recognized that. And the stock market said, you know what? Why should we discount American technology, innovation? Why should we discount capitalism? And because we have a bunch of small-minded, narcissistic egomaniacs that need to see their name in the paper every minute. And you know what? That's exactly what the stock market should have done. And it figured it out. It took an extra couple of weeks, a month, but it figured it out.
Right? Don't you think American policymaking matters?
I do, but I also
the economy.
I do, but I don't think that I'm one of these people that have never thought that that for example the Fed drives the economy. Their politicians can make some horrific mistakes. Obviously Trump with his whole tariff plan, it's beyond a disaster. It's probably the dumbest economic policy in the history of this country. But this shows how strong our too big to fail, and how strong our true ecosystem, our economic ecosystem is. And that's all. You know what? It's bigger than them. But again, it doesn't take away. It doesn't take away from the real issue here, which is how do we control? There was never a time that we thought that there'd be people out there with hundreds of billions of dollars. There's talk about in the next 10, 20 years, somebody's going to have $1 trillion. Maybe it's Musk, maybe it's Bezos, who the hell knows who? Maybe it's Zuckerberg, I don't know who it's going to be. There's no number you can stop these guys unless there's legislation in place or policies in place or some kind of regulatory fences to protect our democracy.
If our democracy is the thing that's at risk, the stock market doesn't seem worried about it.
That's right. The stock market is not worried. Because
does that mean the democracy is not at risk?
Yes, our democracy is not at risk right now, but that's for a different reason. All Trump's doing is just showing you how it's done. He's too old and he's too stupid and he's too lazy to be able to get it done. So he's not a risk. Trump has never been the risk. Trump is just, like I said, he's way too old and he's way too dumb and he's way too lazy. And what you need is, but the risk is somebody like a Musk who could rise to that kind of power, who's young, who's smart, who's got the capital, whatever else it is, who has the backing, that could be somebody truly dangerous to our democracy. That is the risk.
I see what you're saying. So the risk is that basically you have a competent president who's 55 and equally evil.
That's right.
In the sort of in the puppet strings of a Musk,
right?
Who's capable, who basically rides in the wake of the Trump indifference to the Constitution, but does so in a more effective and dastardly manner.
I mean, personally, I don't think it will ever happen because I think after this experience, one of the things we do well in this country is we fix things, and we're going to fix this. This is broken, and we're going to fix it. We're going to fix it to protect future generations, and that's all there is to it. I mean, we have to fix it, and we will fix it.
Do you have an idea? Do you have an idea? I have some pretty clear ideas on what I think the solutions would actually be, but I'm curious. Do you have a clear solution in your mind?
You mean other than a regulatory solution, other than a legislative solution?
It would be right. I'll just say it. I mean, the obvious solution for me, having run for office, as you know, having been is you have gerrymandered congressional districts that are controlled by one party or the other, first and foremost. So right out of the gate, I deal out, 90% of the districts are safe districts, 45, you get half, I get half, and only 10% are ever even in play. Which means that I just work on the extremes in the Republican primary, in the Democratic primary, which gives the billionaire the power to because the primary is the election, right? For 90% of the congressional districts, the winner in June is the winner in November. That's something that's easily fixed with some restructuring in the district itself, right? Or proportional representation. That makes money less effective. For example, to ranked choice voting. Instead of having the binary lesser of two evils, run a preference-based voting scheme, for example. I mean, you go down the list. The point is, there's no shortage of solutions to electoral reform or money in politics and sort of reducing or diminishing the role or value of money in politics. My issue, the reason I'm a little skeptical of what you're saying, is I believe that both of the parties, the Democratic Party and the Republican Party, are equally invested in the corruption of the system to their relative advantage, and that they may use the advantage when they have their incumbency differently, but they all do the same game when they're out of power, which is talk about how corrupt the person in power is, because the person in power is always corrupt, whether it's the Democrats or the Republicans. And so it's an easy thing to run on because it's right. But it's just a matter of who gets to control the corrupt system. And what you're saying is, well, now they've optimized. Trump and Musk have taken it to the next level, optimized it, perfected it, whatever you want to say. And now if you just put competent people inside of it, if you look at the brazenness of the Trump use of the system, and were to lay Trumpian brazenness with Musk-like or any sort of, let's just say a class A intellect, work ethic professional, that combined with brazenness would represent a level of catastrophic risk that would force regulatory reform, which I think everybody in America would probably agree with. It's very difficult for me to see where that reform ever manifests, because you're going to need one of the two political parties to take a leadership role to do that, and it is directly against both of their self-interest to do anything.
I mean, I wouldn't say that Trump and Musk perfected anything. What I would say is they exposed everything. And there's a big difference in perfection and exposure. And so the way that I would solve this is very simply is just limits on what you can spend and contribute. That's it. I mean, that's the simplest way to get there. In the world of finance, we have similar restrictions. If you work for a licensed firm, the most I think you can accept is $100 as a gift. It's been that way for 40 years or something like that. And, that's it. There is no exception. There's no workaround. That's it. It's $100. And so there are no gifts. There's no takeaways in that sense. So I don't understand why we can't have similar rules in place for politicians.
So you would just go to the Supreme Court and say corporations are not people too, and there's a limit on individual or corporate donations to any political contest of any kind. Full stop.
Well, yeah, the system's been abused.
Yeah.
Full stop. Full stop.
No super PACs, all this nonsense has got to go. Like the whole spiral of absurdity that was unleashed in 2011.
Yep.
No mas. Basta.
Let's make people stand on their own, and that's it on their platform.
I mean, so how about this? Maybe the stock market's relative strength is not only a dismissal of the potential disruption from Musk or Trump, but also it's a confidence that before a brilliant billionaire and a brilliant president take what has been exposed by Trump and Musk and exploit it to some catastrophic outcome, to your point, it will be intervened. I do take issue a little bit with your suggestion that Trump and Musk exposed this, just because I feel like it's been apparent. It was apparent in Trump 1. It was apparent during Biden. It was apparent during Obama. I mean, it's been apparent for some time.
Well, there's more transparency in the world today than there ever was. So things so it's hard to really say what in the past everything was pretty well locked up and protected. Now everything is much more transparent. That's the challenge that everybody has, whether you're a CEO or a politician or whatever, that's the challenge. But
sure,
we are hardcore efficient market people, efficient market theorists, efficient market hypothesis, whatever you want to say. And so we believe that everything is priced in, no matter what. Like that's the whole premise for everything that we do here at Tasty. Every idea I've ever had, everything I've ever invested in, like everything that's known is priced in. So there's nobody that can look at this market right now and look at what's going on and say, oh, you know what? They just don't understand or whatever. They do. Actually, they do. Everybody gets it. Markets are emotional, but they get it. And they have normalized the playing field because everything is priced in. And I'm sorry, but at this point, regardless of what you want to think, they are discounting, what Musk is capable of doing in the future. And they've obviously already, put premium back into his equities. They're discounting what Trump is capable of doing in the future. And
you're talking about in terms of political damage or sort of structural political damage from either of these people.
Structurally. Yep. And even more importantly, they are already recognizing that this type of relationship is as toxic as everybody thought it would be, and has to be addressed in the future because it is not healthy for our democracy. It's not going to hurt our democracy. It's not going to change things dramatically. It's just not healthy for us. It's not a healthy way to go forward. It doesn't put us in the best light as leaders of the free world. As you know, we are no longer at the top of the food chain, and we need to get back there.
And it's a pretty simple fix if you simply cut off the money supply between an individual and the political system.
And you have to, because there's no way to control it in the future, because you're going to get 90-year-old people with, that are going to leave their entire fortunes to some charity. You're going to get the Warren Buffetts of the world, George Soros's, the Bloombergs, Michael Bloombergs of the world, and the list goes on, that have literally hundreds and hundreds of billions of dollars. You put them all together, they're going to have $1 trillion. And they're going to say, listen, we're going to leave $800 billion to our favorite charity or charities, and we're going to give $50 billion to make sure that our platform is implemented. And that's just, that is
and that's an inevitability without without a rule change. Basically.
Has to be an inevitability.
That's 100%.
There's just too much money now. It's an inevitability. Yes. So what do we ultimately want? Do we want the future of this country to come down to whether it's the Koch brothers versus the Bloombergs of the world? I mean, it makes no sense. Do we want the Elon Musks, to go up against the Bill Gates and just see who can give more? I mean, none of that makes. That's not a true democracy. That's not a real political system. Which candidate can you buy?
But don't you think America has not really had a real political system for some time? I mean, I guess
no,
it doesn't matter.
No, I don't agree with that.
My hope is that we've gotten so far into the red zone, because I think we've been on this place for decades now.
No, if I go back over the last 25 years, I mean, I was not a Bush fan, but I think he was a legit politician. Same with Obama. I mean, I don't. No, I don't think that was the case. I think I think they were very real.
I mean, so you and I are going to disagree on that, but it doesn't actually matter that much. Who cares whether we disagree on that? The point is that we do agree that this is the current example first and foremost.
Yeah, I mean, I can go all the way back to. I go all the way back to like Jimmy Carter days. Jimmy Carter, I felt was real. Reagan was real. Bush Sr. was real. Jimmy Carter was real. Bush Jr. was real. Obama was real. No, this all started right around 2016. And this is what happens,
I mean, but
you say what you want, but that's what turned everything.
Respectfully, we will disagree. But I do think that this is the most current and extreme example. And I'm actually, I mean, I would argue, because I tend to be quite the skeptic of the whole, as you know, I've gotten very cynical about the whole American political system and all the things. And if what you're saying is correct, which I'd like to believe that it is. I mean, well, for sure, it's the most current and extreme example of money in politics becoming an insane sort of horror show. I think that that's a really optimistic thing. I would argue that this is if you're right, and then this is the catalyst to finally deal with money in politics, which would be an incredible gift from both Musk and Trump. They could call it the Musk-Trump rule, and they could live forever in infamy, as like Dodd-Frank or Glass-Steagall or.
Sure, whatever. Yeah, I agree. This is positive.
Famous piece of legislation, you could call it Trump-Musk, and you're like, well, I'd love to give you $1 billion, but I can't because of the Trump-Musk rule.
Yeah.
So I got to give you $2,000 instead.
Yeah. No, I'm agreeing with you. This is going to be a good thing. It's an awakening. It's an eye opener. It's a necessary evil that had to happen in order to fix the system. Now we will fix the system. There's nobody out there that's going to say, oh, this was great for us. This was great for our country. No, it's not the case at all. We're passing horrible legislation to pay for tax cuts for the rich. We're legislating transfer of wealth from poor people to rich people, and all because rich people commit the most amount of capital. It's crazy. And this has to stop, and it will stop, because our system corrects itself. We are very effective. We are very good at self-policing, and we will correct ourselves.
What do you think the difference is between the Trump presidency with Musk and with the momentum and the ego trip of having won and all the things that have come from the past 20 odd days, and the rest of the Trump presidency?
Well, Trump is the type of person.
Like Trump with Musk and pre-Musk and post-Musk. Do you think there's a noticeable difference?
I think Trump has always been troubled by the fact that people think he's stupid, and that they think that he just plays to his base, which they also think is generally stupid. And I think that the attraction of Musk to Trump was that here is one of the world's leading innovators, one of the richest person in the world, supposedly
Mr. Spaceship,
one of the
Mr.
brightest
Mars,
minds in the history of the world. And oh my God, he's friends with me. Trump is easily impressed by a couple things: money, obviously, and also something that he doesn't have, which is a friend like Elon Musk. And I think
we'll call it professional admiration. No one has ever thought, gosh, Donald Trump is such a great professional.
No, fine. Professional admiration, right. That's fine. And I think that, smart people generally make fun of him. And I think this is somebody that finally he was like, wow, maybe I am smart. Maybe there's an intellectual revolution going on here where people are going to, gravitate towards me. And I think that he's never had that before. He has built his entire existence around brute strength. He's forced. He's a bully.
Scams and stealing and
whatever. It doesn't matter. It's brute strength. It's now he has an intellectual side. I think that was the whole appeal to Elon Musk. I really do. And so
what does Trump look like without that validation, but with the very person who was with his validator now being his most famous and most powerful public critic?
Well, that's the challenge for Trump. He's always wanted to surround himself with the prettiest women, the smartest people, but he hasn't been able to attract the smartest people. He's been able to buy the prettiest women, whatever, contracts, whatever you want to say. So, he won't be seen with somebody that he thinks is ugly, and he won't be seen with somebody that he thinks is stupid. That's it. It's perception.
But I guess the concern that comes up for me, and this is just from this discussion, is if you look at Trump's underlying pathology is a desire to be validated and loved. He's a child that was not loved enough.
He needs a dog. He needs a good dog. He needs a buddy.
He needs to be told he's a good boy.
He needs a dog, his best friend, type. He needs a nice German Shepherd.
Somebody who just says, "We love you," or "It's okay." Yeah, it's okay. Okay.
He needs a black lab or something. He could just by his side.
It just loves him all the time. Just thinks he's great.
Unconditional love, 100%.
My concern is that when the sort of psychological or spiritual injury of the person, which everybody has one to some degree or another, but his is just sort of so obvious and so big, that the impulse is to compensate for that with excessive use of brute strength. And between being the Trump always chickens out, Musk is now you're Mr. Big, Musk has abandoned you. all the sort of invalidation, all of his worst fears coming to pass, right? Public humiliation from his best buddy, or public criticism anyway from his best buddy, public humiliation from the crowd, saying, and not just public humiliation, but for the very thing that he's most afraid of, which is you can't deliver, you can't get the job done, right? Like the whole taco thing is that you can't do it, right? That incentivizes him to take excessive action that he actually is capable of taking just by virtue of the office of being president of the United States, that represents up to and including, you know, existential risks, military actions that are catastrophic, you know, bizarre actions with internal police, external military. You know, I just wonder. My concern is that as he gets more alienated and more humiliated, that he has more of an incentive to do things that are more damaging to the world and to the country, to prove that he's not a pussy. Excuse my language.
All that's going through my head is, I think we're good for now, but when Elon starts dating Melania instead of Stephen Miller's ex-wife, then you're going to see the shit hit the fan. But right now, that rumor has not come out. But happy to start it here, but that rumor has actually not come out yet. But when that happens, that's when you're going to see all the stuff you just mentioned happen.
So you're saying this is just the red flag that I raise is rational, but in your opinion, we haven't reached the threshold for totally cuckoo bananas, you know, Trump, military,
just
domestic,
ripping,
foreign military madness.
Just ripping on your bill. You know what? He doesn't care because he didn't care about the bill. He didn't care about the bill anyway. He never did. Doesn't care about anything, so he doesn't care about it. But you know, there's other things in his life he might care about.
Just don't go near his wife, is what you're telling me.
Hey, I wouldn't put it past Elon, and it would make for good TV drama.
Dollar rebound in the works, not to go back to the markets here, but if Trump is less and less relevant, and if the markets are more and more confident, and the dollar is the most injured party from the past few months of you know, madness, and it's the least recovered. I mean, it's come back a touch here, I guess, in the last day or two. Anyway, I guess are there any, if normalization is the path, and the stock market is saying normal is the way, bond market normal is the way, are the less normalized assets, whether it would be the Russell, I guess, or the dollar, are they more?
Too hard to play here. The dollar's still been a pig. It's down more today. No, I don't think you can buy dollars. The dollar was in a bull market for 15 years. It's been a bear market for 6-7 months. I don't think you can touch it for a long time. I don't think that's the key. So
what about the Russell?
No, just got to trade them. Just trade them. Yeah, I don't think this is a tradable thing, Dylan. I think it's just, you have to respect the fact that the stock market is incredibly efficient. It's able to see the future better than any of us. And it's telling you right now that, you know what, we're going to just discount all this because it's just nothing more than noise.
I mean, it's super interesting because literally, if you think about it, the stock market was the first person ever to basically, they didn't use the term, but they delivered the verdict that Trump always chickens out before anybody else got there, right? It basically by May 5th or May 1st, the stock market.
We were saying that
the stock market was like.
We were saying that in March. I mean, literally saying that in March. He'll turn, you know, whatever. But it's a funky acronym. It's funny, you know. That's about it. Anyway, we're running out.
He had a lot of credibility for a minute there in April. He had a good couple of weeks where everybody thought he was going to bring the world to its knees.
But we're out of time here, Dylan. It's 1:40, 1:42. So thank you so much. Thanks, everybody. We'll be back next Wednesday. This is Truth or Skepticism. I'm Tom Sosnoff. He's Dylan Radigan. Thank you. Thanks, Dylan.
See you next week.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
TastyLive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
What is going on, everybody, and welcome back to today's assignment. We're back with Dr. Jim. It's been a really volatile day, to say the least, Dr. Jim. A little bit more of a difficult day today, but before we get into that, how are we doing?
Man, I'm good. It's been brutal out there, man. Like,
I know, it's like the whip.
Not even moving, though, man. Man, like, give me something, dude. Like, the VIX is at 17 something. It feels like it's 13. Now, maybe that's just because we've all been kind of desensitized. Like, maybe that's just because we've all been just kind of like, you've got VIX at 25, VIX at 30, whatever. So the VIX at 1750 or whatever it's at today is like, it's crazy in terms of how slow it is. But again, we've been talking about this a lot lately. I mean, the NASDAQ just keeps creeping higher. Even the S&Ps just keep creeping higher. And what are we going to do, E? Like, what do you got for me, man? Like, save me from all this.
I mean, it definitely feels like something is brewing. Like when we talk about sentiment, I guess that's where I was saying it feels like something's brewing. A lot of whipsaw action. I mean, the move that we put in since April 7th, if I'm not mistaken, still to the upside. I mean, the little bit of the little pullbacks have been so resilient, and we're still headed to the upside. Will we take out all-time highs? I mean, that's kind of now on the question. I think we have to consider that. But at the end of the day, so much uncertainty. VIX is looking like it's praying for a pop, Dr. Jim. So I will say that. Will we get this pullback? I don't know. But volatility is looking like it's prepping for some type of move. So that's kind of where I stand on the overall market, at least. But it does feel like something's brewing.
It does. And I guess the eternal optimist in me wants to believe that. But one thing that's kind of interesting is, and I think Friday, the NFP number that comes out on Friday is going to be very telling, because the last few economic data prints, so like this morning was something at 10 o'clock or 9:45. Yesterday was JOLTS. And then last week was some PCE, whatever. They've all basically, like, the first move has sometimes been to the downside, but it's been reversed really quick. So either the market went up and it kept going up, or it went down and then the down move just got erased really quickly. So that's typically the type of behavior that you would see in a pretty strong bull market. Are we in a really strong bull market? Maybe we are. I don't know. I think Friday is going to be really telling, though.
No, it will. I mean, when I'm looking at the charts here, I know I have 4 underlyings that I want to pitch to you here today. But on the overall market, like NASDAQ, we've been moving higher too, but it's almost like we've been grinding higher. I don't know if you kind of been paying attention to that too. It's like we've been stair-stepping all day, kind of like price has been really slow. And then when you look back an hour from now, it's like, wow, we went up another 50 points or another 100 points. But we've just been grinding so slow. But I actually do have I have a NASDAQ position on right now. I can see the market's selling off a little bit right here. So the market's just volatile, and we'll see how we manage this position. We might even have to manage it on stream, because the market is just selling off like 20 points right now as we speak. So we'll see how we go about that one.
It's so funny how I would do the same thing. It's so funny how the NASDAQ moves like 18 points and we both had a sell-off. Like, that's a sell-off now. Like that's basically the best we could get. Like, that's not just like a little wiggle. Like, that's a sell-off. Like, that's a
but I mean, these sell I mean, this type of market just feels like it's really trying to shake you down, especially over the last couple days. But we'll get into some of these positions, but I do have a few underlines I want to take a look at with you. I already looked at them. I know what type of positions I want to put on, but I want to see your thoughts. So we got 4 of those today. Before we get into that,
all right, let's go. I'm ready.
Yeah, this is a micro position that I have on right now. I got long a little earlier today. Wasn't really doing too much in here today, just because, I mean, the whipsaw action from this morning. I mean, we have a gap. I'm on a 1-minute chart, mind you. We have a gap down on a 1-minute candle. Like, when I was sitting there watching this, I was like, wow. Like, if you had a stop loss within those levels, you would have been slipped on prices. This isn't something you even see every day. But 30 minutes into market open, we already started to see some unusual price action, is what I like to call it. Very unusual, getting a gap intraday like that. It's not like we gapped up overnight. So market taking out highs, taking out lows is very, very choppy. I like to call it the barcode type action. In my opinion, whenever you're trading directionally, especially on an intraday basis, this is like chop season. This is like the warning sign to start managing your risk and just being able to pay attention to the prices being slow right now. Maybe I don't want to be trading in these conditions, but either way, market's selling off a little bit right here, a little bit of a wiggle, whatever you want to call it, Dr. Jim. But we have on a few of these positions right here.
Well, I think 10 o'clock. By the
Yeah.
way, I think 10 o'clock was the number. Like 10 o'clock was the data point. I think that's why I had that gap. Whatever.
Do you usually see intraday gaps with a binary news event regularly?
I never trade on the charts, so I don't. So I'm never looking at the charts when they come out. I'm looking at the actual tape. I would I would imagine it happens most of the time. Like from the standpoint of, it's not that uncommon for on the actual timestamp for there to be a sizable jump in ES, and so that would obviously mean that there's going to be a gap even on a 1 minute chart. And so it doesn't seem too unusual for me. And I mean, that gap right there is tiny. It's what, like 10 points? 9 points?
Let's see.
Right? I mean, that's really small.
I mean, 100%. It is.
Oh, wait.
small.
No, it's like 30 points, right? I was looking at the candle.
Yeah.
30,
but 30 points, depending on risk parameters, can be very meaningful. Depending on the
I'm not saying it's not. No, I'm not saying it's not meaningful. But on a $20,000 product, it's not that big. Is what I'm saying.
Right.
No,
you're absolutely right.
CPI and NFP, like on Friday, I can almost guarantee you on Friday at 8:30 on the 1 minute chart, you will see a gap, almost no question. When the NFP number drops, I'd be shocked if we don't.
You want to test that theory?
I mean, kind of. I'm gonna be watching it now on Friday morning. And so,
no, I hear you. Well, it was just extremely volatile. Crazy to kind of see price skip around like that. But yeah, 10 a.m. news today. I know we're getting more red folder news the rest of this week too. So maybe price is prepping for some type of outlier move. I know we have still binary events to pay attention to. But we got QQQ. Well, I'm still in SPY, Dr. Jim. We have 16 days left till expiration. It's not much I can do in there. My hands are kind of tied. But it's nice. I got a little bit of time on my side. And then we have QQQ. This one's an odd one. I was breaking this one down to guess a little bit yesterday. And if the market keeps breaking out to the upside, this position's pretty much going to be a dud. But I could choose to manage it beforehand. It is an iron condor. It is a very narrow window. I was more so playing to the downside, really. It was more so a short position, although it is an iron condor. Because we rallied so much, I put on a neutral position. I was like, you know what, maybe we'll finally get that pullback. And then we land within that range and I would take the position off. So that was the idea there. We continued to rally even higher and higher, just exceeding expectations. But position's really not too far out of hand yet. So I'm going to continue to manage that. And if we get a significant or a meaningful pullback, if we can even call it that, then maybe I'll manage this trade, a little bit of a profit, even break even. I'll take what I could get since this one is already testing the call side. But that's for QQQ. That expires in a couple days here. We got NVIDIA.
So hold on, with QQQ, did you? So that's a $10. So the distance between your short strikes is $10. When you put the trade on, did you put it on that way or did you adjust into it that way?
Yeah, no, I put it on that way.
Okay. So what was so when did you put the trade on? Was it just a couple days ago?
Let me double check on that.
Because I'm trying to figure out why you felt the need to be so narrow, because that is pretty narrow in terms of distance between the shorts.
I think I sold this one I might have sold this one May 23rd.
Wait,
so
what about the one on June 2nd?
Let me see. June 2nd, 280. It is iron condor right here.
So it's
been 2 days. Yeah, this week on Monday.
Okay, so that was a 1 week iron condor. So now that makes sense. That makes sense that you have to be so close in terms of the width between your two short strikes. And so that makes a lot of sense. And so now you've got the QQQ, essentially up over 530, right around 530. And so you need a little bit of action to the downside. That makes sense. And you don't have the benefit of a lot of room between your short strikes where it can kind of breathe to work out for you.
Yeah, no, not much room. And essentially, again, kind of just trading to the downside a little bit. Essentially, the idea is a little bit of a pullback. I mean, if we get that, I should be able to capture that. But if we continue to rally and we continue to take out these previous highs, then I'm gonna have to just close that one a little bit early, maybe even tomorrow. But we get a little bit of a pullback. I mean, 10 points. If I look over here, let's see. We're selling the 525 and selling the 515. 525 is going to be about 525 about here. We can add the break evens in later. But I mean, essentially a little bit of a pullback, because I mean, enough time has passed over the last couple of days. So I mean, I've been collecting a little bit of theta, but if we don't get that directional move to the downside, it doesn't seem like it's too far fetched, right? I mean, we're 4 points away. If we get a decent gap down or a pullback, then I'll be happy with that. But if we continue to rally again, not much I can do. But
no, I mean, you're very close. No, you're very close.
Yeah, it's close. It's
room
close.
To work with. Yeah, it's very close. And so if it goes up, let's say it goes up, like bring that chart back up. Like let's say it goes up and clears that high, what is that, 532 or whatever that high is.
530.61.
So is that what you're looking at? And if that happens, are you going to close the trade early rather than just letting it ride?
No, more so just going to look at it from the P&L. Gonna manage this one from the P&L, because at the same time, because I'm not selling the premium in a 45 DTE, I'm going to manage the P&L a little bit quicker on that one, because it is just the weekly contracts that I was trading. And so once we get to around $100, right, I'm going to manage the position. So I'm not putting on too much risk on this trade, and really not so much trading it even too directional to where I'm paying attention to these prices where, if we clear that high, I'm going to then manage the trade. It's more so hopefully in this time frame I can get a pullback, really just trading the probabilities and the premium that I could sell at that point. So that's the thought process. I was just more so looking at this like from just a price point of view, like, man, we could even come out here and take out these highs. So just to kind of show us, the market's strong to the upside right now.
Mm-hmm.
But
no, I think
we'll see what we get.
Got to do it. It's got to be probabilities. It's got to be premium. It's got to be like that's the only way to do define risk. And honestly, don't forget, my friend, doing nothing is probably the best move. So let it ride. You've already got your risk is controlled. You've already,
I do.
Kind of outlined the worst case scenario. So let it go all the way to Friday, because man, I would really hate to see you bail tomorrow going into Friday morning. No, I'm serious.
And we see, right.
With the NFP number, who knows what's going to happen? Now, I don't know what's going to happen. I don't know if that's the thing that's going to send us down 2%. Who knows? Nobody knows. But I do know that it has the potential, more so than just some regular, like Tuesday in, a regular week. And so just understanding that, I think, could be helpful.
100%. And I mean, it was an Iron Condor. I was able to collect a little bit more than I usually do on an Iron Condor. I collected 280. I know it was pretty narrow, so I want to make sure I collected enough to even justify it being that narrow. So I mean, 280 on a $5 wide, the risk is about half that. So we'll see. You're right. Since the risk is managed on order entry, I could just leave it until Friday and let all the uncertainty in the market digest. Nvidia, Dr. Jim, I'm not sure if you traded this one recently, but I got a short position on Nvidia. This was the one you and I had traded for earnings, I think last week. Your position played out pretty well on that, did it not?
Well, no, wait. No, your position played out well.
No, I don't think so.
Okay. Oh, well, no. Okay. So this was interesting. So with which, by the way, remember it's pronounced Nvidia. So with Nvidia, I played it to the upside, but then I came on the show with you and I was like, I kind of think the downside's the play. That's how I would do it today. And so that's what you ended up doing. Okay.
Right.
The interesting thing about that was the upside play, because it was a Wednesday evening earnings. The upside play worked on Thursday. The downside play worked on Friday, though. So you didn't close it out early, did you? Because you had a chance on Friday to take some P&L.
I did. So now I'm recalling as I look at this thread.
There you go.
I'm not. I was down a little bit originally, and then I remember.
Oh, of course. Of course.
Yeah, 100%. And I remember looking at the P&L, and then I was around break even. And then at that point, I was just looking to get out of the trade, and I was able to snag a little bit of profit on top of that without really trying to. I was just trying to get out, especially seeing the red P&L initially. But I almost totally forgot I was able to claw out of this one. How did it go on your end again? I forget. Did we have the same position on, just in different directions, or how was that? No, how did that play?
Well, yeah. So I had it on to the upside, but what's crazy? So on the Thursday after NVIDIA earnings, I'm getting ready for my show. Like, it's afternoon. I'm answering emails, whatever. Like, I'm watching a video, whatever. Everything's good to go. And my power went out. Like, my power, like you probably, it might be similar where you live. I don't know. But it's like, man, any type of storm comes through, like, our power is so fragile. So my power went out. And so I didn't close it Thursday. And it came back on Friday. And then I had lost my chance. So I ended up essentially taking max loss on the trade, which was a bummer.
Yeah, and then I mean hurricane season too, Dr. Jim. You better watch out. I mean, the first day
That's what I'm saying.
felt like a hurricane was already coming through. I don't know how you felt it over there on that.
Oh yeah,
But
no, 100%.
yeah. But yeah, no, that was NVIDIA. That was a nice little one we were able to kind of claw out of. So I do have a longer term position on NVIDIA. We were trading this one to the downside. And I mean, we're grinding to the upside, just very slowly. So this position still has 16 days left till expiration. Not much I can do in there. So we'll see how the next 2.5 weeks play out. Lulu was a newer position that I put on. I threw this one out there on socials the other day, but short some Lulu, 44 days till expiration. I was able to collect 285. It is a $10 wide. So I clicked just a little bit under. I just collected a little bit under a third on that one, but I really wanted to get short Lulu. Lulu's been having a pretty aggressive rally when I look over here. So I wanted to take a little bit more of a contrarian approach, especially with the IV rank being at where it's at. The volume isn't the most attractive, but it was good enough to get into that position, and the IVR was there. So that was Lulu position. Just been in that one for barely a day. You have any thoughts on that one, Dr. Jim?
No, I mean it's so new. I mean, the only thing is you got to be a little tricky collecting so little, because I mean, it's $10 wide. You've got more risk that's out there, but also don't forget that with a defined risk strategy, especially like a vertical spread, there's not very much you're going to be able to do from the standpoint of adjusting. Like you might be able to roll it for a credit or something like that, but that's pretty much it. Like when you have short puts and strangles and whatever, there's so many things you can do from an adjustment standpoint. So that's why collecting more on the front end and reducing my risk even more aggressively on the front end makes more sense to me with something that is defined risk. So just something to kind of keep in the back of your mind next time. If you don't like the way a trade sets up in collecting enough premium, I wouldn't necessarily collect less to make it work. I don't know if in the end that's going to be a profitable strategy.
Yeah, 100%. And I mean, it is a little bit under a third. So to your point there, it isn't, I mean, also, whenever you come back and you analyze some of these things and you rationalize certain decisions that you made, would you ever be in the position of, that's a really good point, right? We're kind of sitting around break even on this position. I could close it and redeploy the capital in the same underlying or elsewhere. Like, have you ever went back and then re-rationalized a certain decision, was like, oh, this makes a little bit more sense. I didn't think about it from that perspective before. Am I going to let this trade right out? I close it now, reposition myself, deploy the capital elsewhere. How would you approach that?
Yeah, it's a good question. And so I'm going to reframe the question slightly from the standpoint of, like, if you ever make a trade, even if you make a mistake. So like, let's say, so I'm going to take everything you said and just include also, like, if you make a mistake, like, let's say that, you meant to buy MNQ and you sold MNQ. Right. Or whatever. Now, I'm not talking about a mistake where, like, you meant to buy 1 MNQ and you bought 10 MNQ. That's obviously that's a big mistake. You probably want to correct that in the moment. But it's not that uncommon that I may go in and say I want to buy X and actually end up selling X, or vice versa. Or, I go in and there's a trade like what you have with Lulu where it's like, all right, thinking about this a little bit more, I wish I would have collected a little bit more. Okay.
Right.
Most of the time, I'm going to say, I mean, it's 19 out of 20, 95% of the time, I do not go in and correct it. 19 times out of 20, I will just let it play out unless it is a major snafu. Like doing 10 instead of 1, doing 12 instead of 2. Like, that's crazy, right? It's like, okay, I'm not ready for that. Let's make a change, whatever. But my whole thing is, when it comes to, like, trading direction or whatever, I don't think I have a clue where the market is going. Not a single clue. So if I went in and I wanted to buy, it may be just as effective if I went in to sell. And so I actually don't think it matters. I know that's a little crazy to say, but I don't think it matters. But then also, like with what you have right here with Lulu, that's not really a directional thing. It's more of a risk return thing. It's not that far off the mark that I think it requires you to go in and kind of override what you have. I think just let it go and just try to improve next time and collect a little bit more.
So it sounds like you're really going to justify the position on if you're comfortable with the risk reward. Like, does that make sense? Like, I don't care if I wanted to get long, if I wanted to get short, does that still fit my risk parameters? Am I not violating my risk parameters? And if that's not the case, I'll just let it ride. Is that where you're coming from?
Yeah, pretty much.
Yeah.
But then again, with Lulu, it's like, okay,
Yeah.
maybe it is a little bit more risk than I would normally take because I didn't collect enough. All right. Again, you're only talking about a difference of what, 70 cents?
It's like
not that big.
7, yeah.
Yeah, whatever,
Maybe.
right?
Yeah.
Yeah, it's not that big of a difference for one trade. If this is something that you're going to do repeatedly over time, that's a much bigger problem.
100%. We got Disney over here. Dr. Jim, I know we talked about this last time we were on. I bought a put. I don't buy puts very, very often. I'll buy some vertical spreads sometimes, but for the most part, I'm not buying calls and buying puts that often. But I did on Disney. The IV rank was a little lower, so buying the put was a little bit more attractive there. We were ripping to the upside as well, so it was a little bit more of a contrarian play there. We really haven't gone or done too much. So the put is losing a little bit of value, and that's pretty much what's trickling down right now in that position. It hasn't done too much today, but there is 44 days left till expiration. Not too much to say on that one. That one is pretty directional. Again, I did buy the put. So as long as we keep chopping around, that theta is not going to work in my favor. But if we do, get that downwards move over the next couple weeks, maybe this one can pan out a little bit. But that's what we got in Disney.
So here's a good question for you. So I think this just last week. So you had that put in it may have even been QQQ where you did 5 or 6 slide in the Qs and it worked out.
Yeah.
And you picked up a nice profit. It only took you say maybe 8 or 10 minutes, and then you got out, and then you were happy with that, and you didn't want to stay in because you didn't want to get chewed to pieces by the theta, things like that. Okay.
Yeah.
All right. So what is the thinking here where you're buying a 44 days to go put in Disney that's radically different from taking a directional shot, very much a scalp in a given day? Here, this is intended to be a longer term project. So what's the thinking, especially with negative theta just staring you right in the face? Like what are you doing here? Did I lose you?
One more time, Dr. Jim.
Oh, yeah, sure. Okay. So what was the thinking here with Disney, right? You've got 45 days in the put that you bought. This is very different from the 0 DT or the 1 DT that you did in the Qs last week. So what's the difference? Like, what made you do this as opposed to return?
So that, I see what you're saying. I see where you left off there. With Disney, so with the QQQs, that one was an intraday trade. So I had the risk to reward set up on an intraday basis. So I still gauged the risk to reward. I was like, okay, I'm going to be risking this much to potentially gain this much. And I knew that outcome would play out in that same day. So this one is just a longer time frame or a longer horizon kind of trade, because on the QQQ options, I use the 0 DTE. So I was able to buy those really cheap and take advantage of that short-term volatility. But with Disney, this one isn't the 0 DTE. So it's just a longer-term trade. That's why I went with the 44 days till expiration. And then also within that time horizon, it's still adjusted to my risk. So by me buying this put, I only bought one. I didn't buy 5, right? The other one I bought 5. And in that case, in the QQQ trade that we were talking about last time, if I wanted to buy one contract, I would have a wider room to risk as well. So another thing with the Disney position is because I only bought one contract, it's because I'm giving it the freedom to really have a really wide range to trade in. Or if I had 5, I might, have some type of risk parameters around it. But I just went down to a size to where I don't really have to feel like I got to hold Disney on a collar. I can just let it do what it wants to do. And whatever I paid for the position, I can let it, or I can just accept that risk. So that was kind of the thought process on that. It's just a different time horizon, if that made sense.
Yeah. Okay. All right. Yeah. Fair.
Yeah. But other than that, we're going to let Disney ride a little bit. We got the micro NASDAQ that we're looking at here, Dr. Jim. Market's really volatile right now. So I'm going to be keeping an eye on this. I might even throw in a stop loss, to be honest, because I don't want to close the laptop even later this evening with so much uncertainty floating around and we wake up and gap down 500 points, or maybe that's a little excessive, but even, 100 points or 200 points, just because we've been sitting at these highs. And one contract, I know we're of the proponent of use a correct size to where you don't have to use a stop loss to. This contract is still a little large for my liking in terms of letting it run too far against me. But that's what we got in the micro NASDAQ, Dr. Jim.
Yeah, well, no, I mean, I think stops are a big part of what you do, right? I mean, stops are a big part of your process. Yeah, I mean, that's just, I mean,
The directional ones, at least for the future.
yeah, of course, of course. I mean,
Yeah.
that's my own thinking, and so that's not necessarily intended to be a universal principle that everyone needs to adhere to in terms of being small enough on entry so that you don't have to use stops. So, I mean, that certainly is not something that you have to feel any pressure that you need to do. I mean, yeah, I mean, I would say, I mean, if stops are a natural part of what you do, kind of a normal functioning feature of the strategy that you're deploying, then I would absolutely, go for it. Yeah.
Yeah, 100%. I know we got a few moments left here, Dr. Jim. I want to run a couple things by you. We have steel. IB rank, not too high, but I was looking at potentially buying something in here. I just want to show you what the chart's looking like. Steel still ripping to the upside. We'll get this to, there we go. Let me go to the daily, get a larger perspective on this real quick. So after this initial move on steel, a deal went through. We started to just pretty much chop around. So, I don't think it's going to trade within that tiny window. I mean, it's trading within $1 over like the last 5 days. So I'm looking at potentially buying a put in something like steel. Let me zoom in a little bit more just to give you some perspective. So this is where steel has been sitting relative to the last couple years. Next, we have Apple, Dr. Jim. IB rank is sitting at 23.5, not too bad. Apple really hasn't been too volatile lately. It's kind of just been chopping around, another grinding to the upside, grinding to the downside. IB rank is decent. I was looking at the 44 DTE, looking at the strangle, a little bit more buying power it would take, but I'm not opposed to that position, especially because Apple's not doing anything as of late. We don't have to worry about earnings or dividends or anything like that either. And we can collect 435 on selling that, and we're not even inside of the expected move. We're right at that one standard deviation on the options chain. So was eyeing Apple as well. Another one I was looking at, I want to run by you, is Meta. I was looking at Meta. Meta's been ripping to the upside, wanting to do something contrarian here. I was thinking about buying maybe a vertical to the downside. The IB rank is so low. And I mean, it would again be more of a contrarian play. If we get that rip to the downside, we could see an expansion in volatility, pump those premiums a little bit more if we were to buy them. But I was eyeing that and looking at that vertical spread, $5 wide, could pay about 180, 38 delta on that one. And then lastly, I was looking at Eli Lilly. This one was ripping to the upside. IB rate.
Eli Lilly.
Eli Lilly. You remember this one?
Okay. Yeah, of course. That's a boomer stock.
It is the boomer stock. That's why I brought it.
Yeah.
But I put on an iron condor, and I was able to sell an expected move iron condor, being able to collect $4 on a $10 wide, so a little bit above a third of the width on that one. And those were the four I wanted to run by you, just to get your thoughts on. If any stands out to you, I might throw one on before the close. But does any stand out to you?
I mean, if I was going to throw one, let's talk about these in more detail next week, because we got
we will
things today. But if I was going to do one of those today, I would honestly probably do that Apple Strangle. That would be the one that I would do.
You look like you liked that one. I brought that one up.
Yeah, you got the unfiltered short premium. I mean, that's a classic strategy.
Awesome. Well, that's going to do it for today's segment. Thanks for taking the time to hang out with us. And Dr. Jim, as always, we always appreciate you having you in the teacher seat, getting your insights. Be sure to stay tuned for Tim Knight coming on next, and we'll catch you guys next time. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the TastyLive core strategies.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the
Hello, everybody. Happy Tuesday. And it's, oh my God, is it Wednesday? Yes, something like that. Okay, you're not here for calendars, you're here for charts. Never mind. Hello, whatever day it is. My name is Tim Knight, and we're going to look at some charts together. Fairly quiet day. The ES is up 0.1%. The R2 is down 0.15%. So not exactly electrifying, but there's some cool stuff happening here and there. The big event economically will be the jobs report on Friday, an hour before the open. The junior version of that was the ADP employment report that came out this morning, and it came in super weak, like at about a third of what they were expecting. So that has affected things somewhat. Anyway, why did I think it was Tuesday? Let's jump into the charts. Here we go. We begin with the spider. Oh, because I was on vacation, that's why. Here is just kind of hanging out. Little bitty doji up there, very little range, very little activity. We're in the neighborhood of lifetime highs, but ain't nothing changed. We're hanging out in front of the drugstore with our thumbs in our pockets. The TLT, however, was shaken up in a good way by the ADP, very weak jobs report. Bonds are up 1.62%, which is a pretty big day. Interest rates are down. The supposition being that if the job market is that weak, Powell has some runway to drop rates, as Trump is demanding that he do. We'll see. But the idea is that he can get away with it because the job market needs help. So TLT doing nicely. In addition, IEF, which is far more cleanly configured than TLT for any sort of bull run, is up 0.71%. And as you can see, whereas the TLT sort of avoided a breakdown for the moment, IEF is actually still shaping up for potentially bullish breakout. Neither of them are close to doing so. So the jury very much still out on whether interest rates will be higher or lower half a year from now. But there you go. Back to equities. EFA, worldwide equities outside North America, is up again. We are hanging out near lifetime highs. The highest point ever was back on Monday. That was the lifetime close high. We're just pennies away from that now. You can see that the move from April 7th has been just explosive. We had a low of about 72. We're almost to 90 now. So that's almost a 40% gain, I think, just doing the arithmetic real quick, in just a matter of weeks on worldwide equities. Kind of eye-popping stuff. Here at home, the diamond is down a little bit, not a very dynamic day in any of our markets. The counter trend peak remains here at May 19. We're a little below that right here. And that's what this line is all about. It simply marks what the counter trend peak has been so far. And there's still a goodly amount of overhead supply to dampen any ascendancy in price from there. The small caps, IWM, is down a little more than 0.1% now. This analogy is still intact. If we're going to try to look at a you are here kind of moment, my guess is that we are the equivalent of around late March 2022, right along there. In other words, we had a topping pattern, a quick tumble, and buying and pushing back to the underbelly of that pattern. We've done the same thing here, although it's cleaner. Here's the topping pattern. We fell very sharply and blasted higher and have stalled out. Let's zoom in. Have stalled out at this 210.13 level, which was the countertrend peak on the 16th of May. And looks like we got a couple of pennies above that today. So let's just sneak that up just a skosh like so. So yeah, today, assuming the data is accurate, which in the world of financial data is always a big assumption, looks like we just edged out the countertrend high by a couple of cents today. But that's my biggest position, so I'm glad it's down a little, although this isn't exactly the move that I'm hoping for in totality, of course. I'd like to see this thing start to sell off hard for weeks, but we shall see. Got a tight stop on that one. The cubes are also really interesting right now. As I've mentioned, it's all about this broken trend line right here. This trend line is anchored to the Halloween low of October 2023. And there's the other anchor point here, support. This is the failure point here back in early March, about a month before Liberation Day. We bottomed, of course, on the 7th and have gone exploding higher, very close to lifetime highs, but we're still below the broken trend line. And there it sits. We'll just keep watching that. It should be pretty clear after this week is over, and there's just a couple of trading days left, especially with that jobs report, if that trend line holds true or not. So far it has. I imagine Friday's activity will answer that question for us. So far, so good. We're still below it. If I were feeling bolder, I would short it, but I'm not after the past couple of months. Only about a 93% committed now, as opposed to maxed out, which is like 170% using margin and so on. SMH, really a kind of a subset of the cube world, is up pretty strongly, almost 1.5%. And I think I mentioned yesterday, the keys on this one are staying below this descending trend line, which has got plenty of room left, and at the same time, staying below this gap. They're just about exactly the same amount. Nice confluence there of objects, but this has not broken out to the upside in either of those respects. It simply has recovered the vast majority of the losses that it experienced since the last lower high. So there we sit right there. Unlike the cubes, it's nowhere close to lifetime highs on the semiconductors. The kind of glory days of semiconductors led by NVIDIA still stands at July 11 months ago. In that context, I've actually tiptoed back into shorting very select semiconductor stocks, small position in AMD with a stop loss at that line. Also NVIDIA with a stop right there. These are tight stops, obviously, but just like I said, very select few. As far as gold goes, we are having great months on this one. This is pushing higher. We're not at a lifetime high here. That stands at the April 22 peak, but gold has continued to be strong. As we know from history, all paper currencies eventually reach their intrinsic value of nothing. There is no paper currency you can point to in history which over the long haul is worth more than tinder for a campfire. And so gold is showing that to be true again, for whether it's the euro or the US dollar, getting richer and richer in value. True money. The junior miners are tacking on some gains near its peak that we had a couple of days ago. So the miners continue to do quite well. I'll mention as an aside, and here's the GDX, which also is a little on the green side. These are very extended, of course. I wouldn't be surprised to see these sell off soon, but they've had a fantastic few weeks. One ETF, which is also doing well, but requires just a note of caution, is XME, which is metals and mining, but not specifically for precious metals. It's broader than that. And the one item I would point to on that is this price gap at 64.74. that represents resistance for XME. It's blasted off just like every asset since April 7. So that's the next question mark on that one. And I won't show it to you again. You've seen it countless times, but the XME GDX ratio chart suggests long-term, the precious metals miners, GDX, will vastly outperform XME, this one, which is just kind of metals and mining in general, copper and precious, etc. What else? Oh, well, crude oil. USO. The crude oil itself is down about 0.85% now. USO is down about 0.2%, about 0.7%. This failed right triangle pattern is still working very nicely. We have mashed up against it 3 days in a row here. It has not violated that. And so the bearish configuration of this remains. So USO looking good in that respect. XLE is also turning around from its recent strength. The line limit on this one, I would say, is 84.17. So there's a huge amount of overhead supply here. We did have a very sloppy rally up to that level, but as you can see, the trend is quite weak, and I would say that there's much more risk of it slipping back into this wide area here as opposed to punching and muscling its way into that overhead supply. So yeah, XLE down about 2 to 3 times as much as oil in general. And within that too, there's some individual items on the short side that are interesting, like BP, which is down over 2%, has a nice history of topping patterns there, as well as FANG, Diamondback Energy, which is breaking down from its own right triangle top. Just keeping an eye on the time here. Ooh, Tempus Fugit, right? Just here's a few odds and ends from the short side. Bank of America, I'll just sort of mouse over the stop loss on these. So there's BAC. Here's Best Buy, which has broken down nicely, has been recovering, but 71.51, I would say, is the stop loss on that one. Shopify doing nicely, down about 1 1/3% today. Kind of a odd personality with this stock, but the stop loss on this one I've tightened up to 107.69. Hilton, HLT, down about 1/3%, having broken this very long-term, about a half a decade-long trend line. I think so. Harley Davidson, which is the cool ticker symbol of HOG, beneath this enormous topping pattern here. Stop loss on that. Anything, I put it at 25. And one last example, back to energy, is Schlumberger, SLB, which is down 1.5%. And the stop on this one I've got is just above 34.33. Couple of last charts in closing. Next Thursday, that is to say 8 days from now, is the Austin, Texas robotaxi launch. I'm not sure what elements will be to that event. Tesla is, it just kind of shows how much the market anticipated the company's growth, because interestingly enough, from October 2021, which is, almost 4 years ago, to present, the price is effectively unchanged. It's had a lot of dynamism between there, but you could just draw a straight line from October 21 to present, and it's net zero. In those years, it's been banging around this Fibonacci's quite well. We're in sort of a no man's land right now. And I think a lot of this is done with a lot of the company's reputation, future revenue, future success has been hung on the potential success of robotaxi. So end of next week should be kind of revealing how that goes, how it's received by the public. And the last chart of all, our old standby, the Russell 2000 futures, for its entire history. We have here the fibs holding nicely. This blue line right here is the crucial line in the sand. It's held so far. Let's see if we can keep doing so till the end of the week. That is it. So I'll see you here tomorrow, which I believe is Thursday. And thanks for coming by. Good night.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what that means? Sadov, you know what that means? We got to bring some action to this market. You want to know why? Because only 897,000 cars have traded today. Even the S&P is up 775. Can you believe it? We had a $20-ish range all day and night, Sadov. Day and night, 25 handles. I guess they got the expected move correct, although you do got some news coming out for Friday.
You know, it's funny. Sometimes when volatility gets really expensive, we kind of dread it because we're like, you know, they're going to move $150 and this and that. And then when they move $20 all day long, you're like, oh, does this suck?
Why, dear Lord? Why is vol 1927 doing nothing?
And you know what's funny is that where it is right now, even the futures were actually up today. And the funny thing about it is 19 and change. When it's 15, you're praying for 19.
Sure. One investor's floor is another investor's ceiling, Sosnoff.
Yeah, I hate that saying, but seriously, there's been times when I prayed we'll get back to 15. Now I'm like 19 seems like it's a non-event. Well, we had a good move in the bonds today.
I was just gonna say we got a silver lining for you, Sosnoff. 113.17. They got up to 113.25. Who was long bonds? Everybody with two thumbs say.
I mean,
there you go. Good job.
I took some profits today, but I kept the position on, and I think, let's see what we got here. I think you got to keep it. I think you got to keep the dream alive.
Wax on, wax off. You got to reduce a little bit.
No.
Now you're trading the bonds real nice, waxing on and waxing off like a little.
What I do is I don't
like
listen.
a little
Don't even tell me what you want to do. Don't even tell me. I'm not. I already took a little bit off today. That's all I'm taking, and the rest we hold.
You take your futures off at the very least, and you sell puts, or you keep your puts and you take your futures off.
Thank you.
You become an intelligent trader.
Nope. Anyway,
hey there, you trader.
What I'm going to do actually is buy more if they go down because I think this is the right play and it's worked all year and you just keep doing it. And I'm going to stay long bonds. But if they drop them on Friday, I'll scoop a little more. I also think you can buy Russell here. I just bought some Russell futures.
Oh, you sound like a broken record with buying
but they're
Russell
down
here. I mean, you almost sound as silly as you do about other topics. You know, you just keep, the lower you go, the lower you go. The same thing. You can't. Just listen. You want to buy the market, you buy the NASDAQ. You want to sell the market, you sell the NASDAQ.
You know what I love about you is you're simple folk. You're as simple as
I am simple folk. I'm 100% simple folk.
You should remember that show's. I forgot what it was called. It was like Simple Folk with Paris Hilton. That's you. You're simple folk.
I don't know.
You can't think a little bit. I'm telling you right now, you sell NASDAQ this afternoon, you buy Russell. I just did the trade. I'm going to do more tomorrow morning. I like that trade here for a trade. Just like I liked bonds, and I'm not selling them out. And
simple folk, Paris Hilton and Nicole Richie. Yes, you are right.
Yeah. You don't remember that show?
You really led a wild life when you were in your formative years, weren't you? Didn't you?
I don't remember what year that was, to tell you the truth. It was a long time ago.
Beth said it was some of the best TV that was out there.
Probably was. Also, it was a tough day. You were picking pennies if you were
trying to trade. Day.
You were picking pennies.
I'm simple folk, but I also call it like I see it. It was a boring day today, Sosnoff.
Yes, but there are some stocks.
It was so bored. I even listened to a little bit of you and Dylan, which really put me to sleep. Boy,
good.
Talk about broken record.
I'm glad. But maybe you'll learn something someday. But
I did learn it. I learned it 6 weeks ago when you first talked about it. 12 weeks before that when you first talked about it.
Hey. Sometimes with simple folk, you have to say it many times before they understand it. Okay? With you or one of those people. You got to say it a lot, and finally you'll get it.
So you're doing it for the benefit of me.
You and some of the other slow adults. That's all.
I like it.
Couple stocks here actually getting to what I would call the frothy range. Started to nibble on.
We're hanging out at 6,000 like the bat said we would. We got up to 59.99.9.
Yeah. We almost broke through.
Second time we've done this.
We almost broke through. Few stocks though that I think, because most stocks were pretty strong today, and there wasn't a lot of premium to talk about. Like there wasn't a lot of stuff you could go out there and one of the last stuff to write about. If you were looking for lots of different plays, but some of the stocks I think are getting a little frothy here. I know AVGO has earnings tomorrow afternoon, but that stock frothy. RBLX frothy.
RBLX. Hold on a
Yeah.
second. This is one that hasn't hit my radar. Let me RBLX.
Well, wait till you see a picture of this little sucker.
Up another $1.50. What's going on here? What did they do? Vinny doesn't have an account anymore.
They cured cancer and something.
Wow. IB rank of 13.
I know that's the problem. So you got to get short put spread. You got to buy a put spread or something like that. But I'm saying, I mean, look at that stock. I mean, you're not going to say, do you love it here? And the other one's Meta, and none of the. I think AVGO and Meta are both. I'm not going to give either one of them even 3 3/4 stars. Maybe they're 3.5 star plays. Roblex maybe 3 1/4-ish type thing. They're all okay, nothing great. But all 3 of those plays they're on the board. From potentially from the short side. From the long side here, I kind of like the tape action in UNH. I know it's going to sound weird, but every time they try to hit a little bit, it comes back. And there's not a lot of stocks that are what I would call cheap at all. I don't know if there's something that you see out there that's kind of cheap. I mean, man, find something that, I'm going to say of all the big name stocks, the cheapest one on the board's still Apple relative to everything else.
And doesn't Apple have that WWE whatever?
I think next week.
Next week, right?
Yeah, I kind of like Apple here going into that, but I haven't bought it yet. I'm flat Apple.
Low IB rank, hasn't really participated with the market. I know it's got 4 or 5 updates in a row, but they've been small updates. I agree with you, Sadnov. Let's get on Apple.
Well, I think there's a couple of trades here, and this is where I was going with this thing. I think there's a couple of trades. And one of the trades that I kind of like here is long a little Apple and short any of those other names I mentioned. But the problem is that Apple has a mind of its own. And sometimes, doesn't play well with all the other kids. But I think if I'm looking at these stocks and looking for something that, they could have a $3 or $4 update, the only one that's that's cheap relative to everything else would be Apple. And of course,
so you want a non-correlated correlated pairs trade here with Apple
and
versus
if you want an index that's cheap relative to everything else, it would be IWM. And if you want a commodity that's cheap relative to everything else, that's a little bit harder. Maybe still bonds, maybe nat gas. I don't know, not much.
Yeah. So on another note, I know you're not good with birthdays and remembering people's birthdays and stuff like that, but would you like to wish your possible father a 97th happy birthday, Sal Zabar? I mean, there was a chance at the time. I don't see the resemblance at all.
Don't say possible father.
You always know who your mother is. You always know who your mother is. You don't know who your father is, unless you test. So possibly 97 today, Saj. You want to wish him a happy birthday?
I'm impressed. Good job, Sal. Good job.
Do you want to know what else happened on this day 10 years ago, Sosnoff?
Oh, what's the date today?
Today's June 4th.
June 4th?
It's in tasty history.
June 4th.
10 years ago, 2015.
Please don't tell me it's the day we hired Dr. Jim.
No, but it's probably close. Not as dark, but probably just as close a date. No. It was one of the first. Where do I start with Katie McGurgle? That's right. She was down $200 in wins. Win was trading $108.
Either it was the first or it was not the first.
It was the first.
Okay, it wasn't one of the first. Well, and Katie survived that traumatic experience of having to work with you, and now she's been passed down to the next generation of Batistas.
And it was also the first Where Do I Start series, which have become the most popular series on Tasty Live.
If you want to see Katie, she'll be in Washington, D.C. with Mike Butler and Nikki Batista. I think it's June 12th, but I could be wrong. I think they're there June 12th in Washington, D.C.
It's up there now.
Yeah. June 12th in Washington, D.C., Mike, Nick, and Katie, and special guest Ryan Grace doing a little crypto piece. And this show will be completely sold out by next week. So we'd like to see you guys. If you're in
Sign
Washington,
up, it's free.
Washington, D.C. always comes out and supports Tasty. So the future of Tasty is on the road, the whiteboard tour with Mike, Nick, and Katie. And I think you really enjoy it. Those guys work great together. They're good friends. They'll have a good time. And they're even going to answer questions. So it'll be cool.
Look at that. Look at that. Doing one up in the stars. Who doesn't take questions?
No.
You take fashion questions, but you don't take any other questions. That's it.
Do you think I need fashion questions? Do you think I need fashion help? I mean, Mr. Golf.
No,
shirt.
I think you're beyond help. I think you can.
He who wears a golf shirt from the 1990s versus a very fashionable hoodie
From Kirkland, 1990.
Jealousy is not very becoming for you. That's all I'll say. All right.
This is a Roan shirt. You wouldn't know about that, Sadnov.
You're damn right I wouldn't. A Rowan. I have no idea who Rowan is, but I don't care. Looking at my biggest movers today, because there is not a lot. On the loser side, it was probably AVGO, just because they pumped a little premium in, giving earnings tomorrow
after the close, right?
Yeah. And gold.
It still has an IV rank at 35. It's not that great. You could expect
No, I
a
know.
little bit more going on in there.
I know, and gold. And I don't know why I felt this all day today, but I'm going to agree with the young Batista on this one. I think they're frothy here. I think that
he was leaning a little. But he's young and ignorant, doesn't understand a lot.
Ignorant, but he's never bearish. And I kind of agree with him here. I didn't think today's rally was going to hold. It has actually held up, not in the Russell, not really in the S&Ps, but the NASDAQ's held up pretty good. But the Dow's down, the Russell's down, and I just don't love the tape action today. I do think.
I don't know, Sutton. If unemployment on Friday doesn't do anything to hurt this market, I mean, and you going away doesn't do anything to hurt this market.
Well, I think
6,100 is in the mirror.
I think tomorrow's more interesting because we got to get through tomorrow first. And I think tomorrow is going to be a lot more of the same until the afternoon. And in the afternoon tomorrow, I think they jockey for position. You've got a few earnings, nothing much, but I think they jockey for position on the number just because there's not much else coming out. So I think tomorrow morning, kind of slowish. Tomorrow afternoon, I think it gets pretty interesting. I'm kind of open too, because I like when they.
Hope you're too. I would love to see you bitch, moan, and groan while you're on the plane without Wi-Fi. That's what I say.
I know that's a problem, and I'm flying a plane that sometimes where the Wi-Fi doesn't work because it's got wooden propellers and stuff like that. So the Wi-Fi, it doesn't work. But. Oh, look at this. They're about to go down. No.
Yeah, even the S&P down 1. Are we limping? Are we limping into the close?
This is a limp. Yeah, they're up 1, not down 1. But, this is a limp. But you know what? It's not. They haven't done anything all day. This doesn't count. This is a absolute nothing. No, I don't give it any. This is just day traders with 10 minutes to go. This is day traders flattening out. And I can't even tell what side of the market day traders were on today. Like, this is such a muted move that I can't tell if day traders were long or short. So I don't even think that matters. Right. I think they did catch a few people short bonds today. And if you look, the notes are up a lot today. The 10 years had a huge rally today. So I think this is.
10. Well, they both had about the same move on a percentage basis, right? I mean, bonds are.
Yeah, but they just came for all of them today. I kind of feel like it was a little bit of a short squeeze in the bonds. I also think if you watch the market today, the reason you thought now we're down on the day, finally down a point, but volatility never sold off today, never once. Every time the S&Ps rallied, volatility never sold off. So I don't think there was ever a time today when they scared the children.
Wow, this is one of the books when we had the first day of the week when we talked about the expected move for the week. We had a nice move in the market, and we haven't had anything since then. Kind of holding that 100 and whatever it was, 190 or 100-point move in the S&P.
No, 98 this week.
I said 90, 100 to 100.
Oh, I think it's 190.
Yeah.
So what is the expected move for Friday now on the?
Well, it's only Wednesday, but you're looking at 63 up until Friday.
Okay, it's a good size move.
Yeah.
That's a 1%er. That's a 1%er on Friday morning. Tomorrow will be small. Tomorrow's going to be what, 28?
32 right now, but again, that's overnight too.
Oh, yeah, that's right. Mm-hmm. Yeah. Anyway, this I would consider this kind of a limp into the close. But again, you know what?
CRWV, a lot of people tell me a big move, outrageous to the upside, but there's no, you can't trade it.
I tried to trade. First of all, CRWD is hard to trade.
Yeah.
CRWV is impossible to trade.
Right.
It's up $10. I tried to sell a strangle earlier today. Let's take a look real quick. Canceled orders.
Markets are horrible in there.
I tried to sell a spread at 1870 this morning. Mid price is still 1870, but the bid offer is like 1720, 2020. Yeah. Like it's almost $3 wide on a near term out of the money strangle. The out of the money calls in there are $1.50 wide, and the out of the money puts in there are $1 and whatever, $1.50 wide, $1.20 wide. Mm-hmm. I mean, and you can't get filled between the markets. And when you look at the out of the money calls, they have a decent volume, but you know what? I'm going to put an order. You can't even put an order on the close because the markets are so wide. You can't even tell what's a fair price.
My peeps are telling me only imbeciles like you, Bat, don't understand that democracy ended 12 weeks ago. So you keep repeating it.
That's right. But you don't have to repeat what you don't have to repeat what your little magatards say. You can just do it on your own.
Speaking of other imbeciles, let's bring in the overtime crew.
What a transition.
What
a transition. I love it. Gentlemen.
We're a little punch drunk here, guys. Nothing going on. Market unchanged. Bonds rallying. Euro caught a little bit of a bid today. It held it. What's going on? Give me some love.
Euro.
Well, I mean, it's been strong.
You're quoting the euro on the big three headlines of the day.
I love it.
He's reaching, Dylan. He's reaching.
I mean, that's a sad state of affairs.
It's a big headline day for the news. It's a slow trading day, Dylan. It all depends on what your world is.
What was you ran the bond at me? I forget the second thing you offered.
It's got to be the flying glasses. That's got to be.
You ran a bid in the euro.
Well, we're crashing here on the close. S&Ps are unchanged. We're crashing. Yeah. It's a free. It's a milk.
Open the phone lines. Open the phone lines.
Open the phone lines. Well played, Dylan. Well played.
We should cancel overtime again. The handoff again.
Yeah.
Why? Then we'd rally again, like we have so many other times.
With the crash into the close.
You would, Tony.
Curve fitting the data there just a little bit. Just a little bit.
No, I would never.
Oh, I finally got filled. CRWV, taking my shot, Mr. Batista. They came for
15-16. You sold the strangle. 95-230. That's a lot of volatility.
Mm-hmm. All right, I did small.
That's a big move in the bonds.
Yes, finally got a big move in the bonds. We've been sitting here. I've been sitting here long bonds every single day for a week. It finally got paid. I think you got to I think you have to stay long bonds. I think they could get back to at least 114, 114 and a half, maybe even 115.
Yeah.
So I think they're a buy if they drop them on Friday. I don't think they're going to do anything tomorrow. I think if they drop them on Friday, they're a buy, and if they go up, okay, you take profits. That's my play.
Yeah. I mean, I think if it gets back into sort of the mid 112s ish and holds there, I'm gonna add. This thing looks like it's gonna run.
Well, let's just hope it goes up back to where it started from.
Well,
maybe
114 would be good, and breaking 114 would be better. And if it breaks 114, then I'm looking for something like 116 next, and then we'll take it step by step.
You got it. All right, what do you guys think for tomorrow? I'm kind of think it's going to be more of the same until possibly tomorrow afternoon, when it maybe gets a little interesting as they jockey for position. But I will suggest, don't try to sell bond premium thinking you're going to get out of that on Friday. That's always hard to do. I'd rather sell S&P premium than bond premium.
You're saying the jobs number matters.
No, I'm saying that you can't make any money selling bond premium the day before a number comes out. I have struggled mightily with doing that.
That's fair.
You did give it a good college try, though, Sal.
I've given it multiple college tries. It's a very hard way. When you sell S&P premium prior to a number and nothing happens, you could actually make money. When you sell bond premium, man, it's like pulling teeth.
Mm-hmm. Yeah.
Yeah, they took a lot of bond premium out today, and so we'll see what happens. But I think the number will matter for. Listen, Tony just said it's a 60-point expected move. When you move $20 all day today, 60 handles is a good number.
Yeah.
I mean, it's only 28.7 IV in ZB here. So if you wanted to get long and you were determined to get long here, and you just wanted to buy and just have a calls vertical, you could do that. It's not that expensive.
No. If you're doing verticals, it doesn't even matter what volatility is.
Yeah.
And if you're trading short term, it doesn't make any difference.
Yeah.
Well, it's the lowest trading range.
Not like crazy expensive.
It's the lowest trading range we've had in the S&P in 6 months since December 4th.
Today is?
Only 25 points trading range.
Yeah. That's what Tony said to start the show, and he is right. Yeah, it's been absolutely a dead day.
I like it.
Dead day.
I sold a strangle in the 0 days this morning and made basically a tiny little bit of money on it. But I think if I held it all day, it could have been the best trade I've had all year.
How many of those have we seen pass by?
Of interest rates coming in today, especially that they came in on bad data with a number on Friday, that they couldn't make good news out of it and say, oh, great rate cuts. That's not great if you're on the long side of stocks.
Well, there's no reason to think any. Oh, there we go. Little sell-off. No, I'm not going to say that. Nothing.
They are down 4 stocks. They are as low as they've ever been all day long, so you wouldn't be wrong.
It's basically a crash.
Look at how strong that euro is going.
Yeah, look at how strong that euro is.
Yeah.
Well, more on Tasty Live is overtime, which we're going to talk to, and then right after these messages, peace.
Tony's hedging his trip to London for next week. Okay, he's going to do
wrong currency. They don't use the euro in London, Tony.
No, you tell me.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. with the Forex platform that adapts to your style. And speed. FX marks the spot. Trade it on TastyTrade.
TastyLive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new TastyTrade and TastyLive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
TastyTrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Kill Bill, or Kill the Bill. It's Wednesday, June 4th, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we take you through the rest of this trading hour. Futures market closes at 5 p.m. Eastern. If you're joining us on the platform, tastylive.com, thank you for joining us. But come over to YouTube. Tell us what you're trading, what you think of this action. If the bears still have them right where Ilya wants them. We see a market that actually goes nowhere today. Where's the trading volume again? Bad economic data this morning. ADP, terrible. ISM services, contraction. That wasn't anticipated. What wasn't good news for stocks was actually very good news for bonds. ZN, ZB both up. Bonds, treasuries rather, higher across the curve. Likewise, good news for the metals, which bouncing back after being dented yesterday, should we say. Energy pulls back in. We likewise see a U.S. dollar pull back slightly as the Canadian dollar rallies to a fresh yearly high in the wake of a Bank of Canada rate decision. Of course, tomorrow we do have an ECB to pay attention to. So, Dylan, much to Tom's chagrin, we are going to talk about the euro here.
Oh, yeah.
Other than that, we're getting ready for Broadcom earnings tomorrow. We have non-farm payrolls on Friday. Elon Musk is out here tweeting, kill the bill, and send back all the congressmen who voted for the bill in 2025. We got to bring them back in 2026. Dylan, I don't know what the heck's going on down in D.C. But you know what? This market doesn't care because the S&P 500 is only down by 0.04%. Nasdaq's up by 0.25. The Russell's off by 0.28. The serious move in the market today comes via the long end. ZB, lots to say here in a little bit, but that is now a push to the highest level that we've seen in about 3 weeks now, vindicating perhaps a bullish falling wedge. Dylan, before we give Ilya the mic, because I know he wants to talk about that PMI report, what say you about this turn through the middle of the week? What's with this nothing of a Wednesday here?
I mean, I just think it speaks to, Tom and I were talking about it earlier, the increasing irrelevance of the Trump administration from a market perspective and the increasing relevance of normalized economic activity and behavior, whether it's earnings, pick your favorite sort of economic measurement. And in this particular instance, I think what you're seeing is one, the marginalization of the Trump administration from the market, and two, anticipation of a jobs number on Friday, and no one wanting to get in front of it, and no one wanting to and everybody's sort of taking a relief. It's almost like having survived a hurricane, and you're still alive, and now the water is calm and the sun is out. And there might just be a few days where people just lie in the boat and float a little bit and wait to see what happens next. And I think that's kind of what you're looking at here, is the realization that there was a panic that there actually was that the Trump administration was going to be relevant to what happens in the marketplace based on their sort of all the various rhetoric that was flying around. And now I think there's a recovery from that belief, and a period of calm as people sort of try to recenter to look at actual economic data to see whether in fact, I shouldn't even say whether, but the degree to which in fact some of the chaotic rhetoric of the last couple of months has had any real impact on something like the jobs market, which is fundamentally the foundation of the American economy at this point relative to expectations for people's ability to pay their bills every month.
Ilya, speaking of paying bills every month, we did get that ISM services report today. Services are 2/3, 70% of all jobs in the country.
More even.
More even.
Yeah.
ISM services comes in today at 49.9. Before you get into it, just the usual explainer on these PMIs or ISM reports. These are what is known as diffusion indexes. Survey respondents are given 3 choices. Things are getting better, they're staying the same, or they're getting worse. You blend all the answers together. If they're worse, it's a 0. If they're better, it's 100. If it's the same, 50. You blend them all together. 50 is your line in the sand. Above 50, the measurement is expanding. Below 50, it's contracting. And so today comes in at 49.9. Just a hair into contraction territory. But it's, of course, framed by that weak ADP report this morning. ADP coming in below 40K. I think 33K on the nose. So, Ilya, this had to be, as I joked with Nick today, admittedly, I said, this is making Ilya's morning. Ilya probably woke up this morning, poured himself a cup of coffee, right? It's before 1 p.m. Dylan, so he has a cappuccino. And he says, okay, so PMI's down. Make my day. I guess the question is, why aren't stocks down more? Because this feels a lot scarier than the February 21st report that we saw.
For the record, Ilya does not put milk in his coffee, but as he drinks his fancy black coffee, he was definitely very encouraged to see these numbers today, because when you look at the internals of these numbers, they really start to put together the architecture of the argument that I've been making for a long time. And the market reaction today really seems to comport with that as well, all of which is what you want to see as a macro-minded kind of a trader, because timing is our weakest suit. We get things wrong on the timing front constantly. And so from the price action response and from the internals of the data lining up, you get the sense that it's all kind of starting to happen. So first, the data. 49.9 doesn't look like it's the world's worst number because you're 0.1 diffusion index point away from 50. So it stands still. It's a very modest contraction. Let's be very sort of measured in the way we do this. This is not the most bearish thing in the world at face value. But when you look at the internals, they are very troubling indeed. And I won't even go into the sort of assorted comments from various industries here, from construction to healthcare to finance to retail to you name it. It's tariffs this and tariffs that, which is interesting, of course, because this is the service sector that we're talking about. Imports are mainly on the goods side. So this just tells you what people in the service sector, which is mainly serviced by domestic firms, and what those domestic firms face in their supply chains and in the behavior of consumers as a response to the tariff back and forth. That they're constantly talking about tariffs and almost exclusively about them across sectors. That's very eye-catching. But if we look at the numbers themselves, we have the first contraction of what may become a trend here, but we certainly moved from expansion to contraction here overall. Business activity and output flat, new orders rapidly shrinking, employment stalling, and prices surging for the 96th consecutive month and at a faster clip. And the month-on-month change in price inputs, quite significant, another 3.6 index points, added to not just the fact that there's inflation, but the speed of it. And that's the stagflation thing that we're afraid of. That's what you don't want to see.
Why do you think the equity market's not more alarmed?
So what we saw as the initial response to all of this was an immediate adjustment in the bonds. And this is where I think both the equity market response starts to get explained, and also where kind of my preferred narrative starts to reveal itself in the price action. The biggest move in the bonds, and the bonds moved higher across the curve, yields moved lower across the curve. The biggest move was at the long end. The front end barely budged. And what all of this, of course, suggests is what we've been talking about before, which is that the Fed is not in a hurry to cut rates. And then rate cuts will have to get stuffed in the back end of the curve, because what the Fed is going to have to do is wait for the recession to occur or all but occur. It's going to have to wait, in any case, for some kind of unmistakable economic pain that beckons action. And that will mean that they're late. And because they're late...
They're always late. Always late.
Well, they're always late, but they're going to be late relative to themselves, right? The Fed is, by definition, a reactive institution.
For sure.
And it's going to have to be able to justify its actions. Here, the concern, as it was last year, through actually about this same period, a little bit earlier in the year, maybe about April, May, it started. Here, we're waiting a little bit longer. That the Fed is going to be later than the Fed even would be normally. And that they're going to have to do a lot of catch up. And so what the idea of later cuts will mean is more of them are going to have to occur. And so the long end really rallies here. I think that helps to explain in part why stocks are not rallying, but also why they're not selling off. Markets like rate cuts, but they're circumspect on later rate cuts. They would prefer them sooner.
Could I posit why is the Russell is, just to poke. This is what's getting me today, right? Or at the start of the week, we had this divergence where stocks, slow kid in the classroom, as is the case. Everything else is kind of sell America, gold up, dollar down, bonds down.
Yeah.
Today, dollar down, bonds up. Almost classic interest rate differential story. Fine.
Sure.
Dollar soft, metal's a little bit stronger. Fine. Interest rate differential story. Stocks, though, not reflecting that same type of recession fear. And the Russell today is not, if this was about lower rates, if the stocks market was excited about lower rates, those floating rate debt companies, the small caps would be a little bit more perky.
Well, and this is the whole thing. This is the whole thing. I think you're hitting it exactly on the head. This isn't excitement about rate cuts, because those
yields are up for
now.
ZB is up for the wrong reason. is what you're
Those
saying.
would need to be coming now, right? This is stocks go, well, okay, there's cuts. Yes, this means the Fed is closer. But how much closer? Not close enough. This is later rate cuts. This is the Fed is going to be late. And there's an interesting report that comes out.
Inflation is more of a risk, and there's more inflation risk than we want.
I mean, there's certainly, and what a segue. It's like Dylan is mainlining my brainstem. It's exactly the idea here that inflation is at the very least more uncertain, because you get a report from the Wall Street Journal today that follows the recent numbers from the Bureau of Labor Statistics and says that because of budget cuts, because of the hiring freeze earlier in the year as part of the now collapsed DOGE effort and various other things, the Bureau of Labor Statistics has had to significantly reduce its surveying and data collection for CPI numbers. And they've had to rely on these imputed, less reliable measures for much more of the data. So whereas before, this alternative estimation methodology accounted for maybe between 10 and 15% of the data, that's what's been normal basically since COVID. In the most recent data, the April data, it's approaching 30%, almost double. And so these are not great numbers here, maybe. These numbers, these inflation numbers now might be kind of fuzzy. And so if the Fed was looking at this and they were already unsure which side of their mandate they're supposed to prioritize, with fuzzy data, they're going to be more unsure. They're going to want to wait longer. They're going to want to really, really, really make sure that they don't let inflation expectations off the hook. And so that's just more delay. That's just waiting for more pain to become realized. So for stocks, this is kind of a confusing mix. Cuts, good. Late cuts for bad reasons, not good. So they ultimately don't go anywhere. But I think the bonds and the dollar really tell you, and gold, what the path of least resistance is here. And I think then as this data keeps getting soggier and you get more and more speculation, you get a real long runway to go, okay, now they're going to be closer. Now they're going to be closer. Now they're going to be closer. And you get this long runway for bonds to go higher and for the dollar to sell off as the market follows all of the Fed speculation around when they'll actually go step by step by step. But because that'll be long because the process is going to be elongated, there's lots of room for that speculation to be a thing we talk about.
Dylan, Ilya mentions, the path of least resistance for gold, for metals, for bonds being higher right now. I can't help but recall the fact that gold and bonds are typically the things that do best when we do have recession coming into play. And so while the last few days I was trying to sell you a story, Mr. Radigan, that things were looking growthier, right? Higher yields, higher stocks, higher oil, weaker gold. That's kind of a growth story. That's not really the case here today. Gold is up. Stocks are bonds are up, oil's down. Oil's down despite this call between Trump and Putin. Dylan, I see the headline here, but I just got to use my own brain. Putin and Trump talking. Trump says that Putin tells him that Russia's going to have to respond to this weekend's drone attack. That seems like a scary headline, but as I recall, I think these two countries are at war.
Are they not currently bombarding each other? What's different there?
Dylan, what's the read on the Russia-Ukraine developments from Europe?
pretty, I would say status. I would say it's not a point of focus, that there's much more focus in Europe on concern about the chaos of the American policymaking apparatus that is represented by the Trump administration, the Trump-Musk breakup, the American overall policy. I would say that there's much more discussion and concern in Europe, in the business community, focused on the disruption to the world that's represented by the American presidency than anything going on in the war between Russia and Ukraine. And that there's no sense, and maybe wrong, maybe misguided, but there's no sense that whatever happens between Russia and Ukraine, that it's any more of a threat than it was, before the latest Ukrainian maneuver of escalating outside of what is perceived to be a very deadly and catastrophic but entirely contained military theater between two Eastern European countries. No concern. And I would even go so far as to say that the whole Trump headline around, that's about Trump. That has nothing to do with Putin or Russia or anything Russia is or isn't going to do. That's about Trump wanting to position himself as somebody who talks to the president of Russia. And he's like, I talked to the president of Russia, and the president of Russia told me he's going to have to do something. Well, no shit. To Ilya's point, they're at war. And so I don't even think that I guess my point is that headline is irrelevant, because that headline is about Donald Trump trying to posture himself as important, to try to portray himself as someone who is in a dialogue with some other people that are important, not that Trump has magically extracted a profoundly and shockingly hard to come by piece of intelligence that he talked to the Russian president, and the Russian president told him he's going to have to respond. It's ridiculous.
Oh yeah, this headline obviously was scary, but again, what did it do to the market today? I mean, I don't want to, I hate saying this, and you and I the three of us have had this discussion for years now, where if it was Ilya, I mean, you and I came over to Tasty officially in late December 22. Mm-hmm. So I don't think we were here through. I mean, we were on Jones and Friends, right, when the Russia-Ukraine war broke out.
Yes.
But even with Israel-Gaza, for example, I think it took a month for the market to digest it and get into a place where, this is going to be something that's happening. And does it suit us to react to every single headline every single day, or do we just need to take the long view and price this in as there's now a premium in oil, there's a premium in gold? It feels like the market's kind of stuck there still with Russia-Ukraine. What happened over the weekend was materially significant in perhaps a big picture sense of things, but headlines like this about there being missiles going back and forth. American Embassy just put out an alert about an hour ago that Americans in Kyiv should be prepared to take cover because intelligence suggests there's going to be Russian shock and awe. Oil is off on today's session, 1.18% lower. Natural gas is up by 0.03%. I'm not asking what this all means today. My question is, at a 38.9 IVR, given the headlines we're seeing, is oil vol underpriced? And then I suppose, Dylan, are we going to have the classic Radigan trade where we're going to get a headline that spikes oil that really has no bearing on long-term trends and we should absolutely fade it? I mean, that's where my head's at.
I mean, from a trading perspective, I would say that I'm hopeful, but I would say that the possibility of such a thing now seems to be higher than it has been in recent months, except for the fact that the market sort of it goes back to the buy the dip conversation we had from a couple of days ago, where the market seems to be getting better and better at we may never get the spike. The same way in some cases we're never getting the dip.
Ilya, if there's a spike around some headlines related to Russia, Ukraine, I think we're both of the mindset, all three of us are of the mindset that we'd want to fade it here. Mm-hmm. But square the circle for me. Are we waiting for a reaction, or is today the reaction itself that, yes, something's going to happen, but who cares at the end of it? There's no reason to get bullish oil because of geopolitics at these levels. We should be waiting to fade it, quite frankly.
In fairness, I've been fading it already. So if you look at that evening star on the previous test of that gray line that you have there after the most recent upswing from the range bottom around 54, 53, I've been short since then. And I'm holding it and I'm sort of waiting for things to happen because obviously momentum hasn't built, but neither has the trade been invalidated. So for me, the story is basically the same. You're stuck at a range top. The bias risk reward wise is to be short. If you're wrong by a little because you're close to a breakout point. And if you're right, then you don't need to be right by a lot. You just need to get down into the bottom of that range again, around 54, 53. And you're very much skewed to have more room to go down there than you do on the top side, considering you're up against resistance. If you break that resistance, well, then you get out because then you're wrong. But the risk reward is such that you lose a little in the test of that idea, and you gain a lot if you go the other way. So that underlying logic continues to animate what I'm doing. I think it's cute that Russia wants to posture, if that's what Putin said, right? We have to kind of filter the thing in the retelling of the president. It may not have been nearly so dramatic when it came out of the mouth of Russia's president in the phone call, but the whole thing here was that Ukraine, after aggressive and record-setting bombardment of it by Russia ahead of this operation, launched this attack and destroyed a ton of their bomber fleet, therefore degrading their ability to strike back. So this is really the whole thing. It's like, well, yeah, they're going to strike back. Of course they are. This is a war. But they have less ability to do that than they did when they were setting records for how hard they were bombing Ukraine just a few weeks ago.
Well,
So
I mean, there's a lot of speculation here, right? Like we should go to the answer.
Yeah.
Right.
Let's go to the answer.
Who are some of Russia's biggest allies, Dylan, that you think Putin's friendly with?
China,
India. India, okay.
North Korea, Iran.
No, Iran, right? Okay, so we'll go to Twitter. Unfortunately, I can't message the Russian official profile, but I can message the Ayatollah.
I can write the thing for you in Russian if you want.
No, it's fine. We'll just send the Ayatollah a message here on
Don't
Twitter.
show off, Ilya. Don't show off.
Do you know if Russia's going to attack Ukraine tonight? Sent. Maybe we'll have some news for the viewers of Overtime. Maybe the Ayatollah responds to me this time, unlike last time when he ignored my message. I just think it's funny that I can direct message the Ayatollah of Iran on Twitter.
Have you ever gotten a response, Chris?
He has not. I actually got blocked on the English account, so I sent messages to the Farsi one.
You're saying you've been harassing the English language Ayatollah so much on DM that they blocked you?
I am trying to get banned from a country, Mr. Radigan. I told you this. This is not like a shtick.
I know, but I just don't want you to ban yourself from Turkey. It's such a great country. It would be a tragedy for you to miss out on some of the fine honeyed and almond-laden and pistachio-laden desserts of southwestern Turkey. But I would say that if Iran actually did ban you, that's a response. Like, it's an accomplishment if you were so annoying to the DM of the Ayatollah that they took the time to block you
from the entire country, right? Well,
you could probably do an entire podcast where you just sit around with a screen share like we do with trading screens and just DM various pieces, like DM the Pope, DM the Russian embassy, just go direct to
DM pieces of, and then you say the Pope first.
Yeah.
Come on.
DM Kim Jong-un.
He's not on Twitter.
What are you having for dinner tonight, bud?
Well, I would love to know, because there's a poly market. Like, this is part of the reason. There's a poly market. Will there be a nuclear detonation in 2025? And the conditions are, if there's a test, if there's an accidental one, a usage, right? And I'm not saying that I'm expecting a nuclear bomb to be used in Ukraine by any stretch of the imagination, but North Korea just had one of their big destroyers that they unveiled sink immediately during the opening ceremony to get it into the water. North Korea just rounded up a bunch of senior military officers and imprisoned them for the failure to get this new naval craft into the water. So what has Kim Jong-un done in the past? Have they done nuclear tests, right, to get attention? It's been years. They didn't do any during the Biden era. I think they last did them in, I can't remember the last North Korean nuclear test, 2015, 16, 17, late Obama, early Trump, somewhere in that neighborhood, right?
Been a while.
So there's some things in play here that we have to watch out. Today was an unexciting day. S&P was down by 0.06%, and those are the kind of days where it's like, okay, what pot can we stir, Mr. Radigan?
I mean, I like the thing, you just DM everybody, you're like, are you planning to use a nuclear weapon anytime in the near future, sir? And just sort of do the rounds.
That's what I would be asking Kim Jong-un.
Yeah.
He was.
But I mean, all of our sort of dark humor aside, the financial markets are not worried about this at all.
Yeah.
And they're the amount of money that is at stake in the global energy market or in the NASDAQ, which we are looking at basically all the way back from the idiot day sell-off, for us to suggest that, I mean, I realized Ilya's points relative to, the economic data and all the rest of it, but I also know Ilya keeps it small and nimble because he's smart enough to know that the market is not prevailed over by a bunch of idiots, unlike some other institutions.
Quite right.
And the market is not worried. The stock market is not worried. The oil market is not worried. And I think that I actually think that the jobs number is vastly more important than anything that Russia does in Ukraine.
I would absolutely agree with that. I think the much larger issue is growth, and growth is a function of kind of balancing tariff chaos with interest rate expectations, and that's the jobs number. That's the next big inflection point. Now, it is certainly the case that desperation can breed extreme action, but I don't think we're in the kind of realm here where Russia will be the actor that pulls the ripcord on some sort of a tactical nuke or some such thing.
That pie market bet, for what it's worth, and obviously pie market's not available to be traded if you're a U.S. customer. But for those that do trade it, I would point out that the expiration for that contract is through the end of 2025. So, a North Korean nuclear test, Iranian nuclear test. Apparently they have enough enriched uranium for 10 bombs now, according to the latest reports, which is why Trump is pushing for a deal. And they should get a deal, right? Like, restore the deal that we had with them previously. If you read the text of the current agreement that we're working on with Iran, it's resuscitating the Obama nuclear deal. So if that's where we go, then they don't get a bomb again. That risk is off the table. Trump seems to want that first. And I also don't think it's a coincidence that he used his comments here on his talk with President Putin in Russia to mention that he was asking Putin to see if he could do anything to get the Iranian conversation going. So it feels like there's some leverage in here on both sides, right? Putin wants the U.S. to stop helping Ukraine. The U.S. wants Russia to get Iran to agree to a deal. I'm not going to give him credit and say there's some grand bargain going on behind the scenes, right? I'm not going to say there's some 4D chess here. Far too gratuitous. But these aren't unrelated. And today's lack of reaction to the news story, Ilya, I think does serve the purpose of telling you what was important today. So if we look to our cross-asset performance, if Monday was growth, today kind of feels like recession. today kind of feels
Yeah,
like
don't
a
you
week
think
away.
that we're also in a world where this jobs number, and I don't want to steal the thunder from tomorrow's conversation, but where this jobs number is going to be one of those ones where if it's a strong jobs report, the market, good news will be good news and bad news will be bad news, basically. That if there's a strong jobs number, that will be unexpected and supportive of the ebullience of the equity markets, for instance.
Ilya, you
Or
can go
is a
first.
strong job number going to eliminate my rate cuts and cause me to have agita?
Well, so I think this is why the response today to weak data is so interesting. We know the stock market likes going up. We know it's biased to interpret things in ways that allow it to do that. And today, it got bad data that it could not interpret in its favor, despite the fact that yields fell across the curve. In my mind, the way you explain that is it's because the rate cuts are coming later and because the Fed is not going to be sold. So if you go and you get a weak jobs number, I think the market isn't going to like it whatsoever. And I think the reason the market isn't going to like it is because it's going to say, here's the downturn and the Fed's not coming. There's going to have to be a lot more for the Fed to really jump into action. And by the way, the fact that the president is back to goading Powell to cut rates probably means that the Fed goes even slower because they don't want to risk their credibility. So in my mind, it's probably bad news is bad. Good news is we'll see. Because either way, you get a good jobs number. Okay, rate cuts are delayed, but maybe that's not so scary if the economy is all right.
It feels like there's a, you know how we talk about narrative flexibility with like Bitcoin or gold, where no matter what happens, you could still kind of fit the square peg into the round hole of this is good news for the asset.
Sure.
I kind of feel like we don't have that with the jobs report on Friday. I mean, sure, we had the JOLTS report, which is very lagged for April, shows an improvement. And there's the quirk that we do get the China-U.S. trade detente during the NFP reference week before you'd actually start to see all of the port layoffs and trucker layoffs and retail store clerk layoffs, right, begin to domino here. There's part of me that says the data are stale and don't reflect the world that we're heading into. There's part of me that says the data are going to be better than what I think people are giving them credit for. There's also the potential for them to be terrible. So if they're good, Ilya, you go, well, ISM services for May. I mean, like, awful, right?
Yeah.
Like we just, there's more pain coming. I can ignore a good number here. Forward-looking indicators, more contemporaneous indicators are telling me that things aren't getting better.
Mm-hmm.
Dylan, I'm having trouble trying to find where is the jobs number that convinces people, you know what? We need not be concerned anymore. Is it 400K? Is it 1 million? I don't think that the estimate of 130K is going to cause anyone to turn around and say, see, tariff problem avoided. We're good.
Yeah, but don't you think it comes in at like 227?
I think it does have the potential to beat. Especially because ADP was,
and then everybody's like, the tariffs, no one's getting laid off. Not little Goldilocks vibes, not too hot, not too cold. Rate cuts are still in play. Tariffs aren't that bad. I mean, I'm not saying that that's what's going to happen, but that seems to be the sweets. That's where the narrative flexibility comes in. I think your worst case, but maybe your worst case becomes your best case, is you get minus 200, and it's sort of tariff catastrophe comes home to roost.
I'm sort of the mind that if you got minus 200, the markets might actually go, you know what? Fed's coming. This is a legitimate hair on fire, holy moly number. Okay. They're coming. They have enough. And if you get anything middling, like you'd have to get, to Chris's point, some sort of incredible jobs growth for the markets to go,
843.
This is not just lag. This is a real thing that you can extrapolate as labor market strength. Everything else is whatever. Surveys, blah, blah, blah. This is a really good number. And yeah, there's not going to be cuts, but the economy is doing great. On we go. The worst case scenario, but also the much more likely scenario than either of those things is something middling. And if you get, and the likelihood, I mean, that's the meat of the curve, which is why I think Chris is absolutely right. It's difficult to have narrative flexibility with this number, but for if you get something on the tails on either side. If you get something on the tail at the super weak side, okay, great, the Fed's coming. If you get something on the tail at the super strong side, we're all wrong. There's no recession. All is well that ends well. But the meat of the distribution is the biggest fear of all. Because that
come in at $1.25, 90,
yeah,
$1.25, $1.47.
Things are slowly dying by 1,000 cuts, and the Fed's
weak sauce. Mm-hmm. How about buying the bond then?
Well, what's the worst case? What's the worst case scenario? I mean, if you get let's just say you get. We're going to talk about this tomorrow. But
worst case scenario is a weak sauce.
No, but let's say there are three outcomes here: minus 200, 0, and plus 200. Plus 200, I think everyone ignores. 0, everyone panics over. A negative print is the most bullish because then the Trump administration is going to tap out. Elliot, is that crazy?
I mean, tap out. Say more about how you envision tapping out in this context.
Well, the
tap out was on the W. Bro, didn't you see when Donald Trump was on the WWE? Like, he taps in, he taps out. He knows how to do it.
You know what? I actually recently saw the Netflix documentary on Vince McMahon. So actually, I just
the clip. You know what I mean? Donald Trump is an entertainment professional from the World Wrestling Federation, bro.
That's right.
In and tap out.
But this is then becomes the question, right? Does tapping out mean forget the tariffs? We're going back to a 2%.
It means forget the tariffs, and it means back to the drawing board with the big, beautiful bill.
If that were to happen, let's say here that we don't have a president that is absolutely incapable of saying that there was a mistake made.
He doesn't have to say there was a mistake to change his mind.
Right, but I mean, how often does that happen? But now it's also a president. It's also a president that can that has enough flexibility to say, "I'm saying this now," and if somebody says, "But you said this other thing before," he goes, "No, I didn't."
Of course,
then
that's it.
And then that's it. So all of those things, yes, but if we were to say back to a 2% tariff, back to the drawing board on the big, beautiful bill, tax cuts, whatever, I think the markets would absolutely rip. I would become bullish pretty much overnight because that's the kind of morass and inaction for an extended period that markets love. Because then that means Washington is probably not getting in their way for a while. And they don't have to think about it. How likely? I don't think
be on the way for a while. Ron Johnson just made the rounds, 2 hours ago. He was on CNBC saying that he's not going to vote for Trump's bill in its current form. My Congressman, Mike Lawler, put out a statement today saying that if the Senate Republicans send the bill back with any changes to SALT, the SALT caucus is going to kill the bill in the House.
So that just suggests it's neither big nor beautiful.
It's kind of neither big.
It's big.
It's beautiful.
Big. It is big. It may not be beautiful.
But it may not be beautiful.
I mean, I think the problem for these Republicans is that in fact it might be too big.
Dylan, I know that we have The three of us get
disgusting abomination. Sorry, I had to get it out.
The three of us, I read the chats. They say it's not good for your mental health to read the comments. I was born in the comments. You've merely entered them. Okay. I grew up on 4chan, on Reddit, right?
Wow.
Like, okay. So none of the comments bother me. I would posit that the people say that we have TDS for doubting the viability of the bill and that it's not going to work and that Doge was a joke. You have the TDS. You're so unable to see what the actual law allows for. If you want to codify the cuts that Doge is doing, you have to go through a rescission process, something that we've talked about here on Overtime. We've talked about it on The Price of Truth. The president just simply can't say, like, I don't want to spend the money that Congress is appropriating for me. That's not how our country works. There's also no fraud happening. If there's fraud, it's illegal. Sue for it. Where are the lawsuits? It's just spending that people don't like. And cutting the spending is much more difficult than people presume. So when we're saying that we don't think this bill really is going to go anywhere because of Ron Johnson, because of what Elon Musk is doing, because of what purple seat congressmen like Mike Lawler and these California and Illinois Congress people are saying in the Salt Caucus, because we're trying to stay tethered to reality. We're trying to stay objective here about what is feasible and what is just a pie in the sky. And it's just campaign talk, right? Like, you know, it's why, for the life of me, when I hear, the war in Russia, Ukraine is going to end on day one, and people are sending emails like, okay, if this happens, what assets should I own? We have to start with the first premise, like, this war is not going to end on day one. Why are you taking at face value? What would make you even think that's the truth or possible here? Oh, it's just a sales pitch. Okay, well, then why are you suggesting that I need to identify assets that would benefit if this war ends on day one? Pick a lane. Pick a lane.
Hang on a second. Can I just ask a question? Are you talking to Iliad and I, or are you currently debating the chat room?
Debating the chat room. Fighting the audience.
I thought that you kind of just, I feel like you might have just broken the fourth wall, left Iliad and I here just to sort of enjoy the program.
I mean, I'm just sitting here.
While you've gone into a direct
with everything Chris is saying.
You're doing a good job.
Go.
I agree. I'm with Iliad. I agree. Carry on.
Go on.
This is kind of sucks for the era that we're moving into right now. And I made this joke with Victor, and I think I made this joke with you guys, but when I was a little boy, I thought the future was going to be flying cars. Not me tweeting something innocuous like, the earth is round, and someone responding to me, at Grok, is this true? So I would encourage everyone, don't use AI. You know, when you see something like Doge announced, or you see a spending bill announced, take the time to actually read it. Take the time to figure out what the law is behind it. And is this a market reaction we should actually be taking to heart? And I bring that up because how many times have we been confused about this in the past week? I recall a market that overreacted last week to the announcement that the International Court of Trade was no longer going to allow those tariffs in place. But a simple read through of what the court order said basically redirected the administration to Section 122. And so by the next morning, when the administration had said, we're just going to do this through Section 122, the market rally was undone. Because people who were reading the actual court decision said, oh, this isn't going to last. I should fade it. So take the time and educate yourself, right? There are politics in play here that matter. Saying that we don't think the bill is going to pass isn't TDS. It's the actual nuts and bolts of what the senators and congressmen are saying. Maybe that's behind.
The richest man organizing to primary anybody who votes for it doesn't help.
That's also, I mean, listen, let me just, I know Trump is the guy. He's the best thing since sliced bread. But if you are a 45-year-old congressman in the Republican Party right now, do you put your chips in Elon Musk's corner or the octogenarian's corner? The guy with $400 billion in the bank?
Great point.
Or the guy who is term limited?
That's a great point.
I think today's ZB move is just as much. We were freaking out last week or 2 weeks ago. We have this May 21st move. Oh gosh, the bonds, the deficits, the debts, the horror. Maybe the bonds are reflecting.
Steve Eisman, oy, the deficit.
I'm just, Dylan, maybe today's bond move isn't just about PMI and the ADP report, but also about the fact that this deficit blow up, this debt blow up bill isn't going to get passed. And so all that additional issuance at the long end of the curve isn't going to have to come into the market. I'm with Tom Sosnoff here as I get off my pedestal and I stop filibustering. If there are weakness in bonds notes over the next few days, particularly with non-farm payrolls on Friday, I'm a buyer of that dip. not just short put spread, but given the falling wedge here, I'm looking for an opportunity to get in to buttress. Well, I'm already in here at 51 days with Nick Batista today, but go out to 79 days and do something like long the 121, short the 125 call spread. It's a 10-1, Dylan. It captures the top side of our falling wedge base, which is 121 and 10 ticks. I think we could take a madman's delight here and queue up a 10-1 shot, basically 1 in 5 probability. Long bonds, long into the curve. The bill's dead in its current form. You're not getting the debts or deficits.
Jobs number is going to be a mixed bag, will be useless, not helpful, won't be too strong, won't be too cold. It's going to be a middler.
And let's pay some respect to our friend Ilya here. The data are showing, growth earlier this week, maybe not so much growth right now. A long bond position 79 days out is as recession classic as you could get in terms of where to put your money if you think recession is coming. Yeah. Because since 1980, it's been and gold that has outperformed everything else when recession arrives. So I'm done speaking for a bit. I've been bothered by some of the comments, seeing people accuse my friends Ilya and Dylan of having their blinders on, and yet you guys were ambivalent about saying Doge would fix anything, given your experience, Dylan, yours especially in politics and financial media since the global financial crisis, right? Like you know how this all works. So let's just not ride narratives here. And if we're riding narratives, I fall into this myself. This is a good check for me as anyone else. But don't just believe the headlines. Okay.
So now can I switch to my completely contrarian, sort of contrarian to myself anyway, perspective, which is that yes, long the bond, great, fine. I like silver, as we know. I would, if oil spikes on Russia, I'd sell it. But what of the madman's delight trade that is a short NASDAQ position? That the market is on the wrong side here. That the economy is slowing. That the war risk is higher than we want to believe. I mean, all the risks are more. List your risks, and run and because the levels are so high. The NASDAQ's basically been going up for a month and a half.
So I have this on, but if I have it on through a put vertical in the queues, and if I didn't have exposure, I would not be putting it on now, though I'm not unhappy enough with it to take it off. I didn't like that we closed above the range top yesterday. We talked yesterday. I mentioned that if there was a blemish on my bearish narrative, this was the glaring one. We're still underneath the spike high on this move higher. And that's why I'm not convinced to get out. So if you look, 4 candles back, or 3 back from the current candle, 4 candles away, that's that spike red right there. We haven't cleared that high. So I'm not convinced to get out of my position. If I was going to take a bet here, a new one, and deploy an incremental dollar, I would be looking at the S&P. And I would be looking at the Russell. I think Russell maybe in particular, because that's a growthier, more sensitive kind of thing. But the S&P just as attractive from the perspective that it's had a bigger run and there's more to unwind speculative sentiment-wise in the S&P than there is in the Russell. The S&P has outperformed.
I mean, if you're long the bond and short the NASDAQ, are you basically long the same thing?
Yeah.
Kinda.
If you're playing the recession trade?
Yeah.
If that, yeah. So that's...
I'm also arguing NASDAQ.
Exactly the quality.
Sorry.
No, so just to voice endorsement of what Chris just said, I think if the reason you're selling NASDAQ and buying bonds is because you're minded toward recession and not for some other reason that you think the narrative is going to take some sort of weird turn, if that's the reason, it's the same idea.
So would you rather be long? If you had to just gun to your head,
That's what I'm about to say.
Long the bond or short the NASDAQ? I'd be long the bond.
I think you got to be long the bond there, if only because we've seen that the stock market is willing to get ahead of itself and say growth is going to be low, but sunnier days are ahead, whereas the bond market will stay at lower levels for a longer period of time, reflecting those limited growth and inflation premiums in the short run. So stocks tend to bottom first. They tend to lead everything. So, I mean, Ilya, the question that I think we are dealing with now is traders, right? Maybe not traders that are doing it the typical Tasty way, who are simply looking at the vol and looking at, the 45 in, 21 out, and they're ticker agnostic, which, quite frankly, sticking to the mechanics is, you and I should probably do that more. And I think that we get in our own way sometime with our own narrative. But there are other times when we may be early, but because of the macro, we're right. And then there comes that's the convexity, right? So keeping that in mind here, over the next 45 and 21 day out window, are we likely going to get clarification as to whether or not we should be pricing in recession, which we may already have back in April, or do we still need to yet price in stagflation, which is not an overheating economy. It's like an economy that's frozen. Nothing thaws, nothing clears. Prices stay high, activity stays low, right? It's frozen in time, basically. This is not pricing for a frozen in time economy, for a stagflating economy. Even if recession does come, the stock market's like, well, it's people induced. This is not like nature having its way. So maybe we started it, we can stop it.
Yeah.
I'm just going to take the view that right now, non-farm payrolls poses its own risk. The volume today was nothing, Dylan. So if I wanted to call the top today, 1.05 million traded, gross. That should be where we are at the halfway mark. So there's no volume. There's still positive technical drift. The slope of the moving averages is more positive today for the 1 week and the 1 month than it was yesterday. We're more overbought than we were today than we were yesterday as stochastics. And MACD is flattening out, getting ready to turn higher. And it's a summer. It's June. I mean, it's not officially summer yet, but like June, July, August, this is kind of just a melt-up market. I don't know. I don't fade. Today, this is not a market you fade when it's boring like this, I guess is my point.
I agree. I mean, the only thing that you would do here if you wanted to do it is if you looked at the S&P and said you're at the top of the range, much as we just did with oil, by the way. You look at the top of the range and you say, okay, we're at the top. And because we're at the top, the risk reward is better to be short than it is to be long. If you're wrong quickly and by a little. And if you're right by more. And if you want to do that, you need duration and you need risk-defined exposure and you need small size. Because then you're not, as it were, shorting a boring market because you're not shorting this market today. You're not shorting today's price action. You're looking at the overall structure and you're going, the risk reward is appealing to be on the short side, but I'm going to give myself like 60 days to expiration. I'm going to use verticals, so I'm going to lock in my risk. IV is only 14.7, so it's super cheap to go out there and just buy some puts. I'm going to do it as a vertical, so I'm going to keep my risk firmly contained. The worst case scenario is in like 2 months, this thing has to expire, worthless at a manageable loss. Okay, yeah, fine. I get that. But if you want to say, okay, I'm shorting today's move, yeah, I wouldn't do that. It's a boring day, and you got big event risk. You probably get a little bit of a digestive day tomorrow where nothing happens. Asterisk, Truth Social post risk.
Mm-hmm.
But
we're gonna have to talk about it tomorrow.
Yeah,
because overtime is out of time.
There it is.
Getting the tap from the producers. Don't want to run over again today, but hey, It was a good session. We're done. We'll be back tomorrow, same time, same place, 4 p.m. Eastern, 3 Central, every Monday through Thursday, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Stay tuned, though. Tasty at Night continues next. Ilya's sticking around. He'll be back with Macro Money. See you there.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. TastyTrade. Make your move.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got the need for speed? No problem! At TastyTrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. TastyTrade, make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
We built TastyTrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. TastyTrade.
Another quiet day for U.S. stock markets, but bonds rip after some very eye-catching U.S. economic data suggesting the Federal Reserve is going to have to do a lot more in terms of cutting interest rates just later, not sooner. Fed has, of course, been very resistant to cutting rates as it tries to figure out whether it should prioritize growth or inflation amid the tariff scare. But one central bank that isn't afraid to cut interest rates and is going to almost certainly cut them again in less than 24 hours is the European Central Bank. They are due to make another move, and we're going to try to figure out what it all means for the markets here on Macro Money. I'm Ilya Spivak, head of global macro here at TastyLive. What we're going to do here is take a look at what this means and what this might do as a trading proposition for the markets, because there is a trading proposition seemingly to be had, even as the markets appear to be firmly in agreement, at least about the actual step that the ECB is likely to take next. Here's the expectations range here. Of course, the current ECB deposit rate at 2.25%. We can see that here. And for the June contract of the benchmark ESTR futures, this is Europe's equivalent of Fed funds futures, we can see a 25 basis point cut down to 2% is firmly priced in. So the markets know that this thing is coming, and that is then not really a point of speculative interest. If the move is already on the menu, then there isn't very much to say about what it could mean for speculators, because, of course, it's already been discounted in markets, and so it shouldn't be particularly market moving. The next question, of course, is what will be market moving? And since the move itself is already there, then the real question is what happens next. And we can see here that between what happened in March and now, we've had a meaningful shift lower in the entire curve. So it isn't just that between March and April going into now this meeting in June that we've had a shift in some of the more recent moves. It's that between March and now there's been a considerable dovish adjustment in the entire pathway for the curve. We can see rates now expected to end up much lower than they were even just 3 months ago. And so we'll look at what's going on here because the adjustment here is, needless to say, a critical one. We can see over the course of the remainder of the year, so after this cut, we have the markets priced for at least one more cut on net over the course of the rest of this year and next. And the way you get there, you can see, is 34 basis points in further easing are priced in for this year. That means at least one more 25 basis point cut and a 36% probability of one more thereafter. If you look at then what happens next year, there's a 5 basis point uplift. So there's a slight hawkish bias, very slight, we should point out, to what is expected to occur next year. That 5 basis points accounts for just a meager 20% chance that we are going to have a rate hike next year. So the overall kind of market bias here seems to be in favor of standstill and with quite a meaningful level of conviction. So that's the sort of backdrop against which the markets are going to read the statement from the Governing Council, hear what Christine Lagarde, the president of the ECB, has to say, but then also parse an update of quarterly growth and inflation forecasts. The ECB last updated this in March. That's why the shift since March is so important. And the new update is coming this time. So they're going to have all kinds of fodder to try to see if what they're looking at here, that is one, maybe two cuts this year and nothing next year, if that's still the path forward that makes sense. Here's the latest set of updates and how they compare with what the ECB said in December. We can see here that the outlook for growth in March was downgraded versus December. The outlook for inflation was upgraded, though core inflation, so excluding energy and food, was relatively steady. Probably the most convincing bit here is that inflation has slight bias higher, but it looks like not at the core, and growth has a downside bias at least this year and next based on these projections. Now, the ECB has been very, very clear. When it published these things, it said this includes tariffs as they'd been announced up to that point, and that includes some of the tariffs on China and a little bit of the back and forth with Mexico and Canada at the start of the year. But needless to say, this does absolutely nothing to show what forecasters at the ECB think post-Liberation Day. Liberation Day in the U.S., this, of course, the day that reciprocal tariffs were announced and spooked the markets. None of those things are in this forecast yet. And so there's room for all of that to still appear. Now, as it stands growth-wise, the situation in the Eurozone is certainly not a happy one. We have the composite index here for the PMIs. In fact, these numbers were just updated over the past 24 hours from S&P Global. They released the final set of May's numbers. And we can see they're ever so slightly better than the initial release. The first estimate was that actually the whole of the economy contracted in May. As ever, these PMI numbers are centered around a neutral level of 50. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. That composite number was in contraction mode when the initial estimates came in. It got revised to basically standstill. Nevertheless, both services and manufacturing record a narrow contraction in May. So the economy here is, let's say, at best, idling. Now, against this backdrop, the latest CPI numbers tell us that we're back to the ECB's target. We're down to 1.9%. That's the lowest since this spike low to 1.7%. We can see that was short-lived, and we kind of edged back into the top of the range, largely as this wedge of additional positive contribution to inflation from this category right here, housing, water, electricity, gas, that's energy prices, it started to rebuild here. We can see this was, of course, the shock from the Ukraine war starting. Then there was a statistical adjustment where that rolled over out of the numbers, and we can see that as this normalizes, we rebuilt this back right here. And so we had this spike down to 1.7. We rebuilt it as the numbers kind of evened out, and now we see a more pointed effort to get lower, a more even distribution for these various components of CPI, and perhaps even a more sustainable one. And so this looks like the kind of disinflation that the ECB may want to see. This, of course, is encouraging of rate cuts. And if we look at what bond markets are suggesting, it seems they envision more of the same ahead. These are break-even rates. They're for Germany, which is the benchmark economy for overall Eurozone performance. It's the largest still in the region. And of course, there is no such thing as a collective Eurozone bond as such. In fact, Germany resists the creation of one, even in the current iteration of the government under Friedrich Merz, at least as far as lasting euro bonds are concerned. And so this is our benchmark for sort of figuring out where inflation trends are going, because largely as they go in Germany, so too the region as a whole. And we can see here that after a brief spike in March, again, hold that thought because it is relevant. March is an important inflection point here. These things have started to trend lower. Now, the way you arrive at these is you take the difference between nominal bond yields and real bond yields. And of course, the difference between nominal and real is real extracts inflation out of the calculus. And so if you take the difference there, then you see what kind of an inflation adjustment there is. And so you get the sense of what the bond market's inflation expectations are. So you can see here very clearly that near-term inflation is biased over the course of 7, 8 years or 5 years, sort of the relatively kind of medium-term window and a little bit more. It's biased below the ECB target. And you really only get sort of slightly higher readings, but very much sort of contained as far as ECB objectives are concerned. Here's the 2% target. You're a little bit higher, but nowhere near sort of challenging what the ECB would say is an inflation risk, at least not here. So the bond market seemingly saying we're going to have low inflation. It's trending lower. That makes sense. The economy is weakening. And from that perspective, the ECB might well need to be more dovish, not less. Of course, as we just saw, the outlook is relatively modest. Rate cuts seen happening for the rest of this year, maybe one more after this one, maybe two, but next year, nothing. And the fact that we haven't factored in these tariffs in their wholeness, or at least made the attempt in ECB forecasting, that may set that stage. We can see here that the U.S. runs a trade deficit with Europe. Of course, the president rails about it often enough that we would know that. But we can see here that, indeed, the tariffs might be a disinflationary force for Europe, because if they mean that Europe has to sell less to the US because tariffs undermine demand, well, then you would get a hit to the economy of some magnitude. Obviously, we're still back and forth on what kind of tariffs will happen when, but in so much as the Eurozone exports and derives positive contribution from those exports for its economic growth, and that's its relationship with the US, tariffs, in that they might undermine those exports, they would be something that you could factor into the equation here and say, well, this is going to be a further headwind to growth, and on that basis, lower forecasts for growth, lower forecasts for inflation, and perhaps then get to more rate cuts. That is certainly one way that this might go. However, if we take a look at what's happened so far, and obviously this data is a little bit more timely than what's happening with ECB forecasting. This data is more recent than that forecasting. We see here that actually we have a fairly convincing rise in U.S. imports from Germany here. And of course, the latest numbers look particularly heady, but that doesn't necessarily sort of jump out. We've had similar kind of rises here. It is certainly notable that there's been a push through whatever congestion there was here. So maybe there's a degree of acceleration, and maybe this is tariff front running, one might say, much as we've seen with relationships elsewhere. Maybe this is just a way to kind of consider that what's going on here is the markets attempting to front run what may be greater tariffs, and so there's more stocking of inventories. But if we take a look at how this has worked month to month, I mean, you can clearly see that in the case of China. So in January, you see this massive surge in imports from China, and since then things have kind of cooled off because the front running was so dramatic. You don't really see that in exactly the same way in Germany. We'll of course have to watch it and see, but you get this sort of jump in January, then things cool off considerably in February, and you have a similar pop to January's in March. So it doesn't look like you're sort of jumping out of the window, as it were, on the volatility in these statistics the same way, for example, that you would be in Mexico, where you have a giant surge, the same way as Canada, where you have a giant surge. So all of these kind of usual suspects for the trade war so far, the members of the USMCA and China, you get wild swings in the double digits. You don't really get that in Europe. So it's unclear really how much this front running matters. But if, in fact, the bond market is already telling you that the way that inflation is going to trend is lower, and that's been happening here for a while, well, then chances are you've priced in a degree of disruption from the tariffs already. You've accounted for whatever this front running might imply would happen as a cool off downwind. And so the markets are still only priced for this modest setting. So it doesn't really seem like the risk here is going to be that great, surprise-wise, speculative, unhinging-wise, from a ECB that meaningfully revises down growth and then inflation expectations. Rather, the risk seems to be on the other side, because that's what the markets ostensibly aren't readily priced for. And that comes by way of Eurozone defense spending. Of course, much was made in March. Again, remember this reference point. We were up here in March. We're in a very different world now. And if we look at what happened in March with these inflation expectations, they surged right here. Things have cooled off since. They've cooled off since because growth has cooled off since. See that right here. But what happened in March still happened. That was this giant effort by the Eurozone and the EU more broadly to rearm as it worries about Russian aggression and the, let us say, diminished reliability, at least in their mind, of the U.S. security blanket. Now, there's a number of these things that are still in the works, in particular this one right here. But this part, this is already done. As of the end of May, as a matter of fact, the 27th was when the authorities approved this part of the plan. And so we are looking at perhaps a meaningful fiscal boost for Europe next year that is likely to drive up growth, drive up inflation, and perhaps boost inflation expectations from their current lows. And so where this, of course, becomes exceedingly interesting is the possibility that it isn't so much that the markets are priced wrong for what is likely to happen because they're not dovish enough. It is perhaps that the markets are wrong because they're not priced hawkish enough. And to the extent that the ECB decides to include forecasting for defense spending as a boost to growth in its math, these expectations might actually surprise not in the dovish direction, but the other way. And they wouldn't really have to surprise very much because, indeed, you wouldn't really have to do a whole lot with how much is already priced in, which is, again, modest. And so with that in mind, you'd need just a little bit. Now, there has been some back and forth as to whether the authorities there can get it done. We just heard earlier today that Denmark has decided that they're out of the so-called fiscal four, or frugal four, excuse me, that was trying to push back against more spending. They're minded on rearmament. We see sort of similar vibes out of Germany, which before was on the relatively frugal side of things. And we're reminded of how this tends to work in the Eurozone. This is a model based on the optimum currency area theory that was developed by Robert Mundell that explains how a country chooses to integrate deeper, chooses more currency union, more European Union in this context versus less. And you can see here, it's where the costs are less than the benefits to greater integration. And typically this is done in terms of saying, well, if you unify everybody under one central bank and the economies are already very close together, well, then the benefits from more frictionless trade outweigh the costs of giving up independence over your monetary policy. And so benefits outweigh costs. And over here, if you can make this calculus make sense, that's where a country might be pushed, or groups of countries might be pushed to greater integration. But what we find is that when you consider defense, countries will accept a lower degree of integration if there is a defense shock to this model. Because obviously, if an economy can prevent war, or at least taking greater steps to prevent war by spending more on defense, well, preventing your industrial capacity, your economic capacity from being destroyed by missiles, that's an economic good. That's an economic benefit. And so when you get that kind of a shock to the benefits part of this model, such that the benefits part grows because no war is better than war from an economic perspective, you see that the effect of doing this is a less demanding thing on integration. You will accept less integration as a consequence. You will be more inclined to join such efforts, which starts to explain why countries are jettisoning their resistance and signing up, much as Denmark now has. If you get then the likelihood that this passes in all of its 800 billion euro glory, and the ECB has to account for that, well, then their forecasts may indeed be more hawkish, and the euro may well push through this resistance just below the 115 mark, and then these highs at 116 are but a stone's throw away. If you breach those, well, then the next big leg in this big euro rise from lows near 102, then it continues. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime. My show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. I'll be back in just 30 minutes' time with Victor Jones for the Price of Truth. Back with Chris for Futures Power Hour on Friday. With Victor and Tom for First Call on Sunday. Writing for the News and Insights portion of tastylive.com. Commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. Like and subscribe if you're watching on YouTube. Macro Money's back tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. TastyTrade, make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
TastyLive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. TastyTrade, make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Welcome back to the Tasty Crypto Show. I'm Dan Cecilia, and with me today is my co-host, Shelly Van Witzenberg. How are you, Shelly?
Whoa, you full named me.
I did full name you.
Hello, I am well, thank you. How are you?
I'm doing all right. We got a great show today. We're filling in for Ryan, but we got a lot going on in the market. We're going to be tailing some of Ryan's trades, which are now available in the platform, and we'll be going over some of the performance dashboards that we put together in the newsletter. So, yeah, how are you doing?
Cold.
Yeah?
Office winter has kicked in now that it's nice outside. So yeah, we have blankets at our desks. It's silly. I'm excited to be here. What is up, chat? See some friends in there. Do we have a question for the chat?
Yes, we do. What is your favorite rainy day activity?
Let's hear it, chat. What are we doing on the rainy days? I love my Kindle. So when it's raining outside, I feel like it's just an excuse to do nothing physically and just read all day.
What about singing in the rain?
No, there will be none of that.
You're not a big singing in the rain type of person?
No.
Okay.
You?
No.
Okay.
I can't sing to begin with, so.
Yeah, that's the thing. If I could
rain
sing,
or
maybe.
shine, I can't.
Right.
Yeah.
What is your rainy day activity?
Trade crypto.
Of course. I mean, there's always that.
Sit in my office and trade crypto.
What are we doing on nice days then? If just trading crypto all day,
Trading
every
crypto.
day?
Definitely.
Okay. Let's see. In chat, wet juice
I mean, it
box.
says sleeping.
Sleeping. That's a good one. Wet juice box on X says, if it's not pouring, I'll go for walks during the sprinkle. Love it.
Okay.
I like that.
Wet Juice Box, who is one of our followers, he's deep in the trenches too. Paying attention to meme coins specifically. So, Juice Box, if you have any tips, send them our way because we're always looking for
hot alpha,
new trades, alpha. Yeah. Juice Box is convinced that he has alpha from the trenches. So,
let's hear it.
Yeah.
Let's see. JDD on YouTube is saying, finding all the leaks in my roof.
Yeah.
Pots and pans out there collecting the drips. So, what are we doing today? We're going to get into.
Well, we're going to go over some of the performance dashboards that we put together in the Wednesday newsletter went out this morning, just to give an update on where the market's at. And then we got an update on the platform. Specifically, we have follow feed enabled for crypto trades. So Ryan has been placing some trades recently based on some of the stuff we do as far as like ranges and signals that he gets. So he's got a couple of trades that he put on, and I think we're going to tail them, I believe. At least I am.
I already did.
Yeah. Shelly front ran me, so.
Wet Juice Box is saying buy OKLO and DLLM Fartcoin. LMM Farcoin. So
Okay, so
there's our trench alpha.
I did the Oclo trade and made a ton of. I did follow the Oclo trade.
I did not.
Yeah.
Although I time-stamped when we brought that up, like in our text messages, 'cause I always have my notepad on my phone open, and I put in there, OKLO, look into it. And so time-stamped was like May 16th. And if you look at the chart, it's like, damn.
It's like a day before it ran up. Yeah.
Like, man, that would have been a good one. So yeah, go ahead, pull it up.
Oclo?
Yeah.
Yeah, can we get our, yeah, there we go. So it's a 1 week chart. Let me clear this. Go to a day.
Mid-May. Oh, here we go. We were right before, not at the bottom, but pretty close to before that pump.
That's insane.
Mm-hmm.
514. Okay. Yeah, right here.
Mm-hmm.
Look at this gap up. Yeah, the other thing I did with that is I think I started buying early May, and then I was selling covered calls against it at the top because it was so volatile that the premium on that was insane.
Mm-hmm.
So made a pretty decent return there. It was crypto-like price movement for sure.
Yeah. And for people who aren't familiar with this, what is Oclo?
It's a nuclear reactor development company.
Mm-hmm.
Has a contract with the U.S. Department of Energy. They don't have a product and they don't have revenue, but they're building these more efficient nuclear reactors. And apparently the delivery date for them is not till 2027. So this is just pure speculation, which is trades like a crypto. So, that's why we're covering.
Yeah.
But more specifically in crypto, let's take a look at some of the performance dashboards because I think we got to cover here what's going on in the market.
Mm-hmm.
So, taking a look, Bitcoin off the recent highs of last week, we're back down to like the 105 range, 105,000 price range, kind of just consolidating around there. ETH, I think, has a bullish look. It's up 17% the last 3 months, 46% in the last month. ETH's come roaring back. There's some catalysts there for ETH as a trade against BTC for sure. One being that the Ethereum Foundation has finally got its stuff together and has rooted out all the waste and is now core focus has been on supporting ETH, not dumping it, doing a lot more in DeFi, rallying around its core values. So I think that's rather bullish, just because there wasn't a lot of direction the last couple of years from like the ETH Development Foundation. Another one is that following the back of these Bitcoin treasury trades, ETH, there's going to be a vehicle now on, publicly traded stock vehicle to acquire ETH and do the treasury, trade.
Mm-hmm.
So I think that's a bid for ETH. And I just think it's been kind of beaten down and still a lot going on over there. So definitely taking a look at ETH, see if this momentum continues. Solana, a little less so. I think kind of has consolidated in this 150 range. A lot of the meme coins hype has died down, not some like almost too saturated.
Mm-hmm.
So it's kind of like people don't really,
Needs a new narrative.
Needs a new narrative, essentially, yeah. And then XRP, Ripple, always an interesting trade, I think, because you got Ripple USD, which is a stable coin backed by Ripple, which I think is pretty interesting.
Mm-hmm.
That the collateral's backed by Ripple itself, and then just ton of development by Ripple too. So let's see what else we got here.
Look at that green for Aave.
Aave, yeah. So this is specifically one that Ryan is trading.
Mm-hmm.
I think he put this trade on early this week,
Mm-hmm.
and 60% up move in a month. So definitely bullish there.
Comp is interesting.
Yeah. DeFi, it's like the DeFi narrative. Aave, Compound, stuff that makes money. Both of them are revenue generating protocols. So always good to go back to fundamentals. So yeah, I think there's a lot of ideas here. Here's the volatility table. Weekly
Quick question in chat from Wet Juice Box. Theory, trenches aren't oversaturated. There's simply a lack of participants currently. Okay. And then he's got a question. What is Aave's end goal?
I don't know what Aave's end goal is, but I believe that Aave is a very profitable DeFi protocol and is basically a core primitive for borrow lending, capital efficiency, and just generally supporting the broader DeFi ecosystem. So, if people want to accumulate and just place a bet on protocols that have revenue, that's Aave. If people want to speculate and try and be early to things, then I agree with Juicebox. Like there's definitely some alpha to be had in being in the trenches and trying to trade these meme coin narratives. But I think for what I look at, I'm kind of leaning more toward betting on DeFi, revenue generating DeFi protocols. Aave, Compound. You can even look at Jupiter on Solana. I know Juicebox is a big Solana guy. I got another chat from JDD. So I look at tokenterminal.com.
The question is, how do you analyze fundamentals for crypto?
Yeah.
Where do you research that?
So I go to DeFi Llama. That's number one. That has basically your dashboard for all of DeFi and crypto. You can track revenue, you can track stable coins, which is an indicator of liquidity, liquidity. I've shown this before, but this green line is basically how much stable coins, which are US dollars on chain, right? That's liquidity. That's what's flowing in to the ecosystem. Usually a bullish signal for activity for, trading, DeFi. Token terminal is another one which gets into more revenue generating stuff. Really there's a ton of platforms. The other one is Messari. So Messari is a crypto research platform. Does a really good job of tracking protocols, tracking activity, news, narrative. But those are the top three. I personally think for like DeFi specific, DeFi Llama is the one. I think, you can track fees and revenues down here.
We've got a non-believer in chat.
It's all speculation.
Yeah.
So even traditional finance, it's all speculation.
Mm-hmm.
But despite popular belief, there are protocols that make revenue, that are profitable, that support billions of dollars of liquidity. You can track it. I dropped the links in the chat. If you want to stick your head in the sand and, there's other places, obviously, so it's fine.
So back to those dashboards.
Yeah. So I want to kind of talk about the expected move here and then get into our follow trade, because our follow feed for crypto is now live on the platform. We can take a look and see what Ryan's trades Ryan's placing. Bitcoin, I think it's consolidating in like the 105,000 to 100,000 range. ETH, probably, I think there's more upside on ETH. That's just me personally, not advice. Just, I think there's a lot of bullish momentum backing ETH. I think it's been beaten down for a while. And, I think it'll catch a bid here over the next couple months. So definitely pay attention to that. And Solana's probably, I think that narrative's ran out a little bit. So we'll see what catches new there. I think Bitcoin Fi and like some of these synthetic Bitcoin products are flowing into Solana. So we'll see what happens with that. But back to our original thought, we have follow feed now on the platform. So
let's clarify. Follow feed is not new.
no.
Ryan being followable is a new addition. And so, yeah, you just simply go, if you have your TastyTrade account, you go to the trading tab, you go to the follow feed on the left sidebar, click Ryan, and you can see his recent trades, which is the alpha. Because look at the Ave. If you were following and duplicating what Ryan is doing, he got in at 251, and right now it's 265.
Yeah.
Mm-hmm. Well done, Ryan.
Good trade, yeah.
Yeah.
So I think we said that he's going to be placing a couple trades a week. So I would be paying attention to that because he's the guy, he has the signals. I'm not the guy, he's the guy. So.
Well, and he did say it's an us thing. It's the Tasty Crypto, we're all placing these trades. Ryan's the big brain of the group.
Yeah,
so
exactly.
Let's just give him, the majority of mind share on these moves. But yeah, awesome resource to have at your disposal. You can follow, and you can filter by crypto and see what all of the traders are trading. I don't know, Dan, if you can show that really quickly to filter by crypto. I think it's, if you go by strategy, I think it's in there. Yeah, crypto.
Okay, cool.
And then reset who you're following. Like just put it to everybody, and you can see that Tom is trading, and so cool to follow.
Yeah,
to look at.
We'll be giving you updates in our weekly newsletters too about what trades are being placed and what we're looking at. I think trying to get more actionable trades on and just stuff you can follow and easily tail. Mm-hmm. So yeah, I think number one, that Aave USD trade by Ryan, good trade. I think he's also talking about putting Compound on. So Compound was something that is on the platform. It's another DeFi borrow lend protocol, makes money, and has stable coins backing it as well. So definitely something to pay attention to. Mm-hmm. Yeah. Let's see.
And we just put out a couple of new how-to real quick snippet videos on the Tasty Crypto YouTube channel because we're trying to answer some questions that we get in our support tickets with videos.
Right.
And so there's a new playlist evolving over there. So if you're not subscribed to Tasty Crypto on YouTube, please go join us over there.
Yeah, and I think like in the chat, I see Theta Trader, great point. It is a space that's full of vaporware. It is a space that necessarily, hard to track fundamentals, or at first glance, it's hard to track fundamentals. But that's why it's such a great trading venue. It's all volatility. You mean to tell me you don't want to trade volatile assets? Like, what are you going to do? Like, you're talking about 20, 30% moves in a day. It's fun to trade, right? So, we are focusing on educational videos to help demystify some of this stuff. So we'll be posting more YouTube videos to the Tasty Crypto YouTube that are just more educational, more how do you take advantage of some of this stuff? How do you trade it? How do you fund your account with crypto? Some of that stuff. So hopefully they help. I think definitely something we'll be focusing on long term.
Absolutely. Theta Trader saying, I'll look at fundamentals after Fartcoin and Shiba die off.
You don't think there's a fundamental behind internet culture? I do.
There's an argument there.
Fartcoin, Shiba Inu, Doge, memes have value.
Mm-hmm. Absolutely. Culture. Culture is a powerful, human behavior.
Yeah.
Is a fundamental. He says that, yes, that was my point. Trade it because it's a risk asset you can trade, not because you think there's some fundamental case for most of these.
Yeah, of course. I mean, totally agree with you. Great point. But I am saying that if you have like a traditional, whatever, discounted cash flow or whatever fundamental analysis outlook, there are protocols, applications out there that do generate significant revenue for the space compared relative to the space, right? I'm not talking about NVIDIA or Apple trillion-dollar companies, but if you track over the last couple of years, I think, there's a ton of projects that make revenue. But to your point, maybe not as fun to trade as a Fartcoin or a Shiba Inu, right? Definitely a risk-on asset. Definitely when, 0% interest rates, money printing, debt palooza, an asset you want to be in for sure. I think you can definitely argue that you're not trading it because of fundamentals, right? Maybe you buy and hold some of these projects thinking that down the line fee switch will turn on and, it's...
CK calls the crypto charts the purest expression of human sentiment because they aren't manipulated like most other equity markets. I see a 12-step program for crypto traders in the future, just like Gamblers Anonymous.
I like that. That's good.
Yeah.
That's a good. I like that. Crypto Traders Anonymous.
Yeah. CTA.
No, but in all seriousness, I think there's some truth to what you guys are saying, right? Like, I think more than anything, the attention that's gathered in the space comes during these huge volatility spikes or around things that are very bizarre, like Fartcoin. Why does that have value? It has value because other people think it has value, and internet culture is strong.
Do you want to show them Cookie.fun just to illustrate Mindshare?
Yeah, we did this on our other show, Tasty Crypto Show, or
Beans.
Tasty Crypto YouTube, Beans. There's actually a way to, it doesn't look like I can, let's see, Cookie. There it is. So a lot of things in the space, going back to sentiment, can be tracked. So there's this tool, Cookie.fun. It tracks Twitter sentiment and general, vibes. So you can see over the last year or 24 hours, but I can go year to date, what projects have had positive sentiment, which have had bad sentiment. So obviously Bitcoin, it's the king, Ripple, Tron, Hype. These are projects that have been in, trending positively on X, YouTube, other platforms. And, something you can act off of, shows price, shows Mindshare, which, again, Mindshare is just attention, right? It's what people are talking about. So I think...
It's a good way to predict behavior.
Yes.
If popularity or, conversation is a predecessor to purchasing.
Right.
Yeah.
And I clicked into Aave. Aave is obviously a token we were talking about. We support. Ryan made a great trade on. It gives you a lot of information around major voices talking about it, and then sort of tracks sentiment and Mindshare as, over certain time periods. So I think it's very helpful because, to your point, chat, a lot of this is human sentiment. A lot of this is Mindshare, right? I'm a little jaded. Theta Trader says I'm a little jaded because I've had these arguments with people about the value of syrup pools and cake, for instance. The sentiment goes, and so does your investment. Skill issue? I don't know.
You got to know when to get out.
Yeah.
Just like anything. We are out of time, but before we go, I did want to shameless plug our Beans episode this Friday. We have Dr. Drip. If you can pull the link to the tweet just to show the graphic so people can see that this Friday, 9 a.m. Central, 7 a.m. Pacific, Dr. Drip is going to be on the show with us. He's an incredible trader, builder, early adopter of all things crypto and Web3.
Yeah.
It's going to be a really cool
Somebody who's
episode.
deep in, knows trading,
Yeah.
knows what's hot, knows.
Maybe in like the deepest trenches. Like,
Yes.
Yeah. So it'll be an interesting conversation. Yeah. So thank you, chat, for being here. Thank you to everybody that's watching on X.
Yeah, and real quick, Chad, if you ever want to talk to us, I love the banter. I totally agree with you. We want to help you at the end of the day. I know that there's a lot of questions around this. Email us, email me, Shelly, support@tastycrypto.com. We'll answer your questions. I'll get on a call with you and chat with you about anything. Mm-hmm. So we want to help you and love hearing, the
good,
banter.
the bad, the ugly, all of it.
So appreciate it. I'm Dan.
I'm Shelly.
Peace.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at TastyLive.
If you missed the live show, here's our cherry on top weekly recap. How was Nashville? Did you go hiking? You were going to do a bike, you were going to go fishing, and you were going to visit an apiary.
I spent the most time of anything lying in a mineral pool.
Oh, gross.
There was a guy running the fishing area, whatever. He hands me a
fishing area.
He hands me a fishing pole, and he goes, here, you're all set up. He goes, want me to show you how to use it? I go, I don't need any help. I got this. I get down there. I do this. The whole thing got tangled up.
Mom, phone. I need help. Get the guy over here.
Wave the guy down and go, hey, need a little help. He goes, let me get you another rod. Now let me show you how to do it. I made the obligatory stop at Buc-ee's.
Oh, how was Buc-ee's?
It's 6 hours away from here. I'm talking it up the whole way down, telling Corinne this is, life-changing.
Did you go into the bathroom?
No.
You didn't go into the bathroom. You can go to the dirty shell down the street, or you can go to this beautiful, clean mecca of a place. Relieve yourself.
I'm not sure what place you were looking at, but I almost got run over in a stampede at that place.
Oh, you gotta move quickly.
I like how you're clutching your pearls.
It is not a beautiful mecca. Okay.
It's a beautiful mecca. When you're on the road for
it is an absolute up for grabs show with 1,000 people running around grabbing stuff, eating stuff.
That is like crack for me.
There's like barbecue sauce flying all over the place. That place is not a beautiful mecca of anything.
Who do you think the best dressed on-air personality is of all the Tasty people?
I probably guess I got to go Ilya.
Ryan Grace, easily.
Oh, yeah, Ryan Grace, 100%. He's very preppy looking. It doesn't do anything for me.
Oh, who's the guy? Who's God on the research team? He's got to be in that top 3 too.
Oh, Gad? Yeah, Gad's up there. Yeah.
He throws on a leather jacket, man. He comes in there looking like Eddie Murphy off Raw or something like that.
Oh, yeah,
He's got incredible confidence, and good on him.
So, Dr. Jim, throw him out. He's horrible. Jim wears children's clothes. It's easy for him to dress.
This is easy.
Like Granimals. Yeah. You can throw me outside enough. Don't worry about it. Yeah. Oh, I'm throwing you out because you got old man Italian clothes. Yeah, I don't. That doesn't do it for me.
Tony looks like if you saw him at a bar, he'll offer to pay your cell phone bill.
Get the full scoop by checking out the archives at tastylive.com.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new TastyTrade and TastyLive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
TastyLive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
All right, Mike, we have earnings coming up next week in a time of high volatility and a lot of uncertainty. What advice would you give to traders in terms of attacking earnings in a time like this?
It's a great question. I think every so often we have this pocket of time where everyone is talking about the same thing. Or when Bitcoin and crypto came out, we had Radio Shack talking about it. We had a coffee roasting company talking about it. Now I think you're going to hear a lot of tariff implications. So there's going to be a lot more heightened implied volatility in that weekly cycle where earnings are. Just doing your due diligence, have an understanding of what might impact the company you're trying to trade and how potential tariffs might impact that.
And what would you say your earnings checklist is? What criteria do you look for in a company if you're going to try to make a play on earnings?
You have to be really small. Even when you have a super strong assumption, you can be really wrong with earnings. The options market's closed when the earnings come out. You can't adjust unless you're hedging with stock, which I would say maybe size down more than you normally would. Stay defined risk. Just because a company reports good earnings numbers doesn't mean the stock is going to go up. Just be prepared for a lot of uncertainty.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the TastyLive core strategies. All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
We built TastyTrade's web platform for today's click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. TastyTrade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, Backwardation is the opposite, so those front month futures contracts are trading richer than the corresponding back month contracts.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid. So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Look who's back testing. TastyTrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at TastyTrade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you.
Are we sure it's only the 4th of June?
Mate, I've told you 3 times now.
I just paid my rent early.
Oh, outrageous. The landlord.
Oh, I thought I was paying on time this morning, 5th of June. I was all like proud of myself. They're going to get a shock. They're going to send it back thinking I've made a mistake. Good morning, everybody. It's Trade Live with IG. It is apparently the 4th of June. And a massive, outrageous, disgusting congressional spending bill that is a disgusting abomination.
Yeah.
Shame on you who voted for it.
Well, I did not vote for it. There's no need to point fingers, mate. But I am very happy about this because I have a bet on with my friend in the Stockholm office that Tesla's going to hit 150 by 21st of June.